Happy morning to all of you. Welcome to today's one-day seminar in GST on real estate RERA. May I now request the Program Director, CA Vineet Yagarajan, to accompany Advocate G. Natarajan sir and our Chief Guest, Sri S. Selvakumar sir, to the dais, please. Also requesting our session speaker, Advocate E. Suhal Ahmed, to join on the dais, please. Name board. Since it's a very limited audience, those who are seated on the back can occupy the front rows, please, so that it will be a more interactive session, please. Those who are seated on the back, please come forward. We will wait for you to occupy the front rows. Thank you, sir. We will start today's proceedings with the invocation of ICAI motor song as a mark of respect to our mother and state. Program coordinator, to formally welcome the gathering through his welcome address and also brief about this one-day seminar in GST on real estate RERA.
Very good morning to one and all. Dignitaries on the dais, Sri Selvakumar sir, and our Advocate Natarajan sir, and my associate Suhail Ahmed Advocate sir, and all the members of the profession. Very good morning to one and all. Today we are all here to discuss and to deliberate on the subject which is relevant to the real estate. In the last month, Panaraj sir, SIRC chairman, when I met in Bangalore, he did mention we will have one session related to the real estate, especially to the RERA. I remember that we had a similar session on RERA in 2017 or 18 pre-COVID, and that was a very initial stages of this act which was implemented. And post-COVID, this is the first session on the real estate itself. Physically, which is happening, of course, virtual various sessions happen. Over the period, the real estate has taken a bigger challenges in terms of the various statutory aspects in and around, whether it may be a GST, whether it may be income tax or the laws related to the real estate, and also change of scenarios of the buyers and also the sellers. Initially, the real estate used to be for a local, and as the cities or the cities which are growing or urbanization, migration of the people from places to places, which making very important to create the trust among the community itself, industry itself, real estate industry itself. So with this background, Panara sir was mentioned that we will have one session related to the real estate, including RERA. So I felt it rather only a RERA will bring one more aspect to RERA, which is of the GST, because which is also very important and very relevant for the real estate. And probably this is the only time which I am experiencing the hall is not even half full. Whenever we have a session on the real estate where RERA or GST, which is generally the hall would be full, and also registrations are closed at least 2 days before, wherever we have the sessions, whether in Bangalore or in Ahmedabad or Pune or Kerala. Okay, but however Chennai people or Chennai professionals felt it, okay, they are already aware of it, they know better than the speakers, so they are not here. But nonetheless, whoever you are here, you are lucky enough to here to listen to the stalwarts of the subject, Natarajan sir, and also we have Selva Kumar sir, he is the part of the Chennai Tamil Nadu RERA, who is there since inception of the RERA itself. Like if somebody who knows about RERA in Tamil Nadu, none other than Selva Kumar sir. So he is with us today to explain the intricacies and also practice related to the RERA, and also his advice will take us along in terms of making our practice also, and also when we advise to the clients. So Selva Kumar sir is, I'll just introduce the Selva Kumar sir in a very brief manner. When I requested to share about his profile, sir has sent 2.5 lines about his profile to introduce to the members. Okay. That means to say he has more to say about the subject rather than himself. Sir is a master degree in a town and country planning, School of Architectural and Planning, Anna University, Chennai, 1981. Joined as assistant planner in CMDA and retired as a chief planner in the year 2015. Post-retirement, the government has posted him as the additional director, Tamil Nadu RERA, government of Tamil Nadu. So these are all he has given as his profile. So sir will explain about the Tamil Nadu RERA to all of us, and in between if you have any clarification, any doubts relating to the RERA, we can ask. So with this I'll present Selva Kumar sir to you before this August audience. Okay, then we'll proceed for the first session, which is the first session.
First session after Selva Kumar sir,
Natarajan sir. Okay. Sir, over to you to talk about the RERA, related to RERA. Post your session, we'll take up the GST and detailed aspects of the real estate in the second, sir. Thank you. Over to Selva Kumar sir.
Before we hand over the proceedings to our chief guest, Selva Kumar sir, may now request the dignitaries on the dais to jointly present a shawl to our chief guest, Sri S. Selva Kumar. As said by Vinay sir, Selva Kumar is a master degree holder in Town and Country Planning, School of Architecture and Planning from Anna University, Chennai in the year 1981. Joined as additional planner in CMDA and retired as chief planner in the year 2015. Post-retirement, the government has posted him as additional director, T and RERA, Government of Tamil Nadu. A big round of applause for our Selva Kumar sir. So you can also go. So you can go the second stand. So you can join the sir.
Important photographer.
Over to Selva Kumar sir. Slide change.
Good morning to all. Before I start, I would like to congratulate the Institute for having arranged this important meeting. I convey my best wishes. I will make a brief presentation, PowerPoint presentation for 15 minutes or 20. Then we will make a question and answers. These are some of the things. This is not much. This is need for that. I don't want to tell about need. It is already there under implementation. Then this Real Estate Regulation Development Act. It is a central act enacted by the Parliament in the year March 2016 under the concurrent list. That's the central list, state list, concurrent list. Since it is a land is a state subject, so the Parliament has enacted under the concurrent list. Though it is notified during March 2016, all sections have been given effect only from May 2017. That means this RERA Act for the entire country came into force from 1/5/2017. This is the objectives. Nokkangal Tamil. This is first is regulation and promotion of real estate. Real estate means sale of plots, buildings, whether it is commercial or residential. This is real estate. Then protect the interest of the buyers. Next is to regulate the transaction of the real estate projects. Next, to establish an adjudicating. Adjudicating means ensuring the complaints filed, whether it's a promoter or a home buyer. Then appellate tribunal, any decision, orders passed by the authority, then the buyer they can file a appeal before the appellate tribunal headed by a former Chief Justice of Chennai High Court. Then to implement the act, our Tamil Nadu government has notified the rule during June 2017, followed by the regulations. Next, while notifying the rule, they have only established an interim regulatory authority. The permanent authority was established during February 2019, headed by Mr. Gnana Desikan, former Chief Secretary to Government, then one advocate, one Chief Engineer retired, and one DGP retired, Mr. Sunil Kumar. It comprises of 3 members and 1 chairperson. This is our authority. This authority has jurisdiction for Tamil Nadu as well as Andaman Nicobar Islands. Next, the major functions. Number 1 is registration of all real estate projects. Number 2, real estate agents. Again, this agent is a new concept introduced in our country. Third is adjudication of complaints. Then salient features, Mukyamana Amsangal. Number 1, you should not advertise, sell, book or in any manner without registering the real estate project with Tamil Nadu RERA. You would have seen this advertisement showing the RERA registration number. Next is registration is mandatory for plots, buildings which is meant for sale. Sale means either it is freehold or leasehold. Whether freehold or leasehold. This is sale. Suppose if you are owning for your own purpose, then it is not required to register with the Tamil Nadu RERA. Then there is a threshold limit for registration of real estate project. If it exceeds 500 square meters or 8 dwelling units, that is this or that. Suppose if a project is 400 square meters and dwelling units is 10, then it has to be registered. On the other side, if it is 600 square meters and if it is 2 dwelling units, then it has to be registered. This condition either this or that. This is the threshold limit, again which is meant for sale. Not if you are using for own purpose, like education institutions, hospitals or any commercial building or residential building. If you are using for your own purpose, then it is not required to register with RERA. Then it is impact. It is not only beneficial to the home buyers but also for the promoters. Again, it is an exclusive authority. Prior to RERA, they used to file complaints only with the consumer forums, but consumer forum they deal with so many other aspects. But this RERA deals only exclusively created for the real estate sector. Then promoter, that's a definition given for promoter. It includes both government agencies also. That means Tamil Nadu Housing Board or CMDA or Tamil Nadu Urban Habitat Development, that is Slum Clearance Board. If they are selling anything for sale, they have to register with RERA and they are also registering with RERA. Next, no disclaimer should be given. Then promoter shall furnish information relating to approved and other information is entitled. Then they shall inform the Allottee the stage-wise schedule of completion. That is, they used to register the construction agreement. In the construction agreement, they have to mention the stage-wise completion along with the specification of the building. This already told, while issuing advertisement, they have to prominently mention the RERA registration number in the advertisement. Then shall not accept more than 10% of the booking amount. If they want to get more than 10%, then this construction agreement should be registered. Then agreement for sale and construction, there is a format prescribed in our rules. Only they have to follow the same agreement for sale and agreement construction agreement. This is part of the rules notified. Then building shall be completed as per the plan approved by the planning authority. Then shall be completed as per the specifications. Then shall complete the building according to the terms of agreement. Then all common facilities and amenities should be completed as per the plan shown in the plan as well as the committed in the construction agreement. Then any addition and alteration within the flat, it can be done with the concurrence of that individual home buyer. But if there is any revision in the approved plan by changing the building number of floors, then it has to get the consent of the 2/3 of the Allottee. Before it was not there. These builders, they used to revise the plan without the knowledge concurrence of the home buyers. Now we need a 2/3 consent of the Allottees for any major revision and alteration in the approved plan. Then again, this promoter, they cannot change the ownership without the 2/3 consent of the Allottees. Promoter, again, there's a major thing, is a structural liability. Normally, used prior to RERA, they will give only 1 year guarantee period. Now, in the RERA, there's a 5 years structural liability period. That is, 5 years means from the date of handing over to the Allottee. It is not the date of completion of the building, if the date to the Allottee. Then there's a new concept introduced in RERA, that is carpet area. So all sale should be made only based on the carpet area. Carpet area means excluding these external walls, then balcony, service veranda, but including the internal partition walls. There is a difference between the carpet area from our Tamil Nadu Combined Development Building Rules and our RERA. Tamil Nadu Combined Development Rules tells that carpet area is a plinth. On all car parking area, they calculate based on the plinth. But in RERA, carpet area, this is definition. They have already requested the government to amend the Tamil Nadu Combined Development Rules on par with the RERA because it is a central act. So that people will not get confused what is carpet area, whether we have to follow the Combined Development Rules or the RERA rules. This is the picture showing the carpet area, this terrace, then balcony, service veranda, these are all excluded. only including the partition walls will be calculated for the purpose of carpet area. So sale should be made only based on the carpet area. That doesn't mean promoter should not include all the proportionate common area. They have to, because they should also spend, it will be included in the carpet area and the cost will be worked out based on the carpet area. These are the checklists available on our website, how to file an application with RERA. So first is declaration, then promoter should be the landowner. Then if it is a joint development and if the general power of attorney is given to the builder, then he should have a sale rights. Not but filing application with CMDA, corporation or DTCP, GPA is enough if it is only making an application. But in RERA, we insist that GPA holder should have a sale power. Suppose there is a 10,000 square feet, he is giving 5,000 square feet GPA, that UDS of the flats he is sharing, it should tally with the GPA extent. You cannot enjoy more than whatever the GPA given by the landowner. So another thing, suppose only the builder wants his share of flats to be registered, then also we are giving the only builder share. Suppose landowners say we don't want to sell, we want to keep it for ourselves, then we don't insist the landowners to apply for RERA registration. But anything structured, other thing, only he will held responsible, that is the builder. Then comes the joint development shall be furnished, mentioning the share of flats along with the UDS. This UDS should tally with the GPA given to him. Then time of completion, it will be declared by the promoter in form B. Whatever date he is prescribing, that will be mentioned in the B form, provided it should not exceed the planning permit validity given by the planning authorities. Then completion shall not be beyond the planning permission validity, then valid planning permission building permit, then carpet area statement. These are the things he has to declare. See, for each and every registration, you will find the carpet area statement hosted in your website. For suppose there is 1,000 flats for each flat, carpet area statement that will come next. Another thing is this is a very important as part of these chartered accountants. For each and every project, they have to open an exclusive bank account in any scheduled bank. Then no objection certificate from competent authorities, structural certificate, other documents as per checklist available. Then this is the carpet area statement. We insist. This is the block, floor, flat number, RERA carpet area, exclusive balcony, exclusive veranda, proportionate common area, then total flat area, then UDS for each and individual flat area, then car parking as per the plan approved by the competent authority, whether it is open or covered. So they have to declare for each and every flat. So public can go and check up. Suppose we are going to buy one flat in first floor, we can ascertain what is the carpet area, what is the UDS he is getting, what is the car parking, whether he is getting open or covered. Then what is the proportionate common area. Then if it is developed in phase wise, suppose there are 10 blocks. Out of 10 blocks, they want to market sell only 5 blocks. They can register only the 5 blocks. It is not required to register all the blocks. But you should tell the consumer that I am going to develop all these in a phased manner. Suppose common amenity building is given in the last block, he has to tell this common amenities I am providing in the last phase, which will be provided on the completion of the building. Then registration valid for a specific period that I already informed. Then registration will be given for individual flat. Then this renewal comes. Suppose if he declares on date and he is not in a position to complete that building in such big period, then he has to apply for renewal of registration. Then we have to see whether he has produced this quarterly progress report. Then verifiable timeline. That is, how suppose he is asking 1 more year, how he is going to finish in 1 year. Every month he has to give his then we'll give the renewal of registration, and with a condition that prejudice, without prejudice to the rights of the buyer. This means, suppose if he is declaring on date and he is coming for a renewal, any compensation claims by the home buyer, it will be only based on the date first he has given the construction agreement. It is nothing to do with the renewal of registration, because these builders, they are telling RERA has extended the registration, so I am also extending your data, which is not so. Any compensation comes, it will be calculated only the date which he has first declared in his construction agreement. Then this is the registration details. This is the project extension. Then any changes. This is the role of professionals. They play a very major role. Architects, engineers, and particularly chartered accountants. In this, chartered accountants' role is a very major role in implementation of the Real Estate Regulation Act. How I tell? This 70% they have to work as exclusive account, and any amount collected from the allottees, 70% should go to that exclusive account. Suppose it is 1,000 rupees, 700 rupees will go to that exclusive account, and 300 rupees he can take it for his profit or whatever may be. Then this withdrawal, earlier in the Maria project defunct because of diversion of funds from one project to another project. That is why our this act brings a strong rule that it should be 70% should go to that account, and it can be withdrawn based on the stage-wise completion of the building. Suppose if his first floor is completed, then architect will certify that this is the thing, first floor he has completed and total floor area this much. Then based on this certificate, engineer will certify the estimated amount spent for completion this field, this is how much. Based on these two certificates, chartered accountant will certify that yes, this certificate is given and you can withdraw the amount. Only based on this certificate given by the chartered accountant, the bank should release the amount. See, for example, totally we have nearly 18,000 projects we have registered. In that about 3,000 projects are buildings, others are layout. So that means 3,000 means 3,000 accounts opened across the state. RERA, we cannot go and individually check whether the amount released is as per the completion. So we totally rely upon the chartered account. After all, the money is not the builder's money, the money billed to the consumer. So I request all the chartered accountants in this forum should be more careful, because you have a more responsibility in releasing the amount, because of it's the home buy. So the role is very, very important for the implementation of this act successfully. Then this is already based on the certificate and the architect engineer, chartered accountant will certify. Based on that, they will release the money. And we are also doing test check 1 or 2 whether the amount withdrawn is in proportion to the completion. But it's very difficult to do 100%. So totally we rely upon all these professionals. Then after registration of the real estate project with RERA, we call for the quarterly progress report. We have a prescribed format posted in our website. We will monitor all the RERA registered projects by way of insisting the quarterly progress report for every quarter. Then Form 7 duly attested by the chartered accountant in practice. That is, financial ends with March. Then before September, the chartered accountant had to give a certificate in Form 7. What is the amount collected so far in the financial year, how much they have spent, and what is the amount remaining in the bank. Whenever any extension comes to us, then we will check up whether the amount released is proportionate to the physical completion of physical. Then apart from this response to chartered accountant, normally for any complaints, many advocates they will appear for on behalf of the promoter or the consumer. Here in this act, they have given even the chartered accountant or cost accountant or company secretary, they can appear in on behalf of the either home buyer or the promoter. That responsibility is given for chartered accountant in this act. Then these are the information we are posting in our website. Before buying a flat or plot, whether this profile of the promoter, how many projects he has done for the past 5 years. It is not before where nobody knows about this promoter. By this we can know in the past 5 years what are the projects he has done, then what are the project details, then approval details, then details of architect, engineer. This is the concern with the project for which he has applied for registration. Who is the contractor, who is the structural engineer, who is the architect, who is involved in the implementation of this particular project for which he has filed an application. Then this completion period, then what are the progress report. Then once the project is completed, then he has to apply for a completion certificate with Tamil Nadu RERA. For that he has to produce the completion report in Form 4 duly certified by an architect, then Form 5 if it is a layout, then Form 7 by the chartered accountant, then site photographs, then again this handing over of now. Again there is a big problem here is going on in our real estate flat. They don't hand over this common amenities and facilities. They simply hand over the flat and they will go. They don't hand over. So we ensure before giving our completion report whether he has handed over the all common amenities. If he is doing in the phased manner, then we will insist a declaration that it will be handed over on completion of the all the phases. Then copy of the completion certificate issued by the competent authority, whether it is a CMD or a DTCP, they are the planning authorities as far as Tamil Nadu is concerned. Then after issue of completion report by TN RERA, we address the bank with a copy marked to the promoter. They can close the account and they will withdraw the whatever the balance amount available. So it is only available all these things there. In spite of that, if there is any non-compliance, then we can file a complaint with Tamil Nadu RERA. Under section 31, you can file a complaint. There are two options given. One is under Form M and another is Form N. Form M deals with the delay in handing over and other general complaints. So you have to file in Form M. Form N means any compensation. In delay in handing over or any defective anything, if you are claiming compensation, then it has to be given in Form N, which will be adjudicated by an adjudicating officer who is a retired district judge posted in TN. This Form N will be dealt by our authority, but this compensation is exclusively by the adjudicating officer who is an independent officer. Though he is coming within the under the authority, he will not report. He will take his own decision. This is about Form N, I told. Then complaint disposal. See, as for the authority functions as two. One, if you registration of real estate projects, then adjudication of complaint, it is a quasi-judicial body. It's like a court. We will follow the summary procedure. We will allow both the parties to file their complaint and explain. 3 sets of, we will follow summary procedure. We will give due opportunities both to the complainants as well as the respondent. In this, even suppose if a promoter is aggrieved, he can file a complaint against a buyer. For example, if UDS is executed, allotted, and he is not paying any EMI properly, then he can file a complaint with TN RERA. We will adjudicate and we will issue orders. And we will give a direction to pay the EMI regularly, or otherwise we will cancel the allotment. Suppose the consumer is not coming forward to cancel the registration, when we have powers to go and cancel the registration, we can act as a consumer. Okay. Similarly, there is a big project. I will mention what is the Sagara project that is in Coimbatore. There is a defined project. So they have filed a complaint and we are going to register the flats in behalf of the respondent. So enough power is given within RERA. Not like that, suppose if it is gone underground, then we can do the registration as well as the cancellation. Then all final orders passed either in Form M or N, it is uploaded in our website. Then failure of complaints, direction of the RERA, level for penalty and even imprisonment power is given to Tamil Nadu RERA, but so far we are not gone for that extent. What we have to do, if he is not complying with the orders passed by the authority, then we will levy a heavy penalty. Then if he is not paying the penalty, then we will write to the concerned collector to attach his property and recover the amount from the concerned. This is we are following. So far we have not done anything about the imprisonment part, because it's only it's about 6 to 7 years old act. So we don't want to go very aggressively, but enough power is given to the RERA. This is again an agent. Now we used to call as a broker. There was no recognition for these real estate agents. We are collecting this fees and we are giving the agent for which is valid for 5 years, but not much role played by the real estate agents in our state. I don't know about other states. Some other state they insist before registration they have to mention the real estate agent's name and then number, but Tamil Nadu there is no much role played by these agents. It is only a recognition, that's all. Then this is the offences and penalties given in our Act. Then every order passed by the authority, same manner as is word, decree, and any no civil court can interfere with the functions of the RERA. If anybody wants to comply with this consumer forum, they have to withdraw from the consumer forum, then they have to register complaint with the RERA. This beneficial is not only for the home buyers, but it's also for the promoters. This is the responsibility fixed with the home buyer. This is the tribunal. Any aggrieved person for the orders passed by the authority, then they can file a appeal before the tribunal. The tribunal consists of a former Chief Justice High Court and one adjudicating member, administrative member and a judicial member. So these are some of the very important government orders passed to implement our Act. Number one, for any planning permit issued, they will put a condition that you should register with RERA. Number two, before issuing of completion certificate by the CMDA or GTCP, they have to insist the registration certificate from RERA, or otherwise you will not get completion certificate. Without completion certificate, you will not get power supply, water supply and sewer connections. So there is an inbuilt mechanism in the planning permission, and they are strictly enforced by this CMDA and the Directorate of Town and Country Planning Department. Number two, that's an instruction issued by the Commercial Tax Department, Inspector General of Registration. Without RERA registration, no plots should be registered in the sub-registrar office. So it has to be registered. Then only they will register the plots in the sub-registrar office. So all these things are posted in our website. This is our website. That's all. Thank you. Any questions or any
The forum
clarification?
is open for any questions from the audience.
What is the status of home buyers? Since you said after the completion of the certificate only the EB connection and other connections will be given to them. So what is the status of the home buyers if, under the process of the sale agreement, construction agreement and so on? Sir?
No. If he is not handing over the flat on the prescribed period, you can file a complaint with the TN RERA in Form M.
Sir, without getting connections, how can the builder will hand over the property?
Now that will take some more 1 or 2 months definitely. See, after giving completion certificate, this electricity board or another metro water, they take time 2 or 3 months. So then only they can hand over the flat to you.
Sir, they will not get the money also, no, sir. If
Which-
they are under the loan and the other process and all, they will be delayed, no?
No, that delay you can file compensation. See, the date which he has given in the construction agreement, that is very crucial. He has to hand over that flat in that particular period. If he is not handing over, then you can claim for compensation in the delay for handing over.
No, my question is, the builder will not get the money, no, sir.
What builder?
Like from the home buyers.
That you have to pay as per the date specified in the construction agreement. Construction agreement consists not only handing over, they will mention that in the period you have to pay this money, this money. So you have to pay that EMI at that particular date. No, not to see, builder is not only depending on your amount, they are getting project fund from the banks. Suppose there is 100 flats, only 5 flats is booked. It doesn't mean they have to wait for your money. He has to complete the other 95 blocks also. So he has to go for a project fund, then only you can build. For example, there is a 5-floor building, 1 flat booked in the first floor and 1 floor in the 5th floor. Suppose he is not, no flats is booked between this floor, it doesn't mean that he cannot complete. He has to complete from either from his own money or project from loan from the banks, then he has to complete.
Hello.
What is the liability of the chartered accountant in this? The question is liability of the chartered accountant who issue the CA certificates.
That's what I said now. This is a more responsibility. If you are giving any wrong certificate, then we will take up the issue with your office, institute, for taking necessary action. We have already taken some action against one construction, this chartered engineer who has given a wrong certificate, and we have cancelled the certificate given by the corporation of India. So similarly, architects, at the Institute of Architects is there daily, then Chartered Accountant Institute is there. We will take up with the issues. If we find any fault, then we will take up with the institute.
Morning, sir. Sir, my question is, the builder has applied for the CC, but then before the CC is approved, he has handed over the flat. Can he do that? And if so,
You should not take over the flat. Why you are taking it?
because
See, without completion, how you can go and stay there? You should not take.
So I want to complete the interiors and stuff, and I don't want to
That
delay.
he can give temporarily the key to you. You can go and complete the internal work. Then you officially you can take over after the taking over the given hour.
What if I have taken it?
What?
What if I have taken it? Is there any penalty in there?
No penalty is there.
So I
See,
can
for doing the internal work, temporarily you can get the permission from the builder. You can complete the internal work. Then once it is completed, we hand over the key to you. Then after giving all infrastructure facilities, you can officially take over the flat.
What if before the CC, with the temporary EB and all, I get it shifted in the flat?
And you have to check up only with the promoter.
No, is there any restriction from RERA side?
No restriction.
Because this has a implication on the first occupation in GST. That's why I asked you.
Only taking over is only calculated.
Okay, thank you.
If 1,000 rupees is collected, you said 700 rupees is to be deposited. If 1,000 rupees is inclusive of GST, next month I have to pay the GST. Should I
Sir.
deduct the GST and then remit balance 70%?
This-
How is it?
This question, I repeatedly am telling GST, we are not concerned with RERA. That is a separate department. We are not, see, 700 includes the land cost, construction cost, architect fees, whatever fees, that is only included in the 70% which is given in the act. This GST, I think the next session they will explain whether the 70% will include the GST or not.
Tomorrow we should not say with 1,000 rupees you have collected, you have not deposited 7 rupees, because this will take about getting the project report, getting CA certificate, getting all these engineer certificate next month. By 20th I have to pay the GST. So where is the, there is no, I don't have separate money other than this 1,000 rupees. So I have to pay invariably the 18% of whatever, 1% or 5%, whatever, as per the.
So the
group.
rationale seems to be diversion of funds, sir. If you are paying it for GST, it's not diversion. So you are paying it only for a government authority.
Yes.
So how is it a diversion?
No, it is
It's
not
not
a question
a-
of diversion, but the RERA should not object to that 70%.
We will not object, sir. As long as your chartered accountant certified that it is proportional to the stage of completion, including all this construction cost, what is architect fees, GST, then we will not do anything. We will not come into it. So all these days, we are depending only based on the certificate given by the chartered accountant. That is not a big issue, this GST,
No,
no?
no, the thing is, small amount will not matter, but only thing is, when it comes to the big project, the GST portion, quantum will be huge. Next month, if you don't pay, then that involves a penalty clauses, so many clauses will be involved. So that is why 100 minus 1000 minus whatever
You
GST collected.
You include, because you include in GST also, because GST has to be paid only by the home buyers, not the builder.
No,
So,
builder has to remit it because he is collecting from the home buyer, he has to remit to the government.
so you can
that
remit
way-
from that 70%.
So it means that will take, suppose if it takes time, because next month by 20th we have to pay the GST. We have to file the return by 10th, right? So in that case, if there is going to be a delay in remitting the dues of 70% of the account by the banker or either by the RERA or by the banker, whatever be the reasons. So that's why if RERA can permit 1,000 rupees minus GST, balance 70% if it can be remitted, then that's fine. If that rule applies, otherwise the same issue will arise. He has to promote, has to build some other resources to pay the GST from other projects. See, that's where it happens. How it happens? So this is my.
I'll clarify that. Okay.
The
Detail.
project started before
that is-
2017. Project started before 2017. Can RERA step in and taking cognizance?
Okay, while notifying the rules, we said 1/5/2007 is a crucial date, right? Completion certificate obtained before this date, they will not fall within the purview of the RERA. All ongoing construction on that 1/5/2007, it is not completed and completion certificate not received, they have to apply to RERA for registration. This is thing very clearly given in our rules and act.
One more question. Regarding this common amenities, you are told that suppose assuming there are 20 towers to be completed and I'm only sitting in the 5th or 6th tower. So the promoter will say that only after completion of 20 towers, the common amenities like the clubhouse or the swimming pool will be ready.
Yes, that's what I said. No, yes, we have to get, we'll get a declaration. While registering the projects for that 5 towers, we get a declaration from that builder stating that all these common amenities will be completed and the final phase, and it will be added to the Association of Allottees.
If there is no
Again, you have to see, while signing your construction agreement, you should be very careful. It all depends on how you are signing. If you are putting simply signature, then you can claim it. You have to clearly, it should be mentioned, it should be under.
There is change in the project itself. The buyer, the developer is not going to go for some 15 towers, only restricting to 10 towers and the 5 towers is not going to develop or maybe going to promote villas or something like that. So how will
Then he has to, for any revision plan, he has to get the concurrence from the 2/3 allottees of the existing allottees. Then only he can go for revision.
okay, thank you.
And also one more thing, we are getting an abstract. Suppose there is a big 10 acres plot and he is coming for only for 5 acres and remaining 5 acres, if he is keeping it for future development, we are insisting in abstract stating that the present 5 towers is the UDS of these 5 towers, there are so many things. The remaining this future development, this is the area. So you cannot, UDS, you cannot get confused. So that abstract we are insisting.
Sir, I have 3 questions. The first question is on registration of the agreement, construction agreement. This registration means registration under the Stamp Act or registration under the RERA Act.
Stamp Act.
Stamp Act. Because the capital gains provision also talks about registration.
Registration with the sub-registrar office.
The second question is on the carpet area. They have to bill it on the carpet area. But 99% of the promoters are selling based on the, including the common area. When this question was raised, they say, if I cannot do it on my own because all other promoters must cooperate. How do you as an authority look at this point?
Only if you bring to our knowledge, then we can adjudicate. We don't know how one might plan or doing it. To file any complaint stating that this promoter is selling not on the basis of carpet area, then we will incur and pass on. But practically, in area builders, they are doing like this only. Still, they are only selling for the total flat area, not on the carpet area.
Third important question is, they are advertising 12,000 rupees per SFT and they are collecting the money. They are also registering the UDS separately. So how do we calculate the 12,000 rupees?
Construction agreement very clearly points out that total the sale UDS area, how much, what is the cost, then construction cost dismissed. Construction agreement contains everything. What is the UDS area, what is the cost, then what is the construction cost. Everything is there in construction agreement.
So we can be guided by that.
And some builders, this register is deed, agreement for sale also,
Yes.
separately for UDS.
Yes. And in the construction agreement, they are making a lot of specifications that they will use these materials. If there is going to be a deficiency, we can make a complaint.
Definitely, definitely. That's what I said, is specification. Specification is related to all this, even light and bulb, whatever this tap, everything. If he is telling Jaguar, then he has to put only Jaguar. If he is putting any inferior, then you can file a complaint with the tap.
Thank you.
Sir, I have two questions. Sir, one question. Now, the registration is based on the overall square feet of 500 square feet, overall space, or 500 square meters, or 8 units. Now, you also mentioned that in case the builder retains 2 units for sale to recover his cost, does the registration requirement change, or is it looked at a project alone?
Project alone. It's concerned of the entire project, not the builder share or
Builder share.
landowner share. It's considered the entire project.
Sir, I have two questions there. Initially, when the promoter and builder, landowner and promoter entered into an agreement, they entered into an agreement for area sharing. When the project was completed, they get into a different understanding, and the landowner says, "You give me money, I don't want any constructed area." Now, what is the implication? By the time I see the ledger of the landowner, the money is paid.
We are concerned with the whatever documents you are furnishing to P&R. We are not concerned about the document between the landowner and the promoter. Whatever documents you are producing for registration of real estate project, then we will consider. Suppose he is giving a general power for sale for so many flats, then it will be taken into consideration only that. Not between so many documents and oral agreement made between you and the landowner.
Second point, sir. Now, the builder sells a completed project, completed unit, apartment to a buyer. At the same time, there are two agreements. One is for UDS and one is for construction. Compulsorily, they have to have two agreements, sir. One is for UDS and one is for construction.
Definitely.
Even if the
UDS is land, construction agreement for the building. So there should be a two agreement.
Once the CC is being given, then you will just have one agreement.
What?
Once the CC is obtained, and I am selling the unit after the construction is over,
But some sub-registrar office, they receive this construction agreement. That is why even if it's a completed building, they are putting one construction agreement. Actually not required, once the building completed, but some sub-registrar office, they are insisting this construction agreement.
Sir,
clarification. See, across India, all the states have notified a single agreement, sale cum construction. But Tamil Nadu is the only state which has given the two agreement. One is the UDS sale and the construction. The rationale behind still we are unknown it. And,
No, this is already clarified even in our Supreme Court. So we cannot compare with other states. What Tamil Nadu doing is our own, based on our rules. For example, I tell you, we started doing from what other states have. For example, West Bengal, they have reduced the threshold limit. I think we will not. We don't want to do that. Like that, every state they are doing their own. We will follow our long method.
Understood. Any rationale, sir? Any rationale behind it? Because in Karnataka, somewhere in 2004 and 5, we also had a similar separate agreement for the UDS and the construction. And maybe up to RERA few are also following it, but post RERA it becomes a mandated in most of the places. It's a single agreement.
But Karnataka, whether this UDS is executed in favor of single Allottee or like Maharashtra the association?
UDS, sir. Allottee. Most of the southern states follow the UDS. Maharashtra follows the associate society model.
So we will examine.
Yeah. Second question is, sir, as a practice, the individual UDS will be distributed among the customers, sir. Finally, the entire piece of the land in the revenue or municipal documents, will that be in the name of the association?
No, only the UDS of the common areas, common facilities, only it will be in the name of the association of Allottees, not the UDS of the individual flat area.
Not the individual. What do you say? Entire land. Project land.
Not entire land. Excluding the UDS of the individual flats, this pathway, roads, internal roads, other UDS of the common amenities facilities, it will be in the name of the association of the Allottees.
One of the slides you have mentioned that CS and CMA can be representative before the appeal.
Section 56.
What?
In one of your slides, you have mentioned that CS and CMA can be the representative before the appeal. Whether it is the requirement, all the CS, CMA are practice CS, CMA or any CS, CMA can?
Chartered accountant in practice.
In practice only can be.
Yes, that release of funds, it will be only certificate given by the chartered accountant in practice, not the company auditor.
In the previous slide, you have mentioned chartered accountant in practice.
That is Form 7 for the progress report for the completion. But withdrawal of money, it will be done only by the chartered accountant in practice, not the auditor of the builder. Because auditor of the builder, he can give any certificate because he is working under the builder. So that is why specifically this act says chartered accountant in practice.
Thank you. One more question. You have mentioned that 5 years is required from the date of registration to complete the building and hand over to the...
Which one? Which?
Time period to hand over the building is 5 years.
Not 5 years. I never said 5 years. It is the date declared by the promoter in the construction agreement. Structural defects, structural liability is 5 years. Right? Suppose if today he is handing over the flat to you, 5 years period, if there is any structural defects, then the promoter has to rectify it on his own cost. I said structural liability is 5 years.
Is there any time period from the date of registration in RERA to hand over the building to the customer?
All dates will be based on your construction agreement. Date of handing over is based on the construction agreement declared by the promoter, not with the RERA registration.
If some period, time period has mentioned in the construction agreement, but still the builders are going beyond that. Is there any protection in this act to give them the...
That's what I said, you can file claim and compensation.
Thank you.
Sir, 500 square meters is hardly 5,380 square feet. That means almost all the projects will have to be registered if it is, say, 2 months plot, for the development.
Yes, definitely.
And another question is RERA applicable to an old existing building which has to be developed further.
For any demolition and reconstruction involving without any sale, RERA registration is not required. Suppose there is housing board flats, 10 allottees are there, you are demolishing and reconstructing for your own purpose for 10 flats, then it is not required. Suppose if you are going for a joint venture, instead of 10 flats, if the builder is constructing 15 flats and he is sharing 5 flats, then it has to be registered with RERA. Right?
Suppose there is a building of 10,000 square foot now available. It is going to be developed further by adding 2 more floors and sold.
If it involves sale, marketing, booking, then it has to be registered with RERA. That's what I said. For all reconstruction, demolition, reconstruction, if you are increasing the flats and you are giving for the builder for any sale, then it has to be registered, the entire project has to be registered.
Can the builder complete the whole construction, say 15,000 square feet, 20,000 square foot, and then apply for RERA and he thinks about selling? Can he wait?
It has to be registered.
It has to be registered.
Even after completion with his own fund, if he is selling to third party or public, then it has to be registered. This is nothing to do with the provide from his own fund. If it is meant for sale, then it has to be registered.
In the example I suggested, there are 10,000 square feet available right now, sanction plan, it is 30-year-old building, 2 more floors have to be added and
Then it has to be registered.
It has to be. Thank you.
Even if it is sold, going with the example, there are 10, we have 10 flats, joint venture, and the seller identified, the 5 new buyers. Okay. So all 15 are set. Even then they have registered.
Yes, that's what I said. If these 10 flats, the
No
same,
sale marketing.
no, wait, the 10 flats, if they are retaining it for their own purpose, they don't have to register with us. Only these 5 flats, which is meant for sale by the builder, those 5 flats has to be registered with RERA.
Only the 5 flats.
Yes. Suppose this landowner is also going to sell in future, then entire project they can register with us. It's only option we are giving. I don't know about other states whether they are giving this option or not. But Tamil Nadu, we have taken a decision. If it's only meant for sale, they can register. Others, owners, they are going to retain for their own purpose. They don't have to register with RERA.
The registration fees, is it based on the area or?
Floor area 20 rupees per square meter for residential, and for commercial it is 50 rupees per square meter. It's based on the FSI, floor area, based on the floor area. It excludes all your common amenities, other things.
So in the case of a project which is developed, like first is the layout and then the villas are constructed on individual plots. Now because the layout sanction is taken first and then that has to be completed and then the building permits have to be taken. When is it that the project should be registered or should
First
be registered?
layout, if it is a layout registered, you have to register the layout with RERA. First.
And then again the villa registration has to be.
No, suppose it is already a layout is approved by competent authority, then suppose it is not registered with RERA and they have obtained a building permission, then we are collecting the fees for both the things and we are registering.
So because
not like that, first layout should be registered, then you should come for building.
without the RERA registration or completion, are they issuing the building permits? Are they issuing the building permits?
Building permit is nothing to do RERA.
Alright.
Only for issuing completion certificate only they need the RERA registration. For issuing planning permission under Town and Country Planning Act and building permit under the Building Local Bodies Act, RERA registration is not required. RERA registration only after approval. We are giving registration only based on the approval given by the planning authorities and the local bodies, not before that.
Sir, one thing is in terms of 70% amount to be deposited in the bank. In case the landowner sells his portion along with the builder, should he also deposit this to the 70% account?
What? I don't know.
Landowner amount. In case of a development, joint development, area sharing like 5 units goes to the landowner, 5 units to the builder. And when the landowner sells, So should he also deposit into the 70% account?
Yes, definitely. So that is why we are getting a concurrence from the landowner.
Landowner
Normally,
also.
they open only single account.
Yes.
And even we are allowing two separate accounts.
Separate
Suppose
account.
landowner share is separate and we are two accounts open mandla. In that one account for landowner,
Okay.
another account for this builders. Whatever landowner is selling, that
It
amount
goes
will
to
go
the
to that
landowner.
person.
Okay.
And this bank for another 70% builder share, it will go to his account.
Okay.
So they are allowing two accounts.
So-
Suppose if you want to maintain only one account, they are getting a consent from the landowner stating that we don't have any objection in maintaining a single account.
Okay.
So that also we are considering.
Quarterly update, should we include the landowner portion of the sales also, sir?
Yes?
Same
Sale-
collection and
anything
revenue.
sales QPR, yes.
Okay, so entire whatever registered with RERA, that completely reporting should happen.
Yes.
Okay, sir. And also, if you see the format of the chartered accountant, which is notified by Tamil Nadu RERA, even if it is 0% of the progress, money can be withdrawn 100% of the land cost.
Yes, because land already they invested. No?
Yes.
This builder promoter is already invested. So whatever he invested on this land cost, he can take it.
So it is doing more like a selling of a land if it doesn't complete the construction. So there is no money for the construction because land belongs to the landowner under a joint development agreement. If at all, if a builder recover entire money and without spending his construction money, if we allow it, so then the
that
money
will be
will
only a proportionate. No, see, land cost is only a proportionate to the total
Construction.
consideration of the flat.
Understood.
You cannot withdraw the entire money.
But if you see the format of the chartered accountant, you put estimated cost, incurred cost.
Incurred.
So incurred cost, obviously the full money, whatever be the estimated. So we are allowing to withdraw this money 100%. Unless in Maharashtra, Karnataka, Gujarat, all other states allow the entire land money to withdraw it. In Karnataka, if you construct 10% of the construction as per architect, you withdraw 10% of the land cost also. To that extent, there is a balancing factor.
That is not a logic. No, 10% now total land cost is only considered, not this 10% of that.
Yeah, but then as I told you, sir, like if we recover the land cost without construction, see, if you are invested on the land, I agree with you. You are not invested. Landowner has invested money. Builders supposed to invest, construct money and take it. By virtue of this, he is eligible to withdraw the money. That is one thing which we wanted you to look into that and give some more clarity, sir. Thank you.
Sir, one last question, please.
Yeah. The provisions as per the RERA is in sync with what is being prescribed by the bank while doing project funding in terms of having multiple accounts. That has to be clarified. So you said you can open two separate accounts for landowner as well as for the developer while collecting money. But the bank has to agree on that. Bank says you can have one collection account, one RERA account, one under operational account, and another lender account. There are about 4 accounts can be maintained. Which one will prevail?
No, we don't accept all these 4 accounts. There should be only one RERA account.
No, account is maybe one RERA account, but there are other operators.
As for they are giving a bank certificate, they will give only one RERA account. We don't accept all this collection of 100% account, 70% account, 30% account. That was the convenience of the promoters, buyer, they are opening. But for us, they are giving only one account number, that is RERA account number, not all these 3 accounts. And again, this project fund, it doesn't come to this RERA account. It only collected from the buyers. It only comes to this 70% account. In other state, I think Karnataka, some other state, they should tell that even this project fund should go to this RERA account. But so far they have not started that. One state, I think, Mr. Karnataka, I think Karnataka, they said this project fund also should go to this 70%. But Tamil Nadu, they are not insisting that so far. That's what I know. Every state, they follow different rules.
Thank you very much.
Thank you.
Thank you very much, Selvakumar sir, for being the chief guest for today's program and clarifying all our delegates' doubts. I thought as a chief guest you will come and deliver your chief guest address and go. but you have taken an elaborate session on broader perspective of RERA Act that shows your vast experience and passion for the subject. Thank you very much, sir. May I now request Shiva Badri Prasad along with Vinay and Suhail to present a memento to our Chief Guest Selva Kumar sir as a token of our love and affection. A big round of applause for Selva Kumar. Before we move to the next technical session, let us all break for tea and quickly reassemble by 10 minutes. That is 11:30 for the next technical session.
Of RERA, and in between we have GST. We have with us Advocate Natarajan sir. I request him to come on the stage, and please join your hands and welcome sir with the clapping. Thank you. It gives two things. One is a happiness to the speaker. Second is your health by clapping yourself. There is no other occasion to clap ourselves unless in a program like our institute program or somewhere in the humor program with the some of the standing comedy personalities. Introduction. We all know that like GST has changed the complete landmark of the Indian way of working, whether it's the government implementation to collect the revenue, track the revenue, or crack the revenue. Second is in terms of consolidation of the business transaction itself and also completely monitor what's happening in India. Third is in terms of bringing the states and the central, the federal system together, work towards the achieving the common objectives. Fourth is like ease of doing business for the business community or the industry itself, having clarity on the transaction and also tax. Friends, we all know that indirect tax play a very vital role in terms of carrying out the business. Unless the direct tax, indirect tax is always be collected from the end users and remit to the government. Anything which we don't follow properly, it becomes a direct impact on the business people itself, which is nothing but the loss of money which they have to pay out of their pocket. And in view of that, the seamless transaction or credit flow, that was one of the objective of the GST. And we all know that 2017, the year RERA was implemented, the same year GST was also born and started implemented. I'm sure that in the past 6 years, fair amount of clarification which has come in terms of the GST. However, one sector remains unclarified is real estate sector. On the GST aspects, the more you study, the more you are confused. Always ignorant is a bliss. With respect to GST, with the real estate transaction is also not the same. So we in terms of to know more from the expert, the more from the seasoned professional Advocate Natarajan sir. So we are all here to listen on the GST and the real estate transaction. Actually, my partner Rajesh Kumar is very close to Mr. Natarajan sir. When I spoke to my partner, I need one professional who can talk on the GST for the real estate. He said, please contact Natarajan sir. Sir has accepted to address our members. Thank you so much for being here in today's session on the GST, sir. Sir is an advocate by profession. He is also an associate member of the Institute of Costworks, ICAI, but now it's called ICAI. He has a decades of experience in the Customs and Central Excise Department and more than 19 years of practice since 2003. He also part of represented before various benches of the SESTAT and various high courts and Supreme Court before commencing his independent practice under the name GN Law Associates from 1/4/2022. He was a senior partner of the Messrs. Swami Associates and was heading the national operation. Sir is well-known writer on the subject and written more than 500 articles and published in the various magazines and also the books which is Excise Law Time, Service Tax Reporter, Tax India Online, Tax Supra, Tax Scan, Tax Management India and Taxman, etc. He is authored a book on demystifying GST for construction industry, the second edition which was published in June 2020. Sir is a regular speaker in various institutes, forums, professional forums and the government department, including national. He is recognized as the top individual lawyer 2021 by Forbes India Legal Power List. That's a big and great to hear, sir. And your presence today will make a difference to our members. And sir is also appointed as one of the member of advisory panel found by the Tamil Nadu government to advise on the government on various fiscal policies and issues relating to GST. So sir will share well in advance in terms of what are the recommendations and the things which can come forward to the members also. With this brief introduction, I present before the members Sri Natarajan sir. Over to you, sir.
Yeah, before we hear from Advocate G. Natarajan, may I now request Advocate Vijay Lakshmi ma'am to come forward and present a shawl to Advocate G. Natarajan sir as a token of our love and affection. Over to Advocate G. Natarajan sir to take us through recent and latest rulings on GST on real estate, taxation on plotted development, landowner liability and developers liability.
Very good afternoon. Mr. Vinay was mentioning about the trailer and the movie which you are going to have in the afternoon. So now we are on interval. Sometimes if the movie is not good, the interval will be the best part to enjoy. You have popcorn, you have soft drink, everything. So I hope that this interval is also as interesting as the movie. So to make it more interesting, I wish it is more interactive. So let us not be a one-way traffic where I continue to speak and finally we have some question hours and all that. Let us not follow that forward. Whenever you want to interrupt me or ask any questions or anything, you can always feel free. And if you have come to this session, see this GST on real estate, as told by Mr. Vinay again, this is one of the most confusing aspects today. Lot of clarifications, lot of GST council discussions have come on various other aspects, but unfortunately on this real estate sector, the confusion still remains. It was better in 2017 when GST was introduced. The things were rather simple. It was an 18% tax with ITC, not much of complications. All complications started coming from 2019 onwards, and where we are in 2019, even now we are in the same position with no clarity. So if you have come to this session thinking that all your doubts on GST relating to real estate sector will be answered and you will go enlightened back, I'm sorry, it is not going to happen. But still you can feel very happy. Why? Because you will be satisfied whatever doubts and confusions you have in your mind, even everybody in the profession is also having the same confusion. So you are not the only person to have the confusion. So with that satisfaction, you can definitely go back. Because that is how the legal position remains as of today. We will try to demystify to the extent possible based on our own understanding. Unfortunately, we don't have much of case laws on this aspect, not much of circulars from the government. Even if there is a circular, how far it will clear the doubt is doubtful. It will add to the doubt. That is what has been happening. So now with this, we'll just proceed into the subject. There are two provisions, even though the topic deals with judgments. We don't have much of judgments under the context of GST. So we will have a brief understanding of the legal provisions relating to GST and the real estate sector. So that will be our approach. These two legal provisions, we have to be familiar. There is a Schedule 2 under the GST Act, which lays down certain activities are considered as supply of goods and certain activities are considered as supply of services. Under service tax law, we always had this problem. The state government will treat it as a supply of goods and they will levy sales tax, the central government will say that no, it is a supply of service, I will levy service tax. So this problem to a major extent has been avoided under GST because it is a common base. The taxing base is going to be supply of goods or services, and it will be an equal levy by both the government. To a major extent, this problem has been solved. But still the problem may arise in certain cases where, like in construction sector, where goods are also involved, services are also involved. The goods may attract a different rate. If you take cement, it is 28%. If you take steel, it is 18%. If you treat it as a services, the rates are different. So still, whether it is a goods or whether it is a service, the problem may continue. To avoid that, they have created one schedule 2. They have specifically said these are all the transactions which are treated as supply of goods, and these are all the transactions which are treated as supply of services. Unfortunately, for construction sector, they have declared it to be a supply of service. Even though goods are also involved in construction activity, for the purpose of GST, it is considered as a service activity. So there can be two types of transactions under construction sector. One is sale of an apartment. During the stage of construction, advances are received, various installments amounts are received. So that transaction is considered as a supply of service. If any apartment is sold after completion, it has got nothing to do with the GST. It is a sale of immovable property, it's a ready-made apartment, it is not liable to GST. So the first class of serial number 5B of schedule 2 says, construction of a complex, building or a civil structure or a part thereof, including a complex or building or buildings intended for sale to a buyer, wholly or partly, except where the consideration is received after completion certificate or first occupation, whichever is earlier. So, any sale of apartment in a complex after the completion certificate is obtained for the project, it will not be treated as a service under GST, except where the entire consideration is received after CC. So, if any part of the consideration is received from the buyer before getting completion certificate for the project, then it is declared as a supply of service for the purpose of GST. That is one transaction. The second provision is works contract. Works contract is a combination of material and labor. So let us say there is a builder or a promoter. He sells the apartments to the buyer. He will get covered under para 5B. Any sale of apartment before getting completion certificate is liable to GST as per para 5B. The builder, the promoter, he gives the entire work as a subcontract to a contractor. So the contractor puts all the material, he puts his labor, and he constructs the apartment. So he will be coming under the works contract. So what he does is a works contract. So both activities, whether it is a contractor engaged by the builder or the transaction between the builder and the buyer, both are covered under GST and they are treated as supply of service. It will not be treated as supply of goods, it will be treated as supply of service. Now, there is a schedule 3. The schedule 3 lists out various activities which will not be treated as a supply. Whatever transactions are mentioned in schedule 3, it is not a supply of goods, it is not a supply of service, so no GST is payable. So in schedule 3, there is one particular entry which is relevant for our discussions today, that is sale of land. Sale of land is kept under schedule 3, so it is not liable to GST. And sale of building subject to para 5B. So if any building is sold before obtaining completion certificate, it is a supply of service. But if any building is sold after getting completion certificate, it is kept under schedule 3. That is why if there is a ready built flat, if we go and buy, there will be no GST. Or second hand sale, already there is a flat, somebody is the owner, he is again selling it, so it will be sale of building, it is not liable to GST through schedule 3. So schedule 2, there are 2 entries, and schedule 3, sale of land and sale of building, except what is covered under 5B, it will not be leviable to GST. Now, between first morning we saw RERA came into force from 1/5/2017. Within 2 months from 1/7/2017, GST came. So a blow after blow. So how we can survive? So at least some clarity has come as far as RERA is concerned, as we can see from the morning deliberations. But still, a lot more needs to be done as far as GST is concerned. Even after 6 years, we are still struggling with the GST, especially for the real estate sector. But I can say, during this period between 17 to 19, 31st March 2019, the provisions were rather simple, not much of confusion. The tax rate was 18%. 1/3 was allowed as a deduction towards the land value. So as a builder, I sell one apartment for 1 crore. So 1/3 will be deemed as the land value. On remaining 2/3, if you apply 18%, effectively it will come to 12% on the total value. The builder will be eligible to take all ITC. So not much of confusions at all. If there is no involvement of land, a contractor engaged by the builder, a contractor is putting material and labor, then the rate will be 18%. There will be no 1/3 deduction in the hands of the contractor because he is not transferring the land. He is doing the work for the builder. So it is 18%. In the hands of the builder, it is 18% after excluding 1/3 towards the land value. So effectively it was 12%. No restrictions on ITC. So things were rather simple. But unfortunately, it is only the industry which represented before the government. This 12% GST burden is very heavy because at that time real estate was under severe recession. Now the market is, today I saw in the newspaper, in Chennai, second quarter of this year, compared to last year, there is a 63% increase in the number of bookings. So the market is very robust. That is the situation almost all over the country. But at that time, in 2018 and 19, when the sector was under severe recession, they all made representations to the government for reduction of rate. That was the big mistake committed by the industry. They reduced the rate, but with lot of ifs and buts, lot of conditions, making the process very, very difficult for the industry. So now, I think many of the players in real estate sector, they wish that let us go back to the old regime. We don't want this 5%. Let us go back to the old regime. That is what they want. Whether it is going to happen or not, we don't know. So the things were rather simple during the period between July 17 to March 19. From 1/4/2019, major overhaul has been undertaken as far as GST for the real estate sector. The rate of tax is 7.5%. We all say that it is 5%, 5%. Actually, legally it is not 5%. It is 7.5% after excluding 1/3 towards the land value. Suppose if an apartment is sold for 60 lakhs, 20 lakhs will be presumed as the land value, and remaining 40 lakhs, if 7.5% is applied, then effectively it will come to 5% on the total value. So the rate is not 5%, the rate is 7.5% on 2/3 value. Mathematically, it will come to 5% on the total price. This is for normal residential apartments. If it is an affordable apartment, what is an affordable apartment? There is a definition. So it should be less than certain area, 600 square feet or 900 square feet, 60 meter or 90 meter. Price should be less than 45 lakhs. In that case, it will be 1.5% on 2/3 value, which will come to 1%. So effectively, the rate of tax has been reduced from 12% to 5% as far as residential apartments are concerned. Commercial building, there is no change. It continues at 18% on 2/3 value, which will come to 12%. So when these rate changes were introduced with effect from 1/4/2019, there were a lot of ongoing projects going on. So an option was given to the builder. Either they can continue with the old rate or they can move to the new regime. So that option has to be exercised by the builder before a particular date. So if they opt to continue under the old rate, they will continue to take ITC, they will pay tax at the rate of 12%, that is 18% on 2/3 value, and once they get the completion certificate, proportionate credit has to be calculated and reversed, and then any sale after completion, it will not be liable to GST. Suppose if anybody wants to switch over to the new rate for ongoing project, this option was given only to ongoing project. Any new project starting after 1/4/2019, there is no option. It is compulsory, they have to follow only 5%. They cannot say that I will pay 18%, I will take ITC. So that option is not available. Only for ongoing project, if any builder wants to switch over to the new rate, there are certain compliances required. Till 31st March he was taking ITC. From 1/4/2019 he will not be eligible to take ITC. So whatever ITC has been taken till 31st March 2019, he has to calculate the proportionate amount which is eligible and which is ineligible, and he has to reverse that credit. There is a wonderful formula prescribed for that purpose. Even an IIT mathematician will find it difficult to understand. Such a big formula has been prescribed how to calculate the quantum of credit to be reversed. So safely I will not get into that formula unless you ask me to clarify that. So there is a formula to calculate the quantum of credit when an ongoing project, if a person wants to switch over from the old regime to the new tax regime, and 18% for all other works contract. Without involvement of land, only material and labor, it is 18%. So these are all the changes in the rate of tax applicable to the real estate sector. But that is not enough, that is not over. It comes with lot of conditions. So this is where the problem has started coming. No ITC is eligible. So a builder who has opted to pay 5% or any new project for which the rate is only 5%, no option is available, they cannot take any input tax credit at all. So what happens? Directly it adds to the cost. If ITC was allowed, 28% tax paid on cement, 18% tax paid on all other items could have been taken as ITC, and we could have offered a better price to the customer. But unfortunately the customers, they don't understand this ITC and all. For a customer, what matters is what is the rate you are quoting. So if the rate is 5%, the customer is happy. But the real fact is, because this 5% rate has come with no ITC, effectively the cost goes up and price goes up. Ultimately it is only the buyers who are getting affected. So the benefit of the rate deduction has not benefited either the industry or the consumers. So that is the irony of it. So no ITC. Not only that, the builder may have some other ITC. He may be doing some other business under the same registration where there is an accumulation of credit. Can he use that ITC to pay this tax? That is also not possible. This 5% tax has to be paid only through cash. That is another condition. Another condition, you have to procure 80% of your inputs and input services only from registered persons. This is very difficult to monitor. So as a builder, he will be incurring lot of expenses, contract labor, cement, steel, various other raw materials, various other consumables. So the total project expenditure, 80% of the expenditure should be by way of procurement from registered persons. This account has to be maintained project-wise. For each and every project we have to prove 80% of purchases are from registered persons, and this 80% condition is not for the entire project. Every year we have to satisfy. First year it is 90%. Second year we fall in short, only 70%. So can you club it? No, not possible. Every year 80% of the purchases of goods and services by the builder, it should be from registered dealers. Accounts have to be maintained to prove that particular aspect. So what will happen if there is a shortfall? Suppose my project expenditure is 1 crore last year. I should have spent 70 lakhs only to registered persons. There is a shortage. Only 60 lakhs I have spent to registered persons. All other expenditure I paid to unregistered person. So there is a shortage of 10 lakh. For that 10 lakhs, as a builder, I have to pay 18% GST under RCM. And I cannot take ITC. So I cannot take ITC. For the shortfall, the builder has to pay 18% GST under reverse charge mechanism. Not only that, if that shortfall is on account of procuring cement from an unregistered person, because cement is 28% GST. So if I have procured cement from any unregistered person, then the builder has to pay 28% GST under RCM. I might have satisfied 70% condition. All my expenditure, everything is more, 80%. It is more than 80%. But some cement I have purchased from unregistered person. So for that purchase of cement from unregistered person, the builder has to pay 28% GST under RCM. Again, it cannot be taken as a credit. Similarly, if any capital goods are purchased for the project from an unregistered person, applicable rate GST has to be paid under reverse charge mechanism. This may not be very, all capital goods and all will be huge expensive. How can we buy from an unregistered person? But this cement will be a big hit because 28% we have to pay, and maintenance of records for this purpose and satisfying the officers that we have incurred 80% from registered person, that is all going to create a lot of practical compliance issues for us. Yes.
The procurement will include the labor payments also?
Yes, labor also it will be included. Normally all labor contractors, most of them are not registered. So labor also, the only exclusion is if it is a joint venture, any transfer of land from the landowner, that will not be taken into account, and non-GST goods will not be taken into account. If you purchase diesel for the project, that will not be taken into project expenditure. Except this, all other labor payment, everything will be included. We have to make it as 80% should be from registered person. If there is a shortage, on the shortage, the builder has to pay 18% GST under RCM, no ITC. This is one very important condition. Yes. Sir? No, salary means, salary is your own employee's salary. Salary, the services provided by an employee to the employer, it is considered not at all as a supply. So salary will not be taken into account.
Even if it is a project cost?
Yes, yes, yes.
Labor or contractor?
Labor contractor, we have to take into account. Yes.
For any person, 100% should be exclusive of cement.
100% should be
Exclusive of cement.
exclusive of? No. We have to make two calculations, including cement. Total calculations we have to make. So if the total calculation is falling short, then for the differential we have to pay 18%. So if cement is also procured from any, see this 80% is only registered person purchases. Let us say 1 crore is the expenditure. We have to make payment of 80 lakhs to registered persons. It is only 70 lakhs. There is a shortage of 10 lakhs. For that we have to pay 18%. Now this 40 lakhs we have paid to unregistered persons. 30 lakhs. 30 lakhs we have paid to unregistered person. If that 30 lakhs includes 5 lakhs of cement purchased from unregistered person, over and above that 18% on 10 lakhs, on this 5 lakhs you have to pay another 28%.
Only 18 plus one more 28.
Yes. That is 18. That on the shortfall it is 18. If cement is purchased from unregistered person, it will be 28% on that.
So I would end up paying, ask you for 30.
No, come back again. Let me get clarity.
Because for 30 lakhs,
Maybe you can take the mics.
because
For 30 lakhs, anyway I need to pay 18%.
Yes.
In addition to that,
In addition to that, the differential has to be paid. When it comes to the question of cement, 18 lakhs, you have already paid the 30 lakhs. So additional 10% has to be paid for the cement alone.
For the capital goods, anyway, the relevant HSN classification.
Yes.
Right.
Yes.
For the purpose of 80% calculation, should we take only the direct cost or indirect cost also?
All costs have to be taken. Apportionment also should be done.
Even telephone bill also, for example.
Yes. But that will help you because all telephones are registered persons. Yes, it has to be taken.
Just take.
Yes. Interest also. Interest.
no,
We will take a call on interest.
no, interest is not a project.
No, let us say, we will examine it. See, interest is exempted from GST. There is a levy of GST on interest, but it is exempted by way of a notification. So we are receiving the services from the banks by way of taking loans and other things, which is a supply of service, but that supply of service is exempted from payment of tax. It is exempted from payment of tax. It cannot be compared with the salary expenses because the employee services to employer is totally outside the GST net. It comes under Schedule 3. But as far as interest is concerned, it is a supply which is prima facie leviable to GST but exempted by way of a notification. So I feel interest cost also should be taken into account for the purpose of project cost. You feel otherwise, sir?
Yes.
It should.
Actually, interest cannot form a part of the project cost. It's a finance cost.
See, As per the costing principles, it may be, but the wordings used here, the wordings used.
In that case, is there any definition or elaboration on the
Yes,
procurement?
elaboration is there. The notification says all inputs and input services procured by the promoter, it should be 80% from registered person. This is an input service procured from a bank. It's a service procured from the bank. So that also will have to be taken into account. This is my prima facie view. We will examine it further. I think it has to be included.
But normally all the consultants, they ignore that. They don't take it.
But again, most of the time interest will be from organized sector who are registered. So by including it, we are only getting benefited. So we will be able to satisfy the 80%. But I think it has to be included. Anyway, we will examine.
On one of the department circular, they have said exempted supply is considered as a supply received from an unregistered person. So whether the interest received from a bank, we want to consider it as a supply received from a registered person? Or?
Once the bank is registered, they don't say you have to procure 80% on payment of GST. Payment of GST is not the condition. The only thing is the supplier should be registered. Once the bank is registered, that is sufficient. There will be no GST on interest, so that is not relevant.
But one of the circulars they have mentioned exempted supply should be treated as a supply received from unregistered.
No, that is not correct. That is not correct.
Sir, if the contracting supplies cement and steel,
then that is not relevant. Then the scope of supply by the builder is excluding cement. So let us say you are giving a contract to me with the cement. I am charging 1 crore. Suppose if you are going to supply cement to me, then the contract value will be reduced. My contract will be only for 80 lakhs. So the compliance requirement, if at all, it will be only with reference to that 18 lakhs. Whatever is the consideration payable by the to the supply, that alone is relevant. Will you proceed? So these are all the conditions coming along with that 5%, which makes the compliance little difficult. Yes, sir. Yes. They don't make any distinction like that.
so but 5% and this 18% with input tax is an option still existing?
No. That option is only for the ongoing project as on 1/4/2019. Any new project starting after 1/4/2019, it is only 5% without ITC. With ITC 18%, there is no option available. So what will the department do? Suppose if somebody is taking ITC and paying, so they will safely deny the entire credit and they will demand once again 5% in cash. So that is not advisable at all. That option is not available. In fact, there is a clear explanation in the notification which says if you are covered by that 5%, if you are eligible to pay under 5%, you have to pay only under 5%, you cannot pay under 18%. So that is very clear.
So, government buildings and educational institutions, are they available for concessional rate of GST of 10%?
See, this 5%, what we are talking about is only for construction of residential apartments. Any other building, whether it is a commercial building, earlier it was 18%. For government constructions, in between they reduced it to 12%, and again from last year it was enhanced once again to 18%. So whatever we are talking about now is 5%, ITC, 80% from registered person, all these are only with reference to residential construction, apartment. If it is any other building, there is not much of confusion at all. The rate will be 18%. If it is along with the land, for example, I am constructing a big commercial complex, I am selling each and every shop to various buyers, then the builder is eligible to take all ITC, the rate of tax will be 18% on 2/3 value. Or I am the owner of the land, I want to construct a big commercial building in my land, I engage a contractor. So the contractor will charge 18% on me, he will be taking all eligible ITC. So there is no confusion at all. This 5% rate which we are talking about, it is only for residential apartments and villas.
The residential building, the builder engages the contractor and that contractor charges 18%. On his output supply it will be 5% without ITC.
Whose output supply? Builder.
Builder.
Yes.
When he sells the project.
Yes.
Units. Now the differential amount or 18% amount, he has to take it as a cost or he can apply for refund from the government.
No refund at all, it has to be absorbed as cost only. No refund will be required.
Sir, I don't know if you're covering this data, but the aspect of consideration received before CC obtained. If you are covering it a lot.
Let us see. I think it will be there. If not, you can ask finally. Yes.
Statutory corporations like Tamil Nadu Police Office Corporation, is it government body or not government?
See, there is two words are used in the notification. One is governmental authority, government entity. So two terms were used and two terms were defined also. So 90% of the share should be held with the government, control should be with the government, and they should be doing some municipal function like that. There are definitions. But all that requirement has now gone. From last year, January 2022, even if you are doing it for a government organization, the rate is going to be the same. So any government construction, earlier they give a 12% concessional rate, in some cases 5%. All that has now been withdrawn. So now any government construction, any government building and all, if it is residential, we have to go by this 5%, or any other office building, or any other, even a shopping complex, municipality is constructing, all that will be 18%. Now, this is the yes, that amendment to notification 11 of 2017, serial number 3, the lengthiest serial number, there will be so many subclauses in it. We will just take one subclause from it to understand how the rate of tax is specified for the real estate sector. For example, it is 3 subclass 1A. It reads like this: construction of residential apartment other than affordable residential apartment by a promoter in an RREP. RREP is a residential real estate project. Another term is REP, that is a real estate project. The difference between these two is, in a project, there may be some commercial area. It may be primarily a residential project, but there may be a shopping complex which are classified as a commercial area. If the commercial area in the project is less than 15% of the total area, then the entire project will be treated as a residential real estate project. If the commercial area is below 15% of the total area. If the commercial area is more than 15%, it will be treated as a real estate project. REP, RREP. So, in an RREP, construction of residential apartment which commences on or after 1st April 2019. That is any new project starting after 1st April 2019, or in an ongoing RREP in respect of which the promoter has not exercised the option to pay. What does it mean is, it may be an ongoing project as on 1/4/2019, but the promoter has opted for the new rate, who has not opted for the old rate. Then, as the case may be, in the manner prescribed therein, intended for sale to a buyer, wholly or partly. So the complex which is being constructed, it should be intended for sale. If it is not intended for sale, at least one of that apartment, this is one condition which will pose lot of problems in interpretation. Suppose in case of a reconstruction project, where there is no additional sales involved, there are 100 existing owners, they are going to demolish everything and construct again another 100 apartments for the same owners. Not even one apartment is going to be sold to outside parties. Technically speaking, this entry will not be applicable, because at least partly it should be intended for sale. Then alone this rate can be applied, except where the entire consideration has been received after issuance of completion certificate. So, if entire amount is received after completion certificate, then it is not at all liable to GST. So, in all other cases, this is how the rate of tax is prescribed. So, the rate of tax is 3.75%. This is the central notification 3.75, same similar state notification 3.75, put together 7.5. Now, there is a clause under that entry, provisions of paragraph 2 of this notification shall apply for valuation of this service. So, what is that para 2? That para 2 says, this is where that 1/3 deduction is being given. So, you have to read together serial number 3 read with para 2. The para 2 says, in case of supply of services specified in column 3, in item numbers 1, 1A what we have seen, etc., etc., against serial number 3 of the table above, involving transfer of land or undivided share of the land, as the case may be, the value of supply shall be equivalent to total amount charged for such supply less the value of transfer of land or undivided share of the land, and the value of that land or UDS will be deemed to be 1/3. Deemed to be 1/3. I will explain it further. As a buyer, I am going to a builder. I purchase an apartment. He says square feet 10,000 rupees. So that square feet is again as per RERA, carpet area, plinth area, lot of confusions will be there. So the total price is coming to, let us say, 1 crore. I am going to pay 1 crore to the builder to purchase an apartment. So out of the total amount, it includes value of land also. Especially in states like Tamil Nadu, we discussed in the morning also, we follow dual agreement model. We register the undivided share of the land for a particular value. For the remaining value, we enter into a construction agreement. So in this particular case, the sale deed for UDS will be based on the guideline value. Market value and guideline value, there will be a huge difference. So if it is a 1 crore apartment, let us assume 10 lakhs is the value of the UDS. So the sale deed for UDS will be for 10 lakhs. Construction agreement will be for 90 lakhs. So morning, sir was asking, why in Tamil Nadu, in many places, any apartment sold after getting completion certificate, it will be only a single document. It will be a sale deed for land as well as the structure thereon. UDS as well as the structure thereon. But in Tamil Nadu, it's the worst part of it. The registration department has issued a circular saying that even after getting completion certificate, you are permitted to do dual agreement. It's a very strange, but the reason is obvious. Morning we were discussing about the reason. The reason is obvious. If it is a sale deed for UDS, the stamp duty will be 11%. If it is a construction agreement, the stamp duty will be 2%. So this is a big lobbying which is going on, which has made it possible. Yes, sir.
So they have recently withdrawn.
2%. Now recently it was 4%. Earlier it was 2%.
No, sir, they have withdrawn the circular very recently.
Again it is 2%.
No, now it is full, sir.
Full?
Yeah.
Oh, I am not aware. 11%.
Still not implemented.
Okay.
9 only.
9 only, not that 2. Yes.
9 plus 2 was 11.
So that was the reason the lobby was so strong that they continued with it. At least let the better sense prevail now, so that this dual agreement will be done away with, and we will also see. The problem is each state, the construction industry, their business practice differs from one state to another based on the registration law, stamp duty.
Excuse me, what they are telling, now the government has withdrawn their system, now they are going to adopt what the neighbor states are adopting. Actually, once the CC is issued, then we have to make the registration for the entire value at the rate of 9%. 9%. Recently it has been implemented. Now we are fighting for it.
The notification has not yet come. It was announced only. Notification has not come.
No, it has been done. They are not
implemented.
No. They are not allowing to execute the CC.
Sir, it depends on register to register.
Oh.
So still but not fully implemented.
For CC obtained case.
CC obtained case.
So, state to state the practices differ, but unfortunately GST being drafted at Delhi, they don't see the differences between the different states and they come out with one particular law, which is creating all these problems. That is what the root cause of the problem. They don't understand the field realities. So in Maharashtra the model is different. The buyer will never get the ownership of the land. The land will be owned commonly by the society or the association. Whereas here in Tamil Nadu and all, each buyer will get a share of the UDS. So there is no uniformity as far as different states are concerned, whereas GST law is being implemented uniformly. So now this 1/3 is allowed as a deduction. On the remaining 2/3, the rate of tax is going to be 7.5%, which will come to 5%. So in this context, this is the para which says the land value can be excluded. So here one big question was, wherever the actual sale deed land value is going to be less than 1/3 of the total price, we are very happy because GST law allows, in my example, 1 crore is the total price. We are registering the UDS only for 10 lakhs. But GST law allows 33 lakhs can be deducted towards land value and GST is payable only on the remaining 67 lakhs. And this is where the problem has come. In Gujarat High Court, even though this judgment was a beneficial judgment, in that case what has happened, it is a very big land of some 5,000 square meter. There they were constructing one single bangla. There the land value was huge. but the notification has allowed only 1/3 deduction. So the party went to High Court. In my case, the land value is almost 60 to 65% of the total price. How can you charge GST on 67% including the land value? So it is a very nice argument and what a favorable order. So once the land value, there is a document and that document has to be honored. You cannot impose that 1/3 condition. So, but if you apply the same yardstick to various projects where the land value is actually less than 1/3, the department, there is a potential danger in it. So where if you buy some suburban area, maybe heart of the city, Nungambakam, the land value may be more than 1/3. But if you go little out there, the land value will be less than 1/3. The sale deed value for the UDS will be less than 1/3. There is a danger the department may come and say, since the land value is only 10 lakhs in your case, I will allow you to deduct only 10 lakhs. On the remaining 90 lakhs, you have to pay the tax. This may come at any point of time. But we have to contest once the notification, this High Court, they have not struck down this condition. They have not said this condition is bad and they have not struck down. They only said that wherever the land value is not available, by way of an option, you can give it to the builder. The builder, they can go for 1/3. But the danger is, wherever separate land value can be identified. In Tamil Nadu, it can be identified. We have a sale deed for UDS. If that is less than 1/3, whether still 1/3 deduction can be claimed or not. In my view, still it can be claimed because it is allowed by the notification. It is an option. A builder can very well choose. But the department may say that only if you follow the Maharashtra model, where there is no land value available, then only you can go for 1/3 deduction. In your case, you are having the land value, so I will give only actual. So that danger is still there because of this particular judgment. Now, both the yes, sir.
This judgment you mentioned it is in the case of a construction of a building.
Construction of a single bungalow.
Single bungalow. Then where is this 1/3 rational applies? It will not apply at all.
See,
it will be a works contract.
No, you are right if the land is owned by the client and the contractor is engaged only for construction. But in that case, bungalow along with the land is provided by the developer. That is how. It's a big villa project where along with the land it was purchased. You are right. If I own the land, I engage a builder, then it is only 18%. All this confusion will not come at all.
No, even in that, if I am making constructing a plot on the land that belongs to me, there is no GST at all. It's a residential building. Where is the question of what contract will apply? It will never apply.
By selling a land and building.
No. Only when there is a sale of a part of the land as well as the building, only all these things will come. That is the reason why when you go to the definition, it is really misleading. Building or buildings.
Yes.
That is, so when there is no plurality, I am constructing a building on my own plot.
By engaging a contractor.
Contractor. Residential building. There cannot be any GST at all.
No, sir. That is not like that. The contractor engaged by you will buy lot of materials. He will put his labor. So he is providing the service of construction to you.
There is a specific exemption in the case of residential building.
Single residential unit, I am coming to that. Single residential unit, there was an exemption which was withdrawn recently.
Has it been?
Recently it was withdrawn.
Sir, only a labor was exempt now, only labor contract is exempt.
Pure labor, that is,
pure labor
if you are owner of the land, you purchase all the material and give only labor contract, then it is an exemption. But if you are giving a contract with material, even if it is a single residential unit, the builder is providing construction service to you, which is in the nature of a works contract, that is also leviable to GST. Even that the labor exemption which was available, that has been withdrawn recently. So even single apartment, but if you yourself go to market, engage small laborers and do everything on your own, then there is no question, but that is not practical. So even in case of a single residential construction, if you are engaging the services of a contractor, the contractor becomes the supplier, he is supplying a service to you, so he is liable to GST.
Supposing he is an unregistered contractor.
He cannot be. If his turnover, total turnover is below 20 lakhs, he will be unregistered. Still, if it is more than 20 lakhs, he is supposed to take registration.
So we will cross the bridge when we come near that, because when I am an individual house owner, I would not like to bear the burden of GST on the contract or a worse contract.
Nobody would like to.
No. It is against the rationale. So, that can be, will the individual landowner or the house owner has to remit the tax under reverse charge?
No, there is no reverse charge.
Then we will see.
Only the builder has to pay. Only the builder. See, being a consumption tax, all the burden will ultimately come only on the consumer only. Not only in construction, even if you purchase a car, so many people will pay tax, everybody will take ITC. Finally, when you buy the car, the burden is on you. So ultimately it is the consumer who has to bear it.
Consumption based tax. Okay.
Now this is the particular judgment. It may be good for some, but it may not be good for others where the land value is actually below 1 third.
Sir, is it retrospectively applicable?
See, any judgment of a high court, it will have applicability only within the state. But the other state, if there is no contrary judgment, by and large it has to be followed. If somebody is not following, they have to give some reasons. Or our high court should have taken a different view. So it will have some persuasive value. It cannot have a completely binding value, but again, this is a central notification which has been interpreted. We cannot have a different view for Gujarat and another view for Tamil Nadu. There has to be a uniformity. So this judgment will be applicable. We can definitely plead. When we are arguing a case, if we want to rely upon the judgment, we can definitely argue. But at the same time, if in your case, if the judgment is going to affect you, where the actual value is less than 1 third, we can say that that judgment will not have an application and we may have to wait for a judgment from our jurisdiction of High Court.
My question was, is it retrospectively made applicable? Like, not...
See, in the sense, it is an interpretation given to the notification. This interpretation will have retrospective effect also if the proceedings are live. In the sense, if somebody has paid higher taxes by getting only 1 third deduction, actually the value is more than 1 third, they got only 1 third. By applying the logic of this judgment, they can claim refund if it is within 2 years period. These are all legal things, but practically nothing will happen. He would have already collected the tax from the customer. Even if he claims refund, he will not get. Customer can go, but technically speaking, legally speaking, this judgment can be applied retrospectively also. But practically, what is that we are going to achieve? Other way, if the department is going to now, in Tamil Nadu there is a project where the land value is below 1 third. The department may raise a demand notice. They will not specifically say, I am issuing the demand notice based on this judgment. They will not quote the judgment. But by taking cue from this judgment, they may issue the demand. That way, it is a retrospective also.
So now the builder has developed, say, 10 units. Can the customer say, like, for my unit, you charge it this way, or the other 9 units, you will do 1 third deduction? Can it be done?
No, come again.
So the builder has developed 10 units. Okay. So as a practice, so the builder has developed 10 units. As a practice, he is taking 1 third deduction and paying on 2 thirds. But one of the customers says, no, this judgment is there. I want to pay it only on the construction agreement, not on that. Can he do that?
See, if he does that, definitely there will be a problem for the builder. At least one will be questioned. The department will say either this is right or that is right. They will take the stand which is beneficial for the department. If the tax amount is going to be less in this particular case, where in this particular buyer's case, definitely the builder will have a problem from the department. He has to justify which is correct. We have to take one stand. Either this or that. We cannot have a cake and eat it too. We cannot take a dual stand. Any one stand he has to follow.
Thank you.
Now, another major problematic area under the real estate sector is this joint development agreement. There are a lot of unanswered questions, lot of clarity is missing. So now, in a joint development agreement, landowner will be different and builder will be different. Both of them will enter into an agreement. You call it as JDA or JV or whatever it is, and the total apartments will be constructed. A portion of it will go to the developer, which he will market it. A portion of the apartment will go to the landowner. This is a typical joint venture. In this transaction, there is an element of service provided by the developer to his flat buyer. Let us take a simple example. Under JV, 10 apartments are constructed. 5 apartments for the landowner and 5 apartments for the builder. So, when the builder sells his 5 apartment, the builder is providing a service to the flat buyers. So, that is one transaction which is relevant for the purpose of GST. That is, the services provided by the developer to his buyers. That is one aspect which we have to be concerned. The second aspect of the transaction is the buyer, the developer is constructing another 5 apartments in the same complex and giving it to the landowner. The landowner will not give any money, but they will surrender 50% of their UDS. So by surrendering 50% of their UDS, they will get 5 apartments. So the builder is providing same construction service of 5 apartments to the landowner. So that is another aspect which is relevant for the purpose of GST. That is, the developer providing service to the flat buyer, the developer providing service to the landowner. Apart from that, there is also a third dimension. We will come to that little later. So these are the 2 areas where GST is relevant. So in this context, there is one judgment by the SISTAT Hyderabad bench that is called the Vasanta Green project. It was under service tax. So what happens in a typical JV? I am a builder, I go to a landowner, we enter into a JV, 10 apartments are going to be constructed. The landowner will not spend any money. They will just, now the landowner is the owner of the entire land. He will say, I will surrender 50% of my land, you construct 10 apartments, you sell 10 apartments, you take the money and give me 5 apartments. This is how any typical JV works. So all calculations, percentage, ratio, everything will be taken into account. So when I sell my 5 apartments, I am the builder, each apartment I am selling for 1 crore, let us assume. I get 5 crore out of the project. The builder's total income from this project is 5 crore. In that same 5 crore, I have to construct and give 5 apartments to the landowner also. I will not get any money. So indirectly, the buyers are paying for the landowner flat. While fixing the sale price of the apartment, any builder will take into account how much cost he has to incur for the landowner construction also. So this 1 crore charged from my buyer indirectly includes the value of the apartment constructed for the landowner also. Once I pay service tax for my 5 flat, once I pay service tax for all my 5 flat, I don't have to pay once again for the landowner flat. This is the ratio of this particular judgment. But unfortunately, this judgment does not discuss the issue in much detail. There are still lot of grey areas and still there are manners in this judgment can easily be overcome in the Supreme Court. I don't know whether this judgment will survive in the Supreme Court. Even though the logic is very good, there is not much of discussion. So the logic is, what the builder is getting out of this project? 5 crore. He is paying service tax on the entire 5 crore. Why do you ask him to pay once again for the landowner flat? That cost is also inbuilt in the flat sold. That is the logic, very sound logic. But unfortunately, it has not been justified legally. So how far we can argue on the basis of the judgment, I have my own doubts. So what will happen? So there will be counter questions. Let us say the builder, he has not paid any GST on the 5 apartments because he is selling all the 5 flat after completion. He is selling his share of the 5 flat after getting CC. So he will not pay any GST on the 5 flat, on the 5 crore. Then what will happen to the judgment? That is one thing. He sold only 3 flats before CC, 2 flats after CC. Then how this judgment can be applied? There is no answer. And if he is getting 5 crore from the buyers, he is not going to pay GST on the entire 5 crore. He is going to reduce 1/3 towards the land value. It is not that the entire 5 crore is suffering GST. It is only 2/3. Then how this judgment can be applied? So these are all the issues which is still looming around. So even though it is a beneficial judgment, which has said for the flats given to the landowner, you don't have to pay any service tax. Same logic we can argue under GST also. But unfortunately, this judgment does not answer various other aspects associated with it. So my advice will be, It is, don't rely on this particular judgment, because in landowner JV today, most of the JVs are struck only because of GST. So the first problem which the builder and landowner has to discuss is about who is going to pay GST, who is going to bear that burden, and what rate it will be calculated, and how the value has to be arrived at. This is the first point any JV, the builder and landowner has to discuss and put it in writing. Otherwise, you will end up in problem later. So, even though this judgment is there, how far this judgment will help in case of the joint venture is little doubtful. With due respect to the authority who has given the judgment, there are a lot of areas which are not answered in this particular judgment.
Sir, I will just talk with these and I will ask a question. Now, in case of JDA between landowner and the builder, what will be the position of GST on the 5 flats landowner's portion, 5 flats builder's portion? Before completion certificate, he gives 5 to landowner and then 5 to individual buyers. First scenario. Second scenario, after getting the certificate, he gives constructed area and then he sells to individual buyers after getting a certificate. And third scenario, 3 before complete certificate, 2 after complete certificate. What will be the GST?
Yes, very relevant question. As far as the developer's share of 5 flats are concerned, if it is sold before CC, 5% GST. If it is sold after CC, no GST. That is very clear. When it comes to the 5 flats handed over to the landowner, normally it will be handed over only after completion. Before completion, we cannot hand it over after completion. But we cannot adopt the same argument here. Why? Because why there is no GST on sale after completion? It becomes a sale of an immovable property because there is no buyer. The buyer is absent. We don't know who is the buyer. We construct on our own. And finally, when the buyer comes, the building is already complete. So it is a transaction of sale of building. But between the landowner and the developer, they are together from day one. It is a service agreement. The joint venture agreement is a typical works contract agreement. The builder agrees to give 5 flats to the landowner. The construction is happening before the eyes of the landowner. So it is clear works contract is happening, clear service is happening. So as far as the landowner share is concerned, GST is payable. Before completion, after completion, all those things are not at all relevant for the flats given to the landowner. GST will be payable. The builder's share of the apartment, if it is sold before CC, 5% GST has to be collected and paid. If it is not sold before CC, GST will not be applicable. But for landowner flat, there is no such a distinction. It's clear?
Landowner flat at what rate? 5% or 18%?
I'll come to that. There are more big questions. I'll come to that.
In the case of joint venture, where he is not a mic, please use the mic. Everybody. Yes, yes.
No, this is audible. Only there it was not audible.
No, it's audible to you. We
Oh,
want others also so that they will not repeat the same question.
In the case of a joint venture where he is not getting the flats, instead of that he is getting money in terms of the agreed ratio.
Yes.
In such a case, GST is applicable for the landowners.
I'll come to that. It is there in my subsequent slides. I'll come to that.
From what price we have to arrive for the landowners?
I am coming to that.
Another point, that is when we have to pay the.
Yes, yes. All that is coming.
Any other questions before Sam proceeds? So that everything, yeah.
When we say development, more of the landowner gives the right to construct. So if there is unless there is a transfer of entire ownership per se, so is there any undertaking, is there any service, is there any in some way whether the owner of the land is getting any trouble from the GST?
Yes, yes. That is called a TDR, transfer of development right. We'll come to that. Now, this joint development agreement, the question is, first we have decided the flats given to the landowner, GST is payable. Whether we hand over before completion or after completion, all that doesn't matter. Tax has to be paid for the flats given to the landowner. When it has to be paid? For that, till 25/1/2018, there was no answer. The law is silent on that particular aspect. So we have to go to the time of supply provisions. The time of supply says whenever you raise an invoice or whenever you provide the service or when you receive the consideration, tax is payable. So here what is the consideration? The builder is constructing 5 apartments to the landowner. In turn, what he is getting, the builder is getting right to sell 50% of the land to his buyer. So 50% of the land will be surrendered by the landowner. The developer will get the right to sell it to his buyer. That is one consideration. Second, the landowner is giving the right of development to the builder. That is what you are mentioning. So the development right, I am the owner of a land. I have so many rights. I have a bundle of rights. I can sleep on the land. I can grow crops on the land. I can construct a building on the land. So there is a bundle of rights. So I can develop that land. That is also one of the rights. So I am giving the right of development to the builder. This is a service provided by the landowner to the builder. So that is the consideration. So once that consideration is received, tax has to be paid. That was the position up to 25/1/2018. But it was very difficult to determine how to determine the value and all that. So on 25/1/2018, a notification was issued. They said you have to pay GST for the flats given to the landowner at the time when you are conveying the apartments to the landowner through any document. It may be a conveyance deed or it may be a simple allotment letter. So when you hand over the apartment to that landowner, at that time you have to pay the tax. This was notification 4/2018 dated 25/1/2018. This only prescribed the time at which tax has to be paid. We cannot argue only after this notification I am liable to pay the tax. Liability to pay the tax is there from the beginning. When it has to be paid, it came to be prescribed for the first time only with effect from 25/1/2018. Before that, it is based on the general time of supply provisions. Then, this was again amended. When lot of amendments happened from 1/4/2019, this was also amended from 1/4/2019. They changed it to at the time of getting completion certificate. So the GST for the landowner flat has to be paid by the developer at the time of getting completion certificate. What if completion certificate is not required? Completion certificate is not required in all the cases. Maybe in some rural area completion certificate is not required. For some smaller project completion certificate is not required. For that at the time of first occupation of the complex. So whichever is earlier. Either completion certificate or at the time of first occupation of the complex, the tax has to be paid by the developer for the landowner flat. For the developer's flat, as and when he get money from the buyer, he has to pay. If he is not booking the apartment, any unsold apartment, he is selling it after CC, no GST. But for the landowner apartment, it may be 5 apartment to landowner, or if it is a big project, 500 apartment to the landowner. For all 500 apartment, GST has to be paid by the developer at the time of getting the completion certificate. What the landowner will do with the flat? He may retain it, he may rent it out, he may sell it. He may sell before CC, he may sell after CC. All probabilities are possible. So what will be the treatment in the hands of the landowner? We will see later. So now we are concerned with the builder. So the builder is liable to pay GST for the flats given to the landowner at the time of getting CC for the project, or once the project is occupied by one resident, at that time it has to be paid. So when it has to be paid, the answer is there in notification 4/2018 for the period up to 31/3/2019. Any JV agreement entered after 1/4/2019, we have to go by notification 6/2019 at the time of CC. So till now it is fine.
On what value, sir?
I am coming to that.
So the project is registered, CC is applied, but then still the first occupation has happened.
Yeah.
In that case, will I take first occupation?
Whichever is earlier.
Okay.
Whichever is earlier.
So it is not that where the CC is not.
It is only CC. No. The wording is not like that. The wording is either getting CC or first occupation, whichever is earlier. There may be cases where CC is not required. Then it will be only first occupation. Okay. There may be a case where CC is required, but still if the occupation is before CC, occupation will be liable.
So it
shall be either collected or it shall be paid by the promoter.
That depends upon the agreement between the landowner. The law doesn't say anything. We have to go by the agreement. Yes. Now, at least one question is answered when the tax is payable. Now, what is the value? Because the landowner is not giving any money, he is just getting for 5 apartments, but he surrenders 50% of the land. That is the consideration. So, ideally, the value of land pertaining to the builder's share of the apartment, that is the consideration I am getting. As a builder, what I am getting from the landowner, I get 50% UDS, which I sell to my buyer. So the value of the 50% UDS should have been ideally the value. But unfortunately that is not the case. In fact, this problem is there from service tax period. We have argued. We had one famous case of LCS city makers also, where the tribunal also did not accept. So ideally it should have been the value of the land which the developer is getting, but that is not the case. The answer lies in para 2A of notification 11/2017. So notification 11/2017, which prescribes the rate of GST, in para 2A it says like this: where a registered person transfers development right or FSI or to a promoter against consideration. What is that consideration? Wholly or partly in the form of construction of apartment. So here the landowner is transferring the development right and the consideration is in the form of apartments. Then the value of construction service in respect of such apartment shall be deemed to be the value of construction service provided by the developer to the landowner. I am putting my words into it for better understanding. The notification says the value in the form of a promoter against consideration, wholly or partly, in the form of construction of apartment, the value of construction service in respect of such apartment shall be deemed to be equal to total amount charged for similar apartments in the project from the independent buyers other than the person transferring the development right nearest to the date on which such development right or FSI is transferred to the promoter, less the value of transfer of land. I may try to make it simple. So this para says nearest to the date on which the development right is transferred. When the development right is transferred, this is the JDA agreement, date of the JDA agreement. So nearest to the date of the JDA agreement means the first sale. In that project, if the developer has sold any of his share of the apartment, that first sale price has to be taken into account. Let us say the first sale is for 1 crore rupees. The developer is getting 5 apartments. He has sold the apartment. First sale is happening for 1 crore. That will be the value to be adopted for the landowner flat also. But that 1 crore is including land. Because when the developer is selling his share of the apartment, he will be selling it along with the land. But for the landowner, the developer is not giving any land. It is the landowner's land already owned by him. So his role is limited only to do the construction part of it. So the 1 crore charged includes land value also. So we have to exclude that land value. What is the land value? Again the notification says 1/3. So we have to take the first selling price, reduce 1/3 towards the land value, remaining 2/3 we have to apply for the landowner. I am having an example which will make it more clear. With the figures, with some examples, I am having a slide which will make this aspect more clear. So the second question, what is the value to be taken into account for the landowner? The answer is the first sale price which the developer has sold his share of the apartment. And that price includes land value also, reduce 1/3, take 2/3, apply the same price for that. Now, there are issues in that. Value of similar apartment. See, the sale price 1/3, 2/3 is very huge. If you go by cost of construction, even if you put the very finest material, the cost may be around 3,000 per square feet, not more than that. But if you go by 2/3 of the value, it will be very huge. Is there any way to reduce the liability? So one way is, if the apartment is not similar. For the buyers, I am putting Johnson fittings. For landowner, I am putting Grove fittings. So if we are able to justify the developer's share of the apartment is not similar to the landowner apartment. There are differences in the specifications. Then this para will not apply. If this para does not apply, we have to go to the valuation rule. Is there any flat in the neighborhood? You cannot compare apple with an orange. You cannot compare India builders with the Pushkar builders, even though both of them are doing in Shanti Colony. Specifications will differ. So we cannot go to a different builder than cost plus 10%. So cost of construction plus 10%. But if the apartment of developer's share and landowner share are same, we have to adopt only the sale price, first sale price of the builder. That is how the value has to be arrived at. Suppose this tax has to be paid at the time of getting CC. We have seen in the earlier slide. Till getting CC, the builder has not at all sold any of this apartment. In that situation also, this para 2A will not apply. There is no sale price available. Then what is the alternative? Can we go to the another neighborhood flat? No, both are not comparable at all. Then we may justify based on cost plus 10%. So if the sale price is not available, if the builder has not made even a single sale in the project, then para 2A cannot be applied. Maybe we can argue that we have to go to rule 30 or 31 of the rules and cost plus 10%. Cost of construction plus 10% may be an ideal situation. So the second question as far as JV is concerned is, first question, when it is payable. We have seen on what value it has to be paid. We have seen. The third question is at what rate it has to be paid. We have seen for construction of apartment the rate is only 5% now, that is 2/3, 7.5, which will effectively come to 5%. Whether the same rate can be adopted for the landowner also. Here there is a divergence of opinion. Nobody can say which is right, which is wrong. In the beginning, in 2019 and all, I was of the firm belief that this 5% cannot be applied to the landowner. For the landowner, it has to be 18% with ITC. But practically, it becomes unworkable. None of the joint ventures, we cannot convince the landowner that the rate of tax is 18%. Even though we say, I will get lot of ITC, effectively it will be less than 5% and all, lot of. So, we are forced to somehow justify 5% rate is applicable for the landowner flat also. If you ask me, why not this 5% be applied to the landowner also? Maybe we can argue that it is applicable. The concern is, we have seen serial number 31A. Serial number 31A, which prescribes that 7.5% rate, it said the provisions of para 2 should be followed. What is para 2? Para 2 says the price should be inclusive of the land value also. But when we do the construction for the landowner, we are not, the builder is not giving any land to the landowner. The land is already owned by the landowner. We are only a contractor. The role of the promoter or builder or developer to the landowner is nothing better than that of a contractor. He is not transferring the land. For contractor, we know only 18% is applicable. How can we take a different stand in a JV? This was my concern. But if you want me to argue that 5% is applicable for landowner, that also we can argue. So now, for academic purpose, there is no clarity on what is the rate to be adopted for the landowner flat. There is no clarity legally, no judgments or anything. So we have to justify. If we want to pay 18% and take ITC, so in our example, 5% for landowner, 5% for builder. For builder, it will be 5%, no ITC. If we take a stand that we will pay 18% for landowner flat, then to that extent ITC can be taken. 50% of the ITC can be taken and he will pay 18% on 2/3 value for the landowner flat also. This is one method. I will not say that this is an answer to the problem. This is one option available. The other option is, why can't I apply the same 7.5% rate even for the landowner? Let us read para 3.1a of notification 11/2017. It says, any complex, any building intended for sale, wholly or partly, at least the developer is selling his share of the flat. So the only thing is, we can argue at some 5% rate is applicable for landowner also. So honestly, I have to admit, if you ask me what is the rate, I don't have an answer. It can be argued either ways. depending upon the nature of the project, we have to take a call. If the landowner is adamant that I will pay only 5%, then legally we can justify 5% also. But if we do not want to take any risk of interpretation, litigation and all, we can agree for 18%. See, in this 18%, even if the department is going to come back and say, no, no, you should not have paid 18%, you should have paid 5%, then also we will be safe, because the ITC will be maximum some 7 to 8% only we will get ITC. The balance amount will be paid in cash. So that portion of cash payment will always be higher than 5%. So we can argue both ways. By taking a chance, by paying 18% with ITC, it will be a safer option. Even if the department comes back and says that you should have paid only 5%, we can answer, yes, my cash payment is more than 5%. Even if you assume that I have reversed the entire credit, I have paid more than 5% in cash, we can take the stand. But if we have paid 5%, the department will come and say, no, no, you should have paid 18%. But ITC you will not be eligible because time limit is over. 16.4 says only September or November, I will not give you any ITC, but I will demand. So this confusion still remains. So we have to take a call as professionals, what advice we are going to take, we have to take a proper call. But legally, both arguments are argued. It's a debatable argument. I will not say that I am saying 18% only, I am right. No. Both arguments are equally valuable arguments, only some court has to answer whichever is correct. So, landowner, when tax has to be paid, what value has to be adopted, what rate has to be applied. All questions have been answered. Yes, sir.
7.2%, not 5%. Don't set the option. You just need to add the value of land and then come to direct 1/3 and then apply 5%. We are so indirectly.
No, see, value we have decided. The builder has sold 1 crore, we have to take 2/3 of 1 crore. On that 2/3 of 1 crore, we have to charge the tax. You want to ask whether we can go for the cum duty calculation. That is what you are coming to ask? On that 2/3, it will be tax over and above. And that amount, the builder has to claim from the landowner. Whether the landowner will give it or not, that depends upon the agreement. JV, what it says. If the developer has agreed to bear it, he has to pay out of his pocket. So till now, 3 major questions as far as joint development agreement we have answered.
Sir, please visit the para 2A. 2A, back, go back.
Yes.
This starts with the where a registered person.
Yes.
The landowners are not registered persons.
Yes.
Then what will be the future?
That is also a grey area which is applicable, because most of the landowners are not registered. We can take up an argument saying that this para will apply only for registered if the landowner is registered. That's why I put it in red. I forgot to mention it. So if the landowner is not registered, this para itself will not apply. If this para does not apply, we have to go to the valuation rule. Rule says if value cannot be determined, the first choice is open market value. By open market value, we will come back to this one. At least if we go by 2A, it will be the first sale price. If we go to 27 rule, the rule does it, open market means the nearest time, that is nearest to CC, the last sale price, which may be higher. If the market is on a increasing trend, first sale price will be lower and current sale price may be higher. So it is, these are all various grey areas. As I have mentioned in the beginning, it can be argued you can apply this para only if the landowner is registered. If the landowner is not registered, this para is not applicable. Then you go back to rule. Rule says open market value. Open market value, again, it will boil down to sale price of the developer.
On the date of completion certificate.
On the date of completion, that is the difference.
Because you have to emphasize on that, because
yes,
for the landowners to determine the capital gains, the new section 5A talks about joint development agreement, wherein the consideration is the price on the date of completion certificate. So there cannot be 2 different parameters, one for the developer and one for the landowner. Kindly consider that and then give us.
that is what. If it is not a registered person, we can go out of this. Once you go out of this, we have to go to the rule. Rule takes open market value, then that will be nearest to the completion. Nearest to the completion. Then I was mentioning, in a joint development agreement, the owner, he parts with his land. He surrenders, let us say, 50% of the land. That is the consideration for the developer. Apart from that, is there a transfer of development right? This is one another most confusing aspect under real estate. See, this transfer of development right, if it is in the form of a certificate given by the government, see, I own a land near the highway, government acquires the land, they pay me compensation. Apart from compensation, they also give me a development certificate, which I can sell in the market. Then it becomes a commodity, on that GST can be levied. But the development right which is going along with the land, it is also part of the land. Once the sale of land is not liable to GST, any benefit arising out of the land should also not suffer GST. But unfortunately, the government is of the impression transfer of development right by the landowner in a JV is also liable to tax. But the bigger question is there a transfer of development right in a JV? If you ask me, I will say no. Because that transfer of development right is transferred along with the land. You cannot separate it. Wherever you can separate, like government issuing certificate, that will be liable. But in part of the JV, there is no transfer of development right. There is no GST on transfer of development right. That will be my view, which I will hope to argue and win at some point of time. But for today, according to government, there is a transfer of development right in all JV and there is a tax liability on that. Who has to pay that? How to value it? These are all the questions which we have to see now. So in a JV, according to the department, the landowner is transferring the development right. The landowner is also surrendering a portion of his land. So two things are flowing from the landowner. The landowner gives land, the landowner gives development right. In turn, the builder constructs some apartment and gives it to the landowner. So this is a transaction involving three activities. The developer constructing and giving apartment to the landowner, which we saw, it is liable to GST, when, what value, what rate, we have seen. Now, from the landowner point of view, the landowner surrenders 50% of the land, which will be registered in the name of the buyer. Whoever buys, it will be registered. There is no GST on that because it is sale of land. But the transfer of development right by the landowner is a transaction attracting GST. That is how the law, the department believes, the government believes, whether you believe or I believe, the department believes and tax is payable. Now, this transfer of development right is a supply by the landowner to the developer. The supplier is the landowner and developer is the recipient. So, from 1/4/2019, the tax liability on TDR, it is under reverse charge. The developer has to pay. But till 31/3/2019, the liability to pay GST on TDR is on the landowner. So the landowner cannot say I am not registered. He is supposed to register. He should have paid GST on the transfer of development right up to 31/3/2019. After 1/4/2019, the landowners are not liable. So it is a service by landowner to developer, transfer of development right. Who has to pay tax for it? The developer has to pay tax for it under reverse charge. Next, it may be a commercial project or it may be a residential project. So if it is a commercial project, there is no difference. It is under RCM, the builder has to pay. No doubt on that. If it is a residential project, there is an exemption available. The exemption is, to the extent the flats are GST paid, to the extent the builder pays GST on the apartments, to that extent he need not pay on TDR. In other words, only for the unsold flat, this GST on TDR has to be paid by the developer under RCM. Am I clear in my expressions?
You repeat this.
See, the transfer of development right is a service provided by landowner to developer. So the tax liability is ideally on the landowner. But from 1/4/2019, it is notified for reverse charge. So for the transfer of development right received by the developer has to pay GST under RCM. If the JV is for a commercial building, no doubt RCM will apply, the developer will pay for the entire TDR. How to value the TDR? We will come to that later. So the developer has to pay under RCM for a commercial project. Total value of TDR, he has to pay the tax. But for residential project, he need not have to pay GST on the entire value of TDR. He has to arrive at the proportionate value of TDR only for the unsold flat and pay only for that. Once you see the example, it will be more clear. Before going to that example, now the question is, what is the value of TDR? The JDA agreement will not mention any value for that. So value of TDR, there is no answer in law. The notification does not prescribe anything. Earlier we have seen para 2A. What para 2A said, the value of construction service will be equal to the similar value of apartments and all we have seen in para 2, and para 2A it referred to at what time it has to be paid and all that. Now we have to draw some inference to arrive at the value of the TDR. The notification does not say anything. So how to arrive at the value? See, I am the developer. I am constructing some apartment and giving it to the landowner. In turn, I get 50% UDS, which I can sell to my buyer. In turn, I also get a TDR. So I get two benefits from the landowner. In turn, I construct apartment for him. So from the value of apartment constructed by me and given to the landowner, if I reduce the value of the land received by me, the difference is the value of the TDR. Whose answer? It is Natarajan's answer. Nowhere it is said. So I have been advising how to arrive at the value of the TDR. See, I am getting two benefits from the landowner. One is TDR, one is land. In turn, I am giving constructed apartment to the landowner. We know the value of the apartment given to the landowner. From that, if you reduce the value of the land, the difference is the value of the TDR. Whether that is right or wrong, tomorrow the courts will agree or the department will agree, nobody knows. But in the given situation, where there is no guidance in the notification, this is the only method which we can follow. I will explain it now with the help of an example. Same 10 apartments, each apartments are 2000 square feet, 5 to landowner, 5 to builder. The builder sells the apartment at the rate of 10,000 per square feet. So each apartment is 2000 square feet, 2000 into 10,000, sale price is 1 crore. First sale, second sale, all price equal 1 crore. More and more complications we will not add to it. So the apartment is sold at the rate of 1 crore, 10,000 square feet into 2000 square feet. Now, the value of construction service provided to landowner. For the 5 apartments given to the landowner, the builder has to pay GST. We have seen how to arrive at the value of that particular apartment, 5 apartments given to the landowner. This is how. 5 apartment into each apartment square feet is 2000 uniform into 2000 square feet. 10,000 is the sale price. First sale price is 10,000. So 5 apartment into each apartment 2000 square feet into 10,000 selling price per square feet. That is the total price. Out of that we have to exclude the land value. Take only the 2/3. So into 2/3. So the value of 5 apartments given to the landowner is 6.67 crore. On that, the buyer has, developer has to pay GST. When he has to pay? At the time of getting CC. What is the value? 6.67 crore, 5 apartment. What is the rate to be adopted? Either 18% with ITC or 5% without ITC. So it is not 5% on 6.67. It will be 7.5% on, for the time being. Let us not get into that 18% confusion. We will, for the time being, agree, even for the landowner flat, 5% rate is applicable. So, at the rate of 7.5% on 6.67, the builder will charge GST and claim it from the landowner for the 5 flats. Now, what the builder has got? The builder has got 5 crore. Each apartment sold for 1 crore, 5 crore he will get. Out of that, 1/3 will be the land value. 3.33 crores is the land value. So, the value of apartments given to the landowner is 6.67 crore. Value of the land received from the landowner is 3.33. The remaining 3.33 is the value of TDR. This is purely based on logic. The notification does not say so, the act does not say so. So, as a builder, I have got 50% land. The value of the 50% land by applying 1/3 formula is 3.33. So, I have given 6.67 crore worth of apartment to the landowner. What is the difference? That difference is the value of the TDR. So, the TDR for the entire project, the value is 3.33 crores. That is column G, the total value of TDR. Now, there is an exemption. I have to pay GST. The developer has to pay GST on TDR under reverse charge mechanism. So, ideally, I have to pay GST on a value of 3.33 crores. But the notification says, if you have paid GST on any apartment, to that extent, you don't have to pay GST on TDR. So, let us assume my share of apartment 5. 4 apartments I have sold before CC. I have paid GST for 4 apartments. The 5 apartments given to the landowner also I have paid GST. Only for 1 apartment I am not going to pay GST. So, TDR liability is exempt as far as the 9 flats are concerned. The TDR liability under RCM is only for the 1 unsold flat. So, proportionately, if you take the value divided by 10 into 1, the value will be 33.33 and the rate is also 5%, they have specified. For commercial it is 18%, for residential. In other words, in case of a joint venture, the developer sells his share of the flat before CC, collect 5% GST from the buyer and pay. Whatever apartments are given to the landowner, adopt the same first sale price, charge 5% GST from the landowner. Any flat sold after CC, you cannot charge GST from the buyer, but you have to pay 5% GST by way of TDR, so that all the flats 5% GST is collected by the government. That is how the logic seems to be. No flat will escape from the liability. Even if you sell it after CC, you cannot collect GST from the buyer, but you pay from your pocket. That is by way of TDR. That is how the tax structure. I think at least some 50% I have made clear.
So, other than this, how government can come back and say that this is not correct? What could be the value they adopt? Will they adopt that the giving 1/3 exemption, 2/3 to pay the tax?
They may say that for construction service, para 2 we are mentioning about the value of TDR.
Yeah.
So the entire value of 6 crore, you are giving 6 crore worth of apartment. So the value of TDR is also 6 crore. Okay. The government may say so. But is it a fact? Are we getting only TDR? No, we are getting 50% land and selling it and taking the money. So that value should be reduced. But as of now, there is no clarity. The department may say you are giving 6.67 crore worth of apartment to the landowner. So that the value of TDR also should be equal to that. On 6.61 you have to pay. These are all potential areas where maybe after 5-10 years we will get some clarity through some judgment. Yes.
On 31st March to pay this amount. On 1st April you sell this flat. Whatever was unsold on 31st March is sold on 1st April. In which case are you ending up paying twice?
No, you got the CC on 31/3, no? So when you sell,
let us assume that comes only a month later, it comes in May or June. That takes long time. Let us see that. 31st March unsold you pay. 1st April I sell the flat. There is a buyer. I have offered some.
No. The liability to pay GST on TDR is also at the time of getting CC. Like a landowner flat, when you have to pay on TDR, that is also in the same notification, it says at the time of getting CC. So at the time of getting CC, you know how much is unsold. So there will be no question of double payment.
CC or first occupancy, sir?
Yes, same.
Right? Otherwise, I will not get the CC at all.
Yes, sir. No, because it is an input service, but he is a developer and he is under 5% rate, so he will not get any ITC.
But whether it is recognized as the idea is whether it goes into the project cost.
For the purpose of 80%, this will not go into it. There is a specific exclusion.
Yeah.
For the purpose of your 80% computation, the service of TDR is not taken into account.
Just clarify this. When the developer gets two benefits, one by way of land, the other one is activity on the land, development right on the land. So in the development right, whatever he gets from the landowner, why there is further segregation on sale of flats prior to CC, sale of flats after CC, that after CC only this TDR will apply, before CC TDR will not apply. Why
That is good only, no. They are giving exemption and they are asking us to pay only on unsold. It's good for us. Why should we complain? Otherwise, we have to pay for that 3.37 crores. If you exclude all other sold flats and all only for unsold, we are going to pay only on 10% value of that. So it is a beneficial provision.
But what is the intention of the government, sir? Why
That is what,
segregating it?
any flat sold, I should get 5%. Whether you sell before CC or after CC, whether you give to landowner, government should get 5%. That seems to be the intention.
The GST rate on TDR is 18% or 5%?
It is normally 18%. If it is commercial project, it is 18%. For residential alone, it is 5%.
For residential, the rate itself of 5% or it's
No. They have put it by way of a condition, says the GST amount shall not be in excess of 5% of the value. Like that they have put a wording. It's not by way of an exemption notification. It is by way of a condition.
If all the 5 are not sold and CC is the...
Then this 3.3 crore value will be 50%. 5 flats are given to the landowner. On that we are paying GST. For the remaining 5 unsold, we have to pay for TDR. So the value will become 50% of 3.3. If 2 flats are unsold, 3.3733 into 2 by 10. If 3 are unsold, 3 by 10. If 5 are unsold, 5 by 10. That's all.
Same thing extend to plotted development layout also, sir?
No. May not be. Because these are all specific only for construction, real estate projects, not for plotted development.
Real estate project include definition of
Yes,
plotted also. Section 2.
But here, these are all involving construction activities alone, this can be applied.
But are we covering the plotted now, sir?
So plot is also there. Time is already 150.
Yeah.
My landowner is unregistered. Okay, landowner tells me that I need to sell the flat, so developer selling the flat and block of flat.
I am coming to that next. This is where area sharing and revenue sharing. So if we are giving the flat to the landowner, whatever we have discussed, instead of giving the flat, the developer himself sells all the 10 flats, gives only money. Then the developer is not providing any construction service to the landowner. So earlier we have seen for the 5 flats given to the landowner, GST has to be paid by the developer. That will not be applicable. There will be no. So, but when all the 10 flats are sold, he will charge GST from the buyer. If it is sold before CC, if it is after CC, TDR will come. So all those things will remain unchanged in revenue sharing model. The only difference is no GST need to be collected from the landowner because we are not giving any flats to the landowner. That is the only difference between area sharing model and a revenue sharing model. Now, then the landowner is getting the flat. He may retain it, he may sell it after CC, he may also sell during construction. If he retain it, no problem. Whatever we have discussed so far, all that will apply. If he is going to sell after CC also, whatever we have discussed till now, no change, everything will apply. Suppose if the landowner sells his flat before obtaining CC, then the landowner becomes a developer. Landowner also becomes a developer, then he will also collect, he has to be registered, he will collect 5% GST from the buyer, he will become a service provider, he will become a supplier, he is liable to pay the tax. But here the catch is, the developer is, let us assume, our landowner in our case, sells after CC no problem, doesn't sell, retain everything no problem, but he is going to sell. Then he has to take a registration. So today he gets some advance from a buyer, he is liable to pay GST. Next month he collects, he will liable to collect GST. But for the landowner, the developer is the service provider. The developer will pay GST and collect it from the landowner only at the time of CC. But the landowner as a developer, he will be liable to collect GST as and when he receives any money. The notification allows ITC only for the landowner. Whenever the landowner is selling his share of the apartment before obtaining CC, he is eligible to take ITC of the GST charged from him by the developer. Normally for 5% rate ITC is not available. The only exception is if he is a landowner and if he is selling his share of the apartment before getting CC, then he is eligible to take ITC. But the practical problem is the developer will collect the GST from the landowner only at the time of getting CC, but the landowner will be liable to pay GST as and when he gets any amount. So what will happen? Initially all payment he will pay in cash and finally he will get ITC. What will he do with ITC? So for that they realized in 2021, they made an amendment. What they should have done, the landowner also should have been made liable to pay GST at the time of getting CC. Instead of that, they gave an option to the developer, you need not wait till getting CC. You can pay tax in advance also, which the developer will pay. So what they should have made is, they should have given the option of paying tax at the time of getting CC to the landowner. Instead, they gave an option to the developer to pay the tax in advance. I don't know which developer will agree. So as and when the landowner sells his share of the apartment, he can ask the developer also to issue invoice on him, take ITC and pay that amount. So this is where the landowner sells his share of the apartment before getting CC. And sale of plot, almost whatever we have discussed so far, by and large it will apply for sale of plot also, but there are certain cases where sale of plot, it may happen in different manners. We will take 2-3 examples in which the sales are happening. A is the owner of the land. A himself develops the plot and sells the same. He incur expenditure, he develop it and sale deed it for the whole price. Suppose one ground he is selling for 50 lakhs, sale deed is also for 50 lakhs and there is no additional amount is collected, then it is a sale of a developed plot. Sale of land is not liable to GST. There will be no GST liability in this particular example, where the owner himself develops and the total price, sale price of the apartment plot is captured in the sale deed. Then there will be no GST liability. There are some advance rulings also in this effect upon the Appellate Authority. There is one judgment which is against us, but that is by the Appellate Advance Ruling Authority. But Appellate authorities have held in Karnataka as well as in Goa, I think. No, only Karnataka, where sale of the plot, if the entire value is captured in the sale deed, whether it is sale of undeveloped plot or sale of a developed plot, it does not make any difference. Sale of land is not liable, it is not liable to GST. This is the first example. There is also a board circular clarifying to the same effect, 177/9. Now, second situation, A is the owner of the land. A himself develops the land, but there are two agreements. One is sale deed for the land and separate development agreement. In that case, on that development agreement, GST will be payable. It will be 18%. All ITC benefits will be given. So this is the second model where there are two agreements, one for sale deed, one for development. But the development is done by the owner himself, and GST is payable on the second agreement. And third, A is the owner of the land. He engages a contractor to do the development. He pays to the contractor, get it developed, and then sells. So the contractor is liable to pay GST. And again A, again we have to go back to the previous slide. If it is a single document, no GST between A and his buyer. If it is two document, on development he is liable to pay. And when a contractor is engaged for the development, the contractor is liable to charge 18% GST from the landowner. This is another situation. And here also joint venture is possible. Like in apartment, even in plotting area also, there can be a joint development agreement. Again, it may be an area sharing or a revenue sharing, and except that 5%. Here it is rates are only 18% because it is only a plot development. All other whatever we have discussed, area sharing, land sharing, all those are applicable under sale of plot also. This is an area sharing model. Whatever area the developer gets, he will be selling it. that is the consideration for the development work undertaken. So for that he is liable to pay GST. So suppose 50% area is for the developer. So 50% he will sell to various person. He cannot collect any GST from that person because he is selling only the land. But that total amount becomes the consideration for the development activity undertaken by him, on which he is liable to pay GST. He can collect it from the landowner. If it is a revenue sharing model, whatever amount he is getting in the project, that will be the consideration. On that he will be liable to pay 18%. So now we can understand what are all the challenges for the real estate sector under GST is denial of ITC. 5% without ITC, that adds up to the cost and creates all the confusion. And we have to keep accounts project wise. Each project we have to keep separate accounts, and we have to prove that 80% are from registered persons. And if it is pure residential project, no ITC. But if it is an REP, both commercial and residential, for the commercial segment we can take ITC and 18% will be payable for the residential segment, and then we have to follow proportionate reversal, rule 42, all those complications will come. And TDR is big confusion. Is there a TDR? Is it not part of the land? If TDR is there, how to value it? How to pay the tax on TDR? All these are adding to the confusion. And for landowners liability also, whether it is 18%, whether it is 5%, there is no clarity, and we have to take a call based on our understanding. So these are all the various challenges which are lying ahead day to day we have to face. So I think to some extent I have clarified all the issues relating to GST. I think is there a need for any separate question time? We can have it. Thank you.
A big round of applause to Natarajan sir. Thank you. Always, Rajamouli and GST department is competition to be creative and also keep everybody curious. Because A. Shankar is no more in the production or the, what is that, direction. Earlier we used to see Tamil movies, Shankar. I think I haven't come across any new movies of Shankar. No, Rajamouli took over that. Sir, Natarajan sir, you explained in detail about the minute aspects of the GST and the real estate. I am sure that members have got a clarity on the areas which they have to get a clarity. And still they are also got a clarity. This area there is no clarity by you also, from the public also, from the stakeholders also. When we don't have a clarity by ourselves, imagine the assessing officer sitting in front of you when they send a notice and come for the assessment. What would be the fate of the client file or a client case?
Assessing officer does not want you to be clear.
Okay.
He can make hay when you are not
clarity. And also, as we know that both are extreme. Assessing officer, you say, sir, enter revenue itself is a tax, sir. To that extent, they would be levying the taxes. And as we know that on the other side, the stakeholder, the landowner or the customers, then be the people who always look at the lowest part. Unfortunate thing about the indirect taxes. We all know that who is going to suffer from this is the end customer. End customer include you and me also, because we are also property buyers of any real estate. We are all silent about it. Only the builder, developer, of course, two professions, we are struggling to get a clarity from the government by way of representation. Always I say that it's a stakeholder, like the customers always should involve in terms of demand from the government for them to get a better benefit in terms of the indirect taxes, but they don't involve. As sir has mentioned that 18% always would have been a beneficial in terms of the taxation, in terms of the cash flow, because I am losing my cash flow of input tax. Under 18%, the old regime, I always used to accumulate my input tax credit that I used to adjust against the money collected from the customer. Maybe at the last, after I surpassing about 50-60% of my construction, my cash flows used to have the impact. Unless with the new regime, from the day one I end up with paying the 5%, collect and pay it. So that would be the another way to look at. But the market sentiment of 5% and 18% is something which adopted and accepted by the entire fraternity, including the small and medium builders. For them it's easy to sell at 5% when it compared to 18%. That would be the reality, sir. Wherever we go, that is what is the interaction. they don't mind instead of 100 rupees, make it 120 rupees as a base price. 100 plus 18, 180 used to be, but now it becomes 120 plus 5, it becomes 126 or 127. Still they are happy because it's only a 5%, that's how it looks at. Unfortunately, the community could not add up this input tax to the base price and able to sell it. That is what is the challenges also to this industry, sir. And also, sir, I would like to mention that, of course, the GST insists the project-based accounting. Already the concept which is inbuilt in RERA, RERA mandates the account to be maintained project-wise, whether the collection of money or the cost incurred or the accounts maintenance, everything is a project-wise. I am sure that even the tax collected, tax remitted also would be easy to maintain. So that way, like we should advise to our clients in terms of maintaining the accounts on the project-wise. And the members, you are all interacted well, and in the given time, sir has also completed the presentation. Thank you so much, sir. Thank you for accepting our invitation and being part with our members, and we'll involve you in the subsequent days to come in a bigger perspective, sir. On behalf of the SIRC of ICAI and on behalf of the members present here, a big round of applause to the staff today's session. A memento for a gesture of appreciation and love towards you. Thank you. Yeah, lunch is ready. We'll have the lunch. Now is 1:30. Can we assemble at between 2:15 or 2 o'clock? 2:15. 2:15. We'll assemble at 2:15 to have the second session.
Good afternoon and welcome back to the post-lunch session. The entire post-lunch session will be handled by CA Vineet Yagaraj and Advocate E. Subed sir. May I now request both of them to comment out by the dais, please. It's my privilege to introduce the afternoon session speakers. Let me introduce Vineet Yagaraj first. Vineet Yagaraj is a chartered accountant and a law graduate, founder partner at Messrs. Venu and Vijay Chartered Accountants, having 20 years of experience in business consulting, structuring and taxation. Presented business, taxation, technical papers and participated at various symposiums, forums. He is a regular speaker at various regional TV channels on financial matters, budget, etc. Has been working on the Real Estate Regulation and Development Act 2016 since the inception of the Act with the view to understand financial business impact of the Act on the organization and industry, helping promoters to implement the best practices under RERA. Traveled across the Indian states to deliberate, discuss, present technical papers on RERA, presented more than 250 technical sessions on RERA to industry associations, professionals, home buyers association, law universities and for public at large. He has contributing articles to KSCAA, Karnataka State Chartered Accountants Association, monthly journal on RERA, co-author of the book published by Taxman on Maharashtra RERA law, and a practice and written small books on various topics of RERA. Has served in technical committees of SIRC of ICAI, presently part of a governing council of NAREDCO, National Real Estate Development Council of Karnataka, and a part of taxation, liaison, funds and the project finance committee. He is also a trustee and volunteer in NELE Foundation, NGO to serve the destitute children. He is also financial consultant at RERA Consultants LLP, live in Bengaluru with the parents, wife Mrs. Sudisha, and the two sons, Shai Anirudh and Vivek Anurag. Coming to the introduction part of Advocate Suhail sir. He is the founder partner of the law firm Trial based in Bengaluru. Partner of the law firm Smriti Legal LLP, a law firm specializing in RERA litigation. Principal legal consultant for RERA Consultants LLP, a consultancy firm offering RERA related consultancy, advisory and compliances related services in Karnataka, Telangana, Andhra Pradesh, Kerala and Tamil Nadu. Practicing in the field of property laws, corporate laws and other civil laws, and having about 22 years of experience in the field of property laws. Former chairman of the legal committee and member of the core committee of National Real Estate Development Council Karnataka, former member anti-ragging committee and committee for stem cell research at the Jawaharlal Nehru Center for Advanced Scientific Research, Bengaluru. Contributed to the spread of awareness of the Real Estate Regulation and Development Act 2016 across all the southern states of Karnataka, Telangana, Andhra Pradesh, Kerala and Tamil Nadu. Has conducted workshops on RERA for Telangana Real Estate Regulatory Authority, CA Institute, CS Institute, NARED-PO Karnataka, Kurudal, Mysore and other chapters, Times of India, HDFC, Telangana Builders Federation, Institute of Engineers, Hyderabad. Has been practicing in the field of RERA since 2016 and represents, advises promoters, consumers and apartment owners association across all 5 southern states of India. He is a Rotarian for the past 14 years and a member of Rotary Raj Mahal Vilas, Bengaluru. With this brief, I have great pleasure in presenting before you Vineet Tyagaraja and Advocate E. Suhail sir to handle the entire post-lunch session. May I request Sasi Ranjan Babu to come forward and present a shawl to both the speakers as a token of our love and affection. Over to Vinay and Suhail sir.
Good afternoon, everyone. It's a pleasure for both of us to be here. So, unlike the 2 sessions that you've had in the morning, me and Vinay will do this jointly, which is how we've been doing. We call it the Jugalbandi of the finance and the legal. So we enjoyed it this way, and we've been doing this for the last 7 years. So in the first inaugural session, when the chief guest came, of course, he covered some of the vital aspects of the Real Estate Regulation and Development Act. Made our job easy also and difficult also, because he covered quite a few things under RERA. So while of course we'll take you through the introduction to RERA and also cover certain financial aspects of it, and also I will take you through some of the recent judgments in RERA which are relevant. So let's begin.
Yeah, very good afternoon. Sir, can you come this side? Good afternoon. Yes. Good afternoon, sir. Yeah, thank you, sir. Thank you. How many of you heard about RERA? Not heard. Read about RERA? Any provisions of the Act you read? Anybody? And made an attempt to read? Okay, good. 1. Another half, 1.5. Another half, 2, 2.5. Right? Okay, remaining? You must have heard about, read in the newspaper, right? Yeah. So, always I say that this is the one best piece of legislation, Act, in my 28 years of experience. So much in it, and however we professionals are not inclined to know more about it.
During my presentation, I will tell you how this is important, why this is important. Knowingly and unknowingly, we chartered accountants are ignoring it. Today morning, Sarva Kumar sir mentioned that chartered accountants play a very vital role in this real estate. Yes, how much vital role? Without chartered accountant, he cannot take his money. Whose money? His own money. Developers cannot take his own money. To that extent, chartered accountants are important under this act. However, especially in Tamil Nadu, I see there is no interest with the professionals to practice in this area. Now also I am surprised. Sir was mentioning 18,000 projects. How many projects? 18,000. Of which 3,000 is about the buildings project, remaining would be a layout. Leave out the layout, remaining is a 3,000 projects. For 3,000 projects, some chartered accountants should issue a certificate. Where are they? And how are they issuing the certificates under RERA? And whether really promoters are obtaining or builders are collecting, taking the certificates under RERA is again a question mark in the state of Tamil Nadu. When I was speaking to Sarva Kumar sir, he said we don't insist the certificates to be submitted to the RERA authorities. Unless in all the states, every promoter, every builder should submit a chartered accountant, engineer and architect certificate to the authorities. But that is not practiced in Tamil Nadu. That may be the reason. Knowingly or unknowingly, the builder community, professional community is ignoring this. That could be the one reason. Probably days to come in Tamil Nadu also, the authority will insist to submit the certificate of chartered accountant. That time we all will wake up and start learning. And few of you here, I am sure that you have some experience into the real estate. When I say real estate, it doesn't mean that you should do the real estate business. Either you could have explained or you could have advised to your clients. If not to the clients, at least you have experience of buying some real estate apartment for yourself or your family members or to the neighbors or the relatives. And every person invariably would have been involved into some of the transaction of the real estate, I can say that. Otherwise you wouldn't have been here in this session to know about the real estate. That's a little background. As Suhail said, we both will talk on this. This cannot be a subject be covered within 3 hours, because this is an act which covers entire aspect of the real estate. Entire aspect of the real estate transaction. It is not about the registration. Today morning Sarva Kumar sir mentioned we are playing a role as a registration. That is what Tamil Nadu is playing now. Tamil Nadu RERA is playing, just I give a registration certificate, you do it whatever you want it. But the act says what? You all have got a book in your hand, act book, right? Can you just take it? If some of you do not have a book, I will ask somebody to give it. You don't have? How many? 1, 2. Just can you pass it on? Yeah. She talks about real estate regulation and development act 2016. There is a regulatory part and also development part to the what? To the industry itself. That is why this act has come into play. This book is, wherever we go and carry this book and we distribute everyone with the two intentions. It is not a too big book to buy it, neither a small book, it is available everywhere. That is a challenge. If you want to buy it also, like you don't get a smaller, bare act this, you get a bigger picture of including all the real estate laws where you don't buy it. So that is the intention. It's a very small piece of legislation which having 92 sections, of which only section 1 to 19 is very, very important in terms of for us to know it, professionals. Remaining is most like a complaint, legal and also administrative matters of the authority. So that is how it is structured. This act is structured. Having said, it's a regulatory act. It's a regulation. What are the regulations generally we see industry wise? Can somebody say? Regulations. Different industries have regulators, right? SEBI for what? Investments, right? And IRDA for insurance. RBI for banker. Then TRI for telecom, right? Then ICAI for our members, professionals. Like this, like for food, FSAI, right? There is a regulator for every industry. What was for real estate before RERA? State subject, so there is no regulation required. Huh? Then, who is the regulator for this industry before RERA? Politicians. Very good, sir. You are so mature. Okay? Then, in spite of 70 years of independence, second largest contributor to the GDP in terms of the GDP, and number one contributor to the taxes to this by this industry. We did not have a regulator for this industry. So what, sir? Industry was doing good, they are contributing. Why do we need a regulator? Why do we need, sir?
To avoid Sahara cases.
To avoid Sahara cases. Sahara is very experienced, sir. Huh? Right away I has been to Sahara.
To create more obstacles.
To create more obstacles. Okay, then one good, one bad. Then what else? I want everybody participation, sir. I know that you all had a good lunch. Okay, I will not allow anybody to go to school because you only few are there. If the hall was full, then I would have been allowed somebody to go to school, but otherwise I will not. Everybody should participate. The rest are wrong. What was the reason? To bring enactment.
Protect the interest of the buyers.
To protect the interest of the buyer. Very good. Then.
Because when you are investing in the house, it is your lifetime earnings.
Lifetime earning you are investing, so you need a protection. That took 70 years now, sir, to realize. Then.
Bridging the gap between the builder and the buyer, addressing their issues.
Okay. So bridging the concerns or the differences between the builders and the customers. Then mitigate litigation, more of a curative, preventive rather than a curative. No? Scope for the government revenue. Very good, sir. Then okay, there is no parallel economy. Means, sir, mafia. Then making a better platform for all the stakeholders. Good. Then stop diversion of funds. Then
No, this is like income tax assessment.
Okay.
Whoever files the return, you catch them.
catch them hold. Okay. It's like a income tax assessment.
Scot free, leave them.
Okay. Scot free, leave them. Whoever into the net, you hold them. Then you can ask a question to your son if you come to home, sir. If he doesn't come,
Pardon?
you can ask a question to your son if he comes home. If he doesn't come, same thing. Hold on. This is also like that. If you register, I will have a yes, code or I have a data to ask you. Then what? Compliance, sir. Madam, you should say, madam. Please, submit. You should say something. Yeah. What else? So whatever you said, all is correct. That is why this act has in place. And whatever you said is correct. And beyond that, many other aspects also there. Can somebody switch off these two lights? The front one. Huh? So on the screen, because many of you are first time listening or newly listening about this act, I touched on the fundamentals and the basics. Generally we all know as a chartered accountant, section 1 is what? In any act?
How it applies.
Objective, preamble and reason for this act comes into existence and applicability to, right? The same thing here also. So first you learn what is section 1. Section 1 is about the objective and extent of applicability. What we used to read ourselves when we were students? Act act is applicable to all states of India
Except in Jammu.
except Jammu and Kashmir.
Why this is not amended after 370?
What?
This is
made
made
applicable.
Now it is made
Now it is made applicable.
It is made applicable now.
J&K also has a real estate regulatory authority.
It is applicable to
It is
Jammu
not
and
amended.
Kashmir also now.
Effective from?
Effective from Jammu and Kashmir.
I think about 2-3 years back. I don't remember the exact date.
So this is now applicable to Jammu
They have a
and
regulatory
Kashmir.
authority.
No, this is the specific reason why 370 was.
Yes, brought in. True. And we all know that the outsider of a Jammu and Kashmir cannot buy the property in Jammu and Kashmir. Now it's open. So when it is open, this act also applicable to Jammu and Kashmir also. So we know that is actually even applicable to extent in the whole all the states of India, including Jammu and Kashmir. Second is in terms of what are the objectives. Objectives is ensure the accountability, infuse transparency, introduce professionalism, establish a symmetry of information, imposing certain responsibility, establishing a regulatory mechanism, and establish a dispute resolution, bring the best practices by way of governance. I want each one of you to listen the entire next 2 hours or 3 hours of this session, keeping these things in the mind. Every provision of the Act, every section of the Act intend to achieve this objective. If I ask a question, what was the transparency before RERA? Did you experience there was a transparency? What was the professionalism required for me to do this business?
You must be a thug.
You must be a thug. That is a professionalism to become this business, right? But what will the good person do, sir? He cannot become that and to do the business. What is a good person to do?
Then in that case, I have to share with you the sad stories of good
developers.
Yes.
So next, what was the accountability prior to this act? What was accountability? How many are advisors to this clients of real estate? I don't say that they are bad. The circumstances, the situation that creates in and around make them to be a bad or become bad, or if not full, some part of it. That is a part and parcel of this industry, part and parcel of the business.
You get to, I would say you.
This boom in real estate is only the last 10 years. Was it there before?
It's been in different parts of the country.
No, the city expanding, no? City expanding 10 kilometers, 20 kilometers. That is the boom in real estate, no? Was it there in prior to 2000?
It was there, bro.
Not at least to this magnitude, no? Today the city has gone up to Kerambakam, no?
Yes, true. To
No,
a certain
it-
extent, it's,
No, it depends from region to region. So if you take Maharashtra, Mumbai, if you take Pune, if you take Delhi, if you take the NCR region, Noida, if you also take Bangalore, exponential phenomenal growth after 2005-06. So it is regional also, and you cannot say, of course, we had regulation in terms of an act. Of course, I don't think Tamil Nadu had that. We had something called as COFA, which is a regulatory in the nature, almost similar to RERA, but there was no regulatory authority there under that act. That was there across all the states. So,
No, the only difference is when it is called the regulatory, automatically it becomes a quasi-judicial.
It is quasi-judicial, yes.
That is the only change. Otherwise, we had all the mechanisms in place, which was twisted to that
Circumstances.
circumstances. When it became a authority, it had a legal character also.
Yes. See, you get to experience the industry as a professional in a different way. But when it comes to you being the consumer, you experience it in a completely different way. So as a consumer, you experience the difficulty of the industry, because then the promoter imposes on you
certain things or many things which you cannot overcome even being the best of the professional, having enough knowledge about the whole subject. So that is what when we say transparency, accountability, that is what it means. As professionals, we deal with it. We also deal with some, I wouldn't say, the so-called delinquent, whatever promoters, we also deal with them. So it's not that. So when you become the consumer, that's when you understand what hardship you go through, what it means to be transparent and what it means to be accountable. Yes, Vinay?
Yeah. This side comes to the issue you showed us today. They audit
We
the
all will
accounts.
discuss, sir. We'll all discuss.
No, do they audit the accounts also?
We'll discuss entire aspects of this in the subsequent slide. This is the objective what we have shown. Keep those things in the mind when we discuss the entire aspect of the Act itself. Then this Act has a 10 chapters with the 92 sections. It is a central enactment. Central government has notified this Act, Real Estate Regulation Development Act 2016. It is 16 of 2016. And powers are given to the state government to frame the rules and notify it. By virtue of that, by powers given to the states, even state to appoint the real estate regulatory authority. And entire supervision, regulation and monitoring mechanism is the state, but the Act is central. That's how the structure is there. It's a central Act, but the state rules with the state monitoring and regulatory mechanism. So entire Act is into effective implementation from 1/5/2017 in India, and accordingly, like many of the states, most of the states have established regulatory authorities and appointed the members as well as the chairman to the authority. On the screen, what you see is like this is across India. Like most of the states have implemented this and appointed the authorities also. Next. This is how Tamil Nadu RERA looks like, their organization structure, because you should know like who are all there. Yeah. Next. So this is how you should read. In case if you wanted to know more about RERA, read the Act, then look at the rules, then the regulations are notified by Tamil Nadu RERA, look at the notifications, circulars and orders, and also some of the formats which are notified by authority. That would be useful for all of us to understand this Act and also the practices. We may spend about 2-3 minutes in this slide. Like if we have an experience of like building many of the real estate, either for my individual house or a project, there will be somewhere there is a start and there is an end. So there is no exception to this industry and this business also. Somebody should start somewhere and also complete it and hand over, sell it and come out from the project or from that project or from that business itself sometime. So entire aspect of this is covered in this Act. With your experience, either a buyer, professional, builder or whatever may be, you tell me what are included as part of this industry. Each one of you say one, we'll go forward. What are included as part of this industry? The moment you get real estate industry as a project, an apartment, layout, plotted development, what is out there as part of it? What all you see? Agreements you see, approval plan you see, advertisement you see, good. Then prospective buyers, then what else? Vendors, suppliers, right? Service providers, bankers, financiers, lenders, housing loan providers, then investors, then dispute between the promoters and the allottees, then private equity investors, legal aspects of the project from the title to then trusts are created. Pardon, sir? Trusts are created, then registration, then nobody is talking about money. I am surprised. So money involvement, right? So money involvement, accounting, taxation. So as these are all part of these transactions.
entire aspect of it is covered under this act. There is an advertisement inbuilt, how to advertise, how to not advertise. You're talking about the legal, you're talking about the plan sanction, somebody talking about the money, somebody investment, equity, lender, everything as part of this. That is the best part of it. A beginning to an end. You develop a project, you develop a product, start with what? Why this industry is different from any other industry? Can anybody differentiate?
Too many uncontrollable factors.
Uncontrollable factors. Is there no, not in other industries, sir?
Not much.
Not much. Reason?
Because it involves the public and home or apartment.
Okay.
It's just like more personal or emotional.
Okay, others also like the jewelry is the most of a personal and emotional.
But if it is a little more unorganized sector,
Unorganized sector, little more. Total is unorganized sector, but still we don't talk about it. Why?
Because the amount involved is huge.
Amount is, sir, jewelry कमी आएगा.
There's nothing which is, which has an impact on jewelry. So, the home has an impact on life. But then jewelry loss is lost. The home damage or
Okay.
accident is life.
So value of transaction is more than what else? Accounting is based on the project based, that's on the professional. Okay then.
He has a point.
Yes. Immovable product. Then. What else?
Cost escalation.
Cost escalation during the period. So whatever you said, imagine that this product, if I compare with a car, maybe car I cannot compare in terms of the costing. At least the value which is a higher next to house is a car only, right? When do you buy it?
Time involved.
When do you buy a car? You have a money then.
The moment you start earning.
Okay. Then. No. When? How you buy a car? Rather than when? How you buy a car? You go to a showroom, right? Check. Trial. You see whether it has a 4 tire, 5 tire, 6 tire. Features, color. You buy it. What's a home? When will you buy? How do you buy? Rather than that.
Depends. If it is already constructed, then I
You go and check everything and buy it.
Otherwise, based on the plan.
But generally, what would be the percentage of that? People completed projects go and buy it. Minimal, right? Very few. And remaining is what?
From start to end.
Start to end. Then what the builder or what the businessman is trying to sell? What is trying to sell? A dream. His idea. Right? His vision. That is very difficult. As a businessman, he may not be an architect, he may not be an engineer, he may not be a money-led financier. He is a pure businessman. Who prepares the plan? An architect. Who executes it? Who lend it? Land belongs to? Who buys it? Right? Who advises? Professionals like that. Right? So for this builder, what is the stake for him? Versus a car manufacturer. If something goes wrong, entire business is collapsed for him. Acceptability. So here what he trying to sell? This business, this industry trying to sell an idea. How many of you experience that what you see is an advertisement is what you get?
Very bad.
Right? At least 90-95, not 100%, because businessman himself don't know whether he can deliver that 100%. As Sir is rightly said, uncertainties. He don't know that by the time I end completed Perambadur airport Vandichi, he will not allow the high-rise building. Right? Government change. Secretarial building becomes a hospital. Then you are not permitted to use any of the residential area next to the hospital. Right?
Many things should have changed from an idea to a product. That is the difficulty in this business. We all know to construct a single bedroom house, how much is difficult for us. Get a license, take care of corporator, MLA, MP, up to CM, right? And imagine this builder, he constructs hundreds, thousands of the apartments. What could be the difficulties he goes through from day to day? That's the importance of this industry and the business. With that, there is a lot of aspects which is covered to insulate everybody as part of this industry. And this authority, the regulatory authority, has a bigger role to play in terms of not only the regulation, but the development of that industry. Section 32, which has a power to the authority to recommend to the state government in the interest of the industry to implement the best practices. So that to that extent they have a power. Whether government will listen to it or not, that is different, but there is an inbuilt power. Who can give that power? Who can realize that power to the authority? When every customer, when every builder, every stakeholder insists on the authority, you have a power, please enforce it. When that movement comes, absolutely we can say development part of this industry. Having said, from the preparation to the post completion and handover the project, the entire aspect is covered under this act. Next. Generally we understand, because I am trying to link and make you to appreciate about this act, talk about the pre-RERA and the post-RERA, right? Then you can see there is a 1 to 9. What is 9 here? Launch of a project. What do you mean by launch of a project? Marketing, sales, invite, collection of money, distribution of advertisement, flyers, call a celebrity, politician, right? Comedian, stand-up comedian, like everybody will come and launch it, right? Can you see what is the number in post-RERA? This is what I am talking about, the post-RERA. Launch is 9, point number 9. There is a number 1. To do the due diligence, feasibility study, enter into agreement with the landowner, enter into a JDA, obtain the proper approvals, come to RERA, and obtain the RERA registration, then you go for a market. What was pre-RERA? First is the launch. Let me test the water, whether this I can sell it or not in this area, 2 BHK, 3 BHK. Let me test, then I will enter into a JDA with the landowner if it goes well. Otherwise, I will cancel it. Otherwise, I will go for a different project. But that is not permitted. It is a one-way now. You wanted to get into a business, a serious business of a real estate, first you should do the due diligence, a market survey. Then you reach 1 to 9. By the time you reach to 1 to 9, a small project, how much time it requires? A smaller project of 50 to 100 apartments is required 12 to 18 months. And a larger project, it goes to 36, 48, 60 months also. That means the businessman should have an ability to withstand up to 12 months or 18 months if you are a serious business owner. You want to do the business. Why I am saying is, if any client comes and I want to do a real estate, first ask whether you can have a capacity to withstand 12 months from the date you decide that I want to do a business. Unless earlier you launch it, start collecting the money, then let me ask whether I get a plan, no plan, sanction plan, feasibility, lending, funder. If nothing happened, I will return the money to the customer. But that is not permitted now. So this is an important aspect of it. It is not only the RERA, as a professional when we advise it, this is what is required for us to understand and appreciate. Can you launch a project, a car stating that I will manufacture and I will give it to you after 5 years? At least he should have something, a technology in his hand to do that. I remember Tesla started booking in India without knowing which project, which car they will release onto Indian roads. That doesn't happen in this. Okay? So similarly, this you should have a plan and ability to stand for 12 months to 18 months or 36 or 48, 60 months for you to see some visibility or go to market.
After going market, whether you will be successful or not, that's a different. To go to market, you should have ability to reach. That is what is very important in terms of the business. Second, you have seen one of the objectives is about the standardization. Earlier, good builders, I remember good builders never go to market without having a plan sanction in their hands. Earlier also. There is no standardization. Good builders, law-abiding builders wanted to practice the best practices. A person next to him used to go whatever you want to do it. Now both are brought into a level playing field now. Okay, good, bad, worst, ugly, everybody should follow the same thing now. There is a level playing field now in terms of doing the business. The standardization has brought into the industry and the business practices. That's what is important for us to understand whether this will satisfy the one of the objective of an act. That's about the transaction, real estate transaction, how it happens. Next comes to the next slide about the customer transaction. What used to be a customer transaction earlier? If you wanted to buy an apartment or a land or a layout in a project, what was your experience? Pre-RERA. When you used to book, sir? Look at advertisement, book it.
Go to the site.
Go to the site, you book it. Then, எங்க மாமனார் சொன்னாரு புக் பண்ணுங்க மச்சான் இதுனா வடிப்பாரு சனில்லா மருமக புக் பண்ணிட்டேன் அப்புறம் some celebrity come and inaugurated, look at the celebrity, I booked it. What is there for celebrity? Then, were all the builders follow the same earlier? Were there any guidelines for somebody to follow? This is how you should do it. If so, where was there? Who used to monitor it? Who used to regulate it?
There was nobody.
And one thing I wanted to say, whatever we are discussing now, everything was there earlier also. There is nothing in RERA, new in RERA, but there is only a regulatory mechanism which has brought in now. Before also, without sanction plan, you cannot sell it, you cannot market it, advertise it, but you are not following it. Nobody was there to come and monitor that. Now RERA is there, so they are monitoring now. So this is a transaction with the customers, with the builder or a developer or a promoter. How it used to happen? There is nothing new here also. How the government agency used to allot any of the house, a housing board, CMDA or any development authority, a plot they wanted to allot to. What was the process they used to follow it? What was the process, sir?
They will release advertisement.
Advertisement stating that there are 1,000 sites who are all interested, please apply it, right? Allot, that is what is the first application. For 1,000 sites, how many applications used to get? 10,000 sites, right? That is the application. Based on what they do? They allot it. Some cases, some basis, based on seniority, based on your residential status, based on your background, or you have one more house, then I will not allot it. Some way they used to allot it. After allotment, what used to happen? They collect some money. Now we allotted, pay some money, right? I have allotted site number 54, that cost 10 lakh rupees, you pay 1 lakh rupees now. Then they start looking at, okay, what is the next step? Having allotted, they enter a lease deed, come sale deed or agreement something, and they collect some part of the money. Then during the development they collect money, and finally they used to register and give it. Same thing now RERA has brought in. Whatever be the earlier practices, we are want to make this as a standardization. Everybody should follow this. That's how it has made it. Start with the booking form, the allotment letter, having allotted, then getting the agreement for sale. What do I do with the agreement of sale? Morning sir was explaining UDS and the construction agreement. That is what I am talking about, agreement for sale. Then you enter into agreement for sale. When will you enter and how will you enter? Everything is prescribed in RERA. How much money should be collected? What way you collect money in RERA? That is also there. Whether you can collect cash or online transaction, that is also mentioned. To that extent, RERA is there. Then what will happen in terms of the association? Because sir was mentioning, many of the builders not handing over the
project or the common facilities, amenities to the customer, association, there is a provision how to form an association. Having formed an association, how do you hand over to the association? That is there. And having completed the development work, when will you register the sale deed? That is there. How will you register the sale deed? That is there. Having registered the sale deed, when you sold everything, then what will you do? Hand over your sanction plan, your building permit, and all the title deeds, along with the corpus money you collected. To whom? To the association. That is there. Then I will get out from the entire project. This entire thing is part of this, and that is how it is captured. That's the flow of the transaction, flow of the customer transaction, which is clearly there in the RERA. Next. Major compliances.
So, we've understood from Vinay's perspective in the sense that he made it very immersive. So I hope it will stay with you for a long time in terms of what RERA means. So, to go a little further, of course, Mr. Silvakumar also has covered this. The section 3 speaks of a prior registration. So anywhere else, it's a registration alone. So RERA requires a prior registration. So the section 3 speaks of prior registration of a real estate project. So what do we understand by prior registration of a real estate project? So what section 3 requires is that before a promoter goes into the market to either sell, to advertise, or to do anything in respect of a real estate project which is required to be registered under the provisions of the Act, he should obtain a registration and only then go into the market. So what happens if he doesn't do that? There are penal provisions under which a promoter can be penalized up to 10% of the estimated cost of the project, and across the country many promoters have been penalized for advertising before obtaining the RERA registration. So section 3 speaks of the prior registration of the real estate project, and T and RERA rules 3 and 4 speak about what are the requirements, and section 4 of RERA speaks about the application for the real estate project, which gives out, details out what a promoter should file or provide information and documents in respect of a real estate project. So this is the section 3. And financial management, which is the most vital aspect of the real estate project in terms of how the money has to be collected, is covered under section 4.2 LD. So the 3070, the 4.2 LD speaks of 70% of the money collected from the allottees should be deposited in a designated project bank account, which should be opened in a scheduled bank. So this designated project bank account has to be opened for every project. It's not that one promoter having multiple projects can use the same bank account for all the projects. So it is a separate bank account which should be opened for each project. And of course, we know now that the bankers have also come out with different products where there is a master collection account, and then there is a 70% account, then there is a 30% account. So what the details that we give to the authority is of the 70% bank account. Now, the withdrawals from this account have to be in proportion to percentage of completion of work. So which means that the allottee's money is safe, and to the extent of the construction or the development that has been completed, only to that extent the money is out of that bank account. The remaining account, the money still stays in that account. The authority, when a registration of a project is revoked, has the power to freeze this bank account. So which means that the money, the allottee's money is safe and sitting there in that bank account to the extent the development work has not taken place. Then section 4.2 LD also speaks of an annual audit. For every project, there has to be an annual audit which has to be done within 6 months from the date of the financial year coming to an end, which is up before September 30th. Now, validity of registration and extension, Section 6 prescribes that the registration that has been obtained for a real estate project can be extended up to a period of 1 year. Of course, the Section 6 prescribes that such an extension can be given only in exceptional circumstances, only if there are force majeure conditions, but across the country we have seen that even without that, the project registrations are being extended. Advertisement, Section 12 speaks about the veracity of advertisement, so which also covers the model apartment now. So if you read Section 12, because certain cases the model apartments that would be built and shown to you would have, let's say, 1 feet higher, the roof would maybe 1 feet higher, the puja room will be 6 inches bigger. So what you see may look very attractive, but when it actually gets delivered, it may be smaller, the specifications may be different. So even if the model apartment that has been shown to you is not exactly what is being delivered, then also you can go to court. The complaints that can be filed under RERA can be under Sections 12, 14, 18 and 19. So specifically 12, if there is an advertisement that has been shown to you, which you find later to be not true, then you can go against the promoter and seek compensation for any false statement that has been made and for whatever has not been delivered as per the advertisement. Then of course the quarterly updates under RERA, of course as we know now that TN RERA is doing the quarterly updates but not as stringent as many other states. In fact, Maharashtra, Karnataka has one of the most stringent, they are also levying penalties for delayed filing of quarterly updates, and in some cases the penalties are as huge as 30-40 lakhs because many promoters have failed to do their quarterly updates. Now they are facing the consequence of delay filing fees, and they have accumulated because they are month on month it is accruing, and some of them are facing penalties up to 40 lakhs. So then of course agreement for sale and construction agreement, which is under Section 13. Section 13 requires that for any promoter to receive more than 10% of the money. So if an apartment cost or any property that is being sold, that is registered under the Act, is being sold, and let's say it costs a crore, only up to 10 lakhs can the promoter receive money by issuing a receipt or under the booking form or under the allotment letter. Any money to be received beyond 10%, it is mandated under the Act, under Section 13, that the promoter has to enter into an agreement, and such an agreement has to be registered. That is the requirement of Section 13. Of course, here under the rules we have agreement for sale for UDS and construction agreement, but in case of a plotted development, I'm sure only there will be an agreement for sale.
So excuse me.
Yeah.
The customer is an NRA. How it is possible to execute this agreement?
He can send you a power of attorney in favor of somebody. It can be attested in the consulate or notarized over there, and adjudicate.
According to law, whether the unregistered agreement is valid or
It is valid. Section 17 of Registration Act does not mandate registration of an agreement unless possession is delivered. But here, this is a special enactment which requires registration of the agreement, which is also the case in the Apartment Ownership Act. I'm sure Tamil Nadu Apartment Ownership Act, or I don't know if we have the regulatory.
I'm asking only before 10%.
Before 10%, there is no requirement.
So, whether it is mandatory for a registered agreement when you cross the 10%.
Yes, that is what Section 13 speaks about.
Unregistered is valid.
It is, and it's not invalid. The law now requires you to register it. This is a special enactment. It is requiring you to register it. So you have to register it now, and which is what Mr. Selva Kumar was also speaking about in the morning. So yes, so it is required to register a sale agreement now. So Section 13 also mandates it. And association of allottees, of course, this is a very difficult subject in terms of at least in Tamil Nadu, I think there is not much of a confusion because the Tamil Nadu Apartment Ownership Act defines how an association is to be formed. I think here we are registering under the Societies Registration Act. So in Karnataka there is a circular issued saying that you cannot register it under the Societies Registration Act because Section 3 of the Societies Registration Act only permits charitable associations to be registered. So any activity which is commercial in the nature, you cannot register under the Societies Registration Act. So luckily I think Tamil Nadu doesn't have that problem. So Section 11(4)(e) requires that the provisor to that particular section requires that the moment majority bookings are done, that is 51% booking. If there are 100 apartments, if you have booked 52 apartments, at that point of time itself, the association of allottees has to be registered. The promoter is required to facilitate formation of association of allottees. This is the requirement of the law, but it is not being followed. But there are a lot of complaints that we are getting now, of course, in Karnataka. In this will also maybe soon. We don't have a judgment in this regard, but that will also happen. But this is what the law requires. The reason for this is under Section 8, the authority has obligations in case of a lapsed or a revoked project. What it can do for a project to be taken over. Let's say there is a stalled project, a project which the builder has abandoned, or the builder is not able to take it forward. The first right of refusal to take over the project has to be given to the association of allottees. So that is one of the reasons why this requirement is there, that the moment majority booking is there, that you have to form the association of allottees. So in Karnataka, just about 2-3 weeks back, one big project was handed over to the association of allottees. The authority passed an order, it got wide publicity in all the newspapers. The allottees came forward to take over the entire project. So when that takeover happens under Section 8, in fact, all the liabilities that were the previous liabilities of the promoter remain with the promoter, only they take over the asset and they move forward from there. So that's one of the reasons that the association of allottees is required to be registered under Section 11(4)(e). Then conveyance of common areas of the project. As we all know, this act is modelled on the Maharashtra Regulation and Development Act, which is also repealed under Section 92 of this act. So the Maharashtra model follows the cooperative model where the shares are held by the allottees in common. There is an allotment of shares. It's a cooperative society which gets formed. In many cases, they follow both the models. In many cases, they only enter into an agreement for sale. The deed of conveyance in respect of the entire land goes in favor of the cooperative societies, and the cooperative society issues the shares. So that model is there, but of course we don't follow the model. As we know here, the undivided share gets conveyed in favor of the association of allottees. But Section 17 requires that transfer of title, which speaks about transfer of title. It says that the carpet area and the common, in addition to the conveyance of the carpet area to the allottee, the entire common areas have to be transferred to the association of allottees, and all documents and everything is to be handed over to the allottees. This is what Section 17 requires. How far it's practically it can be done, we are not able to achieve it in any of the southern states. Recently, West Bengal has issued a notification to say that the stamp duty payable on the transfer of the common areas is merely 150 rupees, 100 rupees, a meager amount. Because if you see the definition of common areas, Section 2(n), it starts with saying the entire land. So when you correlate that with Section 17, which means that the entire land should stand transferred in favor of the association of allottees, which is also right. It should be done because think of a scenario when you have to redevelop it. So when you redevelop it, the association of allottees, which is consisting of all the allottees who hold shares in common, it will be easier to redevelop, it will be easier to deal with the entire property. So it is in the interest of the allottees that this should be done. But however, how practical, how the governments are not getting involved in terms of how to implement Section 17, that is not happening in any of the southern states. It's happening in some states, it's slowly developing. Karnataka, as I know, has some committees which are in the government, at the government level, who are studying this to make it possible. And there's a lot of activism in favor of the entire land going to the allottees, because in some cases the promoters, because they still have something, they try to exploit either additional TDR, additional FSI, and later come back, want to put up some floors. So because of these mischiefs, it is essential that once all the apartments are sold, all the common areas are transferred to the allottees, the promoter should actually exit the project. In fact, Tamil Nadu, Madras High Court, in one of its judgment, has said that they should get out of the project. There is one judgment, in one place the Madras High Court has said that once it hands over, it should get out of the project. It should not remain married to the project. So that is about it, and of course the financial compliances, which we will be talking as we go further.
One more point you can highlight is, even I do not know about the present RERA, in the old and the unsold flats, they have to sell it to somebody and then walk off. They cannot retain in the promoter's name and still remain there.
As long as they pay the common maintenance charges, they can hold. I don't think there is a bar in holding, except that there is some implication under the Income Tax Act now. So as I know, the Income Tax Act levies additional tax on the unsold units. But otherwise there is no bar. Even under RERA there is no bar for them to continue to hold. But they should pay the common maintenance charges as along with the allottees.
Like any other.
Like any other allotee. Okay, so next is the applicability. Of course, morning we discussed it, 500 square meters, that is 5382 square feet, or 8 apartments where the projects were not completed on the date of the completion, on the date of commencement of the act. Of course, in Tamil Nadu, we had a list that was published to say that the structures are completed. So the authority also subsequently also accepted applications to certify that the structure is completed, hence the exemption is given. And repair and redevelopment, as we discussed in the morning, that where there is no sale, if there is no sale, in a redevelopment also it need not be registered. The moment there is a sale, in a redevelopment also the project has to be registered. And phase-wise registration, so the act now in large projects, let's say there is a 10-acre or 20-acre projects, it allows phase development, and each phase is considered as a standalone project for the purpose of registration as well as compliances, which means that each phase has to be registered as a separate RERA project. It has to have a separate designated bank account. It has to do separate quarterly updates. It has to do separate annual audits. So everything is separate for that phase. So it is treated as a standalone project for the purpose of compliances and everything else.
Yeah. Okay. Thanks for explaining the detailed compliances which is mandated.
Any questions in this?
What is sacrosanct about 500 square meter or 8 flats? 8 dwelling units?
In the sense?
No.
Why they are not included even the smaller thing?
If the intention is to protect the both the parties.
You come and
no. In fact, West Bengal has reduced it, and the authority has the power. As I know, in most of the states, the Town and Country Planning Act, if you consider, there won't be a plotted development project in 5,000 square feet, certainly not. If you see the building bylaws and some of the zonal regulations under the Town and Country Planning Act, for an apartment to get a sanction, it has to be more than 500 meters or above, 500 square meters or above. So that may be the reason that they said 500 square meters. So yes, so they've gone along with the Town and Country Planning laws to say that below this, for it to be considered as an apartment. So that may be the reason why they said 500 square meters or 8 units.
What is applicable for plotted development?
Plotted development, any plotted, if it will be obviously more than 5382 square feet. No?
Okay, numbers are
Numbers are not there. Numbers are.
Invariably, every plotted, every layout plot comes
No.
under.
Can you make a plotted development project in 5382 square feet having 8 units or more? It's not possible. No? Both ways it's not possible. Plotted development, even if you have 3 plots, it will be more than 5,000 square feet. So plotted
In that case, square meter is the criteria.
At least
Square
5
meter.
square meters.
Project
So
land.
you cannot have a layout. It is or. It is not and. It is or. Either this or that. So so if you don't fall under that, you will fall under this. So that is the.
For insurance, actually normally the insurance is applicable only for construction. How about the title insurance? What do you mean by that?
Section 16, title insurance.
For title.
Section 16 speaks about title insurance. There are very few companies in India which are offering title insurance. Title insurance as it is today in India only offers protection as against any litigation. It doesn't give you any other protection.
Practice,
So,
I think,
sorry?
practice many people are actually they are not taking.
They are not taking. It is, of course, it is not. Initially, there was some proposal, and also some companies did come up, but thereafter it has not gained momentum because none of the authorities are insisting on it. There has not. I have not seen in the entire country not one complaint that has been filed insisting that Section 16 should be implemented. That any promoter has violated Section 16, mainly because none of the insurance companies have any products. There is a lack of product. Very few have, 1 or 2 have products. One, they are very expensive in terms of diligence because they do a stricter due diligence than the promoter themselves because they want to assure. RERA is not insisting. That's what I said. That's what I said. RERA is not insisting. None of the authorities across the country I have seen, not a single complaint I have seen under Section 16. So it is not there. So they go, one, for the due diligence they charge a lot, and the percentage, the premium cost also is quite high, and it gives you only protection as against litigation. So the litigation costs get covered in the event that there is some litigation as regards the title of the land. So that is what
Actually, for the unsold flat, actually without becoming a member in the association, how it is possible to make?
they become a member. The promoters become members. They vote also.
Okay, it will become very expensive actually.
For the promoter,
It is mandatory under any law that. for
there is no mandate. There is no mandate. But once the association is formed, the bylaws of the association, the rules and regulations of the association will prescribe that every owner, every apartment owner becomes a member of the association automatically.
By default.
By default. For unsold is not, you cannot segregate unsold and sold, no? Because what happens, the housekeeping is done for the entire building. You can't say 001 has his unsold unit, 001 will also have to pay, 002 will also pay. It's equal.
But some electricity like the electricity usage, then common amenities they don't use.
Everything is common. So from the same, if you take the same this thing, somebody might say, I am not occupied, I am not going to pay.
Is it mandatory under any law? Is there
It is not a mandate. I am saying you will bind yourself by virtue of the rules and regulations in Tamil Nadu of the society that gets registered, and also the association can impose upon the promoter to say that you pay maintenance on the unsold unit. Let's say majority is unsold units. Let's say in 100, 60 are not sold and only 40 are sold. If 40 are required to take care of the 60, it will be unjust.
Minimum 7 units to be there to register it for association.
7 persons required to file the first, 7 people are required. 7 owners are required. 7 owners are required. If there are not 7, then maybe if there are co-owners, they'll have to file it together.
irrespective of the number?
How many members can become
Sorry?
members?
Irrespective of the number of flats.
No, for the registration of a society under the Societies Registration Act, the minimum people required to subscribe to the memorandum rules and regulations at the time of registration of the association are 7. So that is why that 7 number is there.
This is the mandatory, no?
It is mandate. It is mandated under
Is there
the
any check or control that people can come and access if they don't have an association? Any mechanism is there? Or is
There
it
is no mechanism. Now under RERA, what Mr. Selva Kumar said, I am asking them, have you formed the association, have you handed over the corpus?
RERA is the controlling
RERA is the controlling authority. Now RERA controls.
See, if you see the Gujarat,
Sorry?
Gujarat RERA,
Quorum is not required for formation of the association. Subsequently, for your, if it's a general body meeting or an AGM, then the rules and regulations will prescribe the quorums and how you can take decisions, amendments and all that.
7 people they can form.
7 people can form an association, but that association can have, by virtue of the, if you take the managing committee can have more than 7. It can prescribe that it can be 14, 15, 21.
Suppose if there is
what is the penalty in
it under flap, then
non-compliance of any provisions of
One minute, we'll finish.
some different people they can form some different association. Then there won't be any.
In conflicting associations, multiple. That is happening now in Kerala. That is happening, but we have not seen it in any other place.
I think there must be two-thirds majority to form an association.
No, not required. In fact, it is the promoter's responsibility now under section 11(4)(e) to facilitate formation of an association, which means that the promoter has to call for a general body meeting, lay out the formalities of how the association is going to form, draft the memorandum rules and regulations, if that is to be done. So that is how now the promoter is made responsible to say that you handhold them, you help them form the association.
Very rarely we have, only 60%.
Very rarely we have, sir, understood. This is what the law has come. Karnataka, if the project is complete, then at the time of completion, get away from RERA, move out from RERA, submit a copy of an association bylaw. Gujarat, further one more step, submit a copy of an association, list of office bearers of an association, bank account copy in the name of the association, transfer of corpus or deposits to the association, give me the proof of it, then you can exit from the project. So this is what is the entire cycle which is insulated in RERA. Earlier, like, it's impossible for somebody to make it to for major follows. It was there. It is not, it was not there. It was there, existing as a practice. But enforcing it or regulating is what not there. But by virtue of this, RERA has brought those aspects also as part of the practice. Tamil Nadu started morning, Selva Kumar sir mentioned that we are asking to give the association copy. Have you found an association?
We are also asking for corpus transfer.
Corpus transfer.
Yes, yes.
Yeah, corpus transfer also.
Those days,
Yes, sir. That is a transformation. That's what we see post RERA. What could happen? Forget about you advise or a client. If I am a member of an association, purchaser of an apartment, even it is applicable for me, I should also enforce this.
In fact, we see that the adjudicatory mechanism that is there in Tamil Nadu is much mature than many other states. In terms of the quality of the orders that we get from even the Appellate tribunal, so it's much better than many other. So, and the allottees are going to the authority with even small problems. That we are seeing in many, in fact, I refer to a lot of judgments from Madras High Court and the Tamil Nadu Real Estate Appellate Tribunal in my arguments in other cases. So some real good judgments are coming from, so which means that people are approaching RERA. Even with small problems, they are going before RERA and they are getting their orders and they are getting disposals.
So having said, we have seen the various compliances which is mandatory under RERA. There is nothing called which is optional. All the compliances are mandatory, which is supposed to be followed by the promoter of the project. The first step we see is the registration of the project. As we have seen, section 3 mandates a pre-registration. Unless any act says, okay fine, if you have started, then at least you come back and register with me. But RERA talks about the pre-registration. That is what section 3(1) mandates. It talks about no promoter shall advertise, market, book, sell or offer or for sale or invite person to purchase in any manner any plot, apartment, building or as the case may be. Do not invite anybody in any manner. Saying that we are launching a project, we have a project coming up, why don't you come and see? Even invitation is also barred without RERA registration. To that extent, this act is taken care. So registration, Sir has mentioned what is required for a registration of a real estate project before RERA. What is required? I just want everybody to say. What is required? If you wanted to buy one apartment in any of the project, what all you will ask? Approval of building sanction plan. Good. Next. Legal opinion. Perfect. Then what all you will ask, madam, to purchase one property? Date of project completion. Land documents. Then what is? Amenities, facilities, what you provide. Then building specification. Then whether I get a housing loan or not. Then what is? Huh? UDS. What is my UDS in my project, right? How much the undivided share of land I get? Then sir? Payment terms. Good. Then
Charges
other than the basic charges, right? Like high floor charges, amenity charges, clubhouse charges, taxation, delay interest. Then what? When will you hand over, right? Perfect. Then sir. Background and track record of builder. That you should say, sir. Yeah. The background and the track record of the builder. Then common area. Okay. Approach area, right? Then approach road. Then post completion maintenance. Okay, fine, to that extent. If you continue to maintain it, yes. Then what else, sir?
Is it the option at post?
May not be, because generally they collect 1 year advance at the time of completion for them to maintain it. Yeah. Then what else?
Actually, I never knew that we can ask so many questions, sir. We only asked for the model flat.
Model plot, yeah, I know that. Model plot, even if you ask, he says only one thing. Sir, this project is approved by ICAI, SPL, HDFC, Tamil Nadu Cooperative and that bank, this bank. You go and give your KYC, they will give a loan. Right? That is how it operates. He never gives a set of documents to you. If he insists on documents, whatever be the document he insists, only the documents he gives, not the entire documents also.
Those things all will be uploaded to their website.
Whose website?
Builder's website.
How
They are
will
uploading.
you do?
They are uploading.
What?
All the basic documents of the project.
Acha, okay, basic document. I have not seen any of the builder uploaded. Maybe. Then what? So, this is what RERA insisted. Section 3 and Section 4. 3 mandated registration, 4 talks about document. Rule 4 of Tamil Nadu RERA 5 clearly mention what is required. If you wanted to take a housing loan or a project loan, what document you hand it over to the banker, entire document I want it, plus other documents also. That is what RERA requires. Next page, okay. We talks about legal aspects of the project. Then your specifications of the project, what quality, what material you use it, plan approval, NOCs if required, financial background, 3 years financial information should be given, past records, how many projects you have done, promoter KYC, directors KYC, what is the estimated cost of the project, what is the milestone you complete the progress of the development work. What is your payment terms? Give me your agreement of sale draft that you enter with the customers. I am applying registration, sir. I will enter into customer with agreement after 12 months. You enter. Give me what is the document you enter now. What is the format of allotment you give? Give me the bank account, that RERA designated bank account you are talking, right? 70%. Give me that account copy. Duly issued by a banker stating that this is what is so. Entire aspect you have to give it to RERA for them to verify and approve and give the registration certificate. That is the mechanism. In Karnataka, authority collect 123 documents. In Karnataka, if the project is passed by, registered by RERA, fairly you have a chance that it is clear in all aspects. Even the private professionals could not able to give so much of confidence or verification, because if you won't give it, what documents you give it to lawyer, sir? Legal party to give it. He will not verify what is NOC, what is approval form, he don't know. If you go to a chartered accountant, what he can say? Some financial aspect, okay fine, background of the promoter looks good, he has the ability to complete it. If you go to an engineer, he may say only, okay fine, this plant property what you are buying is not building on a lake, you can buy it safely. Architect, if you go, okay fine, fair, you will get this quality of the material, okay. But who was there for you to guide entire aspects of the project? That is what is assurance, the reasonable assurance the authority is giving. Because in the authority there are multiple departments. One who verify the legal documents, one is the financial aspects, one is the engineering portion and the plan portion, another is the architectural or the revenue aspects of the project. So entire covers your entire project detail itself. One important aspect as a professional we should know is it mandates the estimated cost of the real estate project. What do you mean by estimated real estate cost? For cost of real estate project is also defined in the rule, Tamil Nadu RERA rules, which, because why should I need this? Why authority is insisting at the upfront? Honestly tell me, how many of your clients calculate cost of the project before he launched? How they used to calculate, tell me, sir? I am building 1 lakh square feet.
Per area, per
Square feet, how much, sir?
Depends on some developers do this shell, so they don't take care of the.
How much, tell me? For 2,000 rupees per square, 1 lakh square feet I am building, 2,000 rupees, so 20 crore rupees is the cost. That is a thumb rule. Where is my interest cost I have added? Where is my administrative cost I have added? Where is there is a delay in case of anything? Those are all not part of these calculations earlier. Now RERA may, you think what is your calculation, what is your cost of your project. Do some maths in yourself before you come to me also. That is what is important as a professional. When we advise it, you should calculate and you should feel this is part of your application. And there are two important. The moment you give it, this becomes your estimated cost of the project. Based on the estimated cost of the project, you can allow withdrawal of the funds from the project account. Number one. In case authority wanted to levy a penalty under section 59 to section 64, based on the percentage of estimated cost of the project is the penalty. This is for RERA. Recently, in the past 1.5 years, Income Tax Department looking at the RERA website, GST Department looking at the RERA website, looking at that this is what you declared as the cost of the project, 20 crore rupees. In the books you are showing 32 crore rupees. GST says 20 crore rupees you have shown the declared as cost of the project. You completed the project, but you have declared only 12 crore rupees for GST purchases. Right? So this is the important aspect under RERA. What is that you declare to the authority, which is all public document. Any income tax, GST, banker, like banker, right? You go and give it to a banker, sir, I have 100 apartments, I will sell at 50 lakh rupees, correct? Total revenue is 50 crore rupees, I given my projected balance as 50 crore rupees. When you come and see your RERA website, you are selling at 30 lakh rupees only. Where is this 20 lakhs? So this is the impact of financial impact under the Act in terms of bringing a transparency in the system itself, bringing the transparency in the system itself. That is why as a professional I should understand what should go as part of the application, project registration application, which has a big impact till the completion of the project. Unfortunately, we are not involved as part of this process. And you should go back and say your customers, it is very important for you to look at what is the estimated cost of the project, which has a far-reaching impact on the entire financial transaction. That is about the project registration, how much is required, what documents required. And also as a prior registration, if you don't register If you violate section 3, section 59 attracts. What section 59 talks about? Penalty. How much is the penalty, sir? Penalty is 10% of the estimated cost of the project. Have you seen any act which levies so much? Income tax levy penalty and what? Not filing the income tax, how much you can file? GST is not registered, what you can do it? And income tax, there is a limit, sir. What was the limit? Something, right? GST says 100, 500, 1000, ROC says something, but what it talks about? We are talking about 10% of the real estate cost. Cost of the project. 50 koti project, how much is the penalty? Knowingly and unknowingly you advertised it. Your marketing people have launched it. What is the penalty? 5 crore rupees. RERA is part of your profit. Whether you make profit or not, RERA will make profit. How much? Before first booking, you end up with paying 5 crore. You may have a question, sir, is that RERA levied so much of penalty? It's not 10%, 1%, 2% levy. 1% of how much? Right? So for 50 crore rupees, even 1% will be about 5 lakh rupees. And in many cases we have seen penalties are levied 1.8 crore rupees, 1.5 crore rupees, 2 crore rupees. Fortunately, unfortunately, if the authority at the time of hearing something happened at home in that morning, not in a good mood, what will happen?
That's it.
Maximum 10%. Then you file, we'll see later. So that is the impact in terms of non-compliance under RERA, the first stage of non-registration of the project.
But honestly tell me, you seem to have more experience than any of us. How many of them are registering before issuing that list?
100%, question is correct. It's like wearing a helmet is mandatory. But how many are wearing? When the police is there, I'll start wearing it.
And wearing it reverse.
Yeah, wearing it reverse, right? And putting something on the head as if like it doesn't happen. But Tamil Nadu,
no. The thing is that now, if it's a housing project where an Allottee is required to take a loan, the banks are not sanctioning the loan without registration.
Agreed.
So the saleability,
no, all those things I agree. You must register before advertisement. Only that point only I am talking. So, if at all they are caught, they are levied penalty.
That is, see, there are so many promoters.
So it's a paper tiger.
There is, in many ways it is.
It's an evolving law. It's an evolving law. Who should be involved to make it effective?
All of us.
No. In fact, if you go on the Tamil Nadu Appellate Tribunal, the orders that are passed, maximum orders are directing the promoters to register the project. So even the Appellate Tribunal is upholding the orders of the authority directing promoters to register the project. So which means that it is happening, and in Karnataka many complaints are being filed where the first relief is direct the promoter to register. So the authority is issuing show cause notices. Of course, the penalty that we speak about 10%, we have seen 1% penalty being levied at the most, which is also run into, in one of my clients has paid about 80 lakhs penalty for not registering in time, for registering. So all that has happened, 80 lakhs, 40 lakhs, I have defended those cases. So which means that, of course, currently now we are in the regulatory phase, or I would say we are in the gestation period where we are still learning from each other. The authorities learn from each other. They have meetings where the chairmen meet. They adopt each other's practices. So any new authority coming, they visit each other, and it's a learning process because there is no one platform. Like you have the agreement for sale and construction agreement here, we don't have it anywhere else in the country. So it's an evolving law. What you say is right, that how many are registering? Many are not registering. But then when a problem crops up, it becomes big. So that's when
So this is what is important. Like, sir, this as we told, like there is no entry restriction for this business. Somebody sits at Toothukudi, wanted to market 3 acres of land, making a plotted development. If you ask, I don't know anything. I don't know tax, I don't know GST, I don't know RERA, I don't know anything. But the person has a capacity to go to China and buy the best product for his business. He don't want to learn the laws, learn the statute which is governing that business. But this may not be the future. Down the line, 5 years or 10 years, we can see every project which under which is mandated to register, they will all enter with registration. In Karnataka, there are 1,200 notices are sent to the different projects. Like they opened one window, put a selfie, which is any project which is marketing without registration. Put your picture and upload it. So this is something which is like allows everybody's participation as part of the compliance and the governance. Then automatically it will evolve, sir. So this is about the section for registration. They have some registration fees for at the time of application you have to pay the registration fee and get the registration. Next.
And Tamil Nadu has very high registration fees. We have slabs, maximum slab is 10 lakhs in Karnataka. Here we go as per the FSI and it's quite huge. As I know, some projects pay 80 lakhs, crore, up to a crore and all that. We don't have that. Telangana has very less fees. Similar fees is levied in Kerala, Tamil Nadu and a few other states. Otherwise there is a maximum limit. In Karnataka, maximum is 10 lakhs.
No. Why they should collect that registration?
You'll have to ask the government.
Wait.
Under the rules, this is notified. This should have been nominal. It need not be so high because you are already incurring so, and that cost only comes back on us as consumers. So, it's not so much. They don't need so much to administer.
Out any money.
They don't need so much to administer it. Even with such low fees in Karnataka, I think we are sitting with about 60-70 crores of money. Surplus money we are sitting at. And TN RERA will be very rich now because of the amount of fees
they collected from the promoters. This all passed on to the builders only, sorry, customers only.
I think we
Commercial
have break for
building
tea.
does not include malls, no?
Commercial building, there is no sell.
The lease model means no.
No.
Actually, long lease also applicable.
Yes.
Tamil Nadu, there is a long lease, there is a RERA is applicable. Even
I think TN RERA has recently passed order directing even the properties which are to be leased to be registered. That is before that, that is now before the Appellate tribunal and I think before the High
Before the
Court.
High Court, there is before the High Court on the long lease registration. Yeah.
We
It is a
wait for
registration fee.
now, no?
Yeah, next. Okay, then I will see this registration certificate. We are break, we will break for a tea. About 10 minutes, 15 minutes.
4 o'clock.
By 4 o'clock, we will come back and we will continue the session.
Sure.
Thank you. They will verify and they will send a notice for any shortfall of the documents. They collect the documents by issuing the notice 1 time, 2 times, 3 times, and after only satisfying by them in terms of the registration document sufficiency, they issue a registration certificate in Form C. Conditions of the registration certificate: the promoter shall enter into an agreement for sale with the Allottee as provided in Annexure A. Annexure A is nothing but your construction agreement and then UDS agreement, which is a standardized format. So this is the first condition. Second condition: promoter shall execute a register a conveyance deed in favor of the Allottee or the association of Allottees as per section 17, which is also mentioned that like when you register the conveyance deed only after receipt of the occupancy or completion certificate. Third is in terms of deposit of the money into the RERA designated account as per section 4 to 80 of the RERA Act. And fourth condition is to start from this period and the end with this period. That means to say that there is a validity for the RERA registration in terms of I have given the registration of the project stating from so and so date to so and so date within which you have to complete the project. And also a general condition, promoter shall comply with all the provisions of the Act and the rules and regulations made therein. So this is something which is very important for us to understand. The section 5, the class 5 talks about you have to comply with all the provisions. If you do not comply, then they can revoke the registration and they can levy a penalty. See, this is what is the Form C talks about. Next, ongoing project, they say that what are the projects which have received the completion certificate, not received the completion certificate as on date of implementation of an act, then those are called ongoing project. Next. Further, Tamil Nadu goes and say that, okay fine, Act says ongoing project, you have not received the completion certificate as on 1/5/2017. Tamil Nadu has something problem other than CMDA. DTCP, various planning authorities don't give a completion certificate. Then what do? Then authority has come out with a discussion with your, I think, which department? Housing department. Housing department has prepared the list of the project which received the application for completion certificate as on 1/5/2017. Those projects are posted and published in the website. These projects are exempted from RERA registration. So those are only a project which are exempt from the RERA registration. That is what is this rules talks about. So, Rule 2H of the Tamil Nadu RERA. Next. This is the statistics of Tamil Nadu. 17, 18, 19, 20, 21. If you see the last 2 years, 22 and 23, can you see a number of the application which is gone? That is what is the regulation aspect of it. It used to be 200, 300 in the year 2002. Total application received is 10,337 for RERA. In 2023, about 6-7 months, only almost about 5,000. So total about 18,000 projects we registered under RERA. Actually, it's a surprise for me who are all issuing the certificate to so many projects.
Where is the infrastructure?
Not sir, CA certificates. Who are issuing the CA certificates? Projects mandates the chartered accountant to issue a certificate to withdraw the money from the project bank account. Which chartered accountant is issuing? Either you or me only, right? We are not looking at that opportunity as a professional. Not only educating the customer, promoters, and also educating ourselves.
No.
Bankers have taken a blanket undertaking from a builder. I will comply with all provisions of law. Morning I was speaking to Selva Kumar sir, Tamil Nadu. We felt it, bankers are collecting. Bankers say authorities are collecting. Neither they are collecting, nor these people are collecting. Even chartered accountants are not issued. And the biggest challenge is you need to take architect, engineer and CA certificate. Architect, engineer, somehow they can give a backdated transaction. Can you give it, sir? UDIN is required. There is a mechanism. If somebody wanted to take a risk of issuing certificate without UDIN, they can take a risk.
I think you missed out one point. The statistics prove the sudden spike in 22 onwards is not in the buildings. It is in the layout.
Layout, yes.
Why do you don't need statistics? You open the paper every day, you
get it.
So what? The chartered accountant will be those people only.
So
where are the chartered accountants? You go and ask the G square.
Okay, so this is what is. I'm just telling you what is there in terms of the project.
Agree.
Okay. And also, sir, what happens is only in the Tier 1, Tier 2 cities there is a building concept, buying the apartment concept. Smaller places, if you go, they purchase the land, plot, and they construct themselves.
Except in Gujarat.
Except in Gujarat, except South Indian state, none other state has a.
Gujarat, there is only 1% layout. Rest all are
Rest are all flats.
Rest are all flats.
Nobody,
even in the villages.
Even in the villages.
Yes.
Nobody invests on land except South Indians. We have most attachment to the properties. The moment you leave these 5 states, nobody has an attachment to the property. There are more attached to the land. There are more attached to the businesses. They feel that business gives better returns than the investment in land. That is what they always look at that. Next. Yeah, accountability of the profession, as I was mentioning, like Maharashtra RERA has slapped a notice on a professional. Actually, Tamil Nadu has slapped a notice on one engineer. Actually, one architect has suicided in Tamil Nadu. Because of this, we issued a completion certificate without visiting a site. That becomes a big issue in 2018 or 19. So it is no more. So to that extent, it has an impact. Next. Madras High Court in terms of like rules cannot override the act.
So this is a very good judgment. In fact, I forget the name of the Honorable Judge of the High Court. He's been giving very good judgments, particularly when related to this thing. So,
Anita.
No. I forget his name. Subramanian. So, this is because.
What is the facts of the case?
This is where, by virtue of the rules, projects was sought to be exempted from registration. So, it was in this judgment that it was held that the rules cannot be in derogation of the Act. So, I think this is the only judgment from anywhere in the country which speaks about this particular aspect. In fact, Karnataka High Court, the very next judgment, Karnataka High Court has upheld the rules. So, this is the only judgment in the country where it is said that the acts cannot be in derogation of the rules cannot be in derogation of the Act. In fact, I am using this judgment in several arguments which I am before the Karnataka High Court also and in the Appellate Tribunal also. On the other hand, this is a case where I was before the authority and I got the order directing the promoter to register, but they went before the High Court, got my order set aside by relying on the very same rules which exempted the project. So these are two contradictory orders, one by the Madras High Court and one by the Karnataka High Court. So this is where, I don't know if you are aware of the concept of development management agreements, where the development manager merely manages the development aspect of the project and becomes entitled to a certain revenue in the project. In the range of 10 to 12% is the revenue that they receive. This is a concept that is now prevalent in Karnataka also, and I think quite prevalent in Maharashtra also. So in one case, one of the sister concerns of Shapurji Pavanji entered into a development management agreement and they were entrusted with most of the responsibilities. And the Maharera held that they are also deemed to be the promoters and they should also be added as an additional promoter along with the actual promoter who owns the land. So this is one such order where the development manager has been included, has been ordered to be included to be shown as a promoter of the project because the project is being marketed in the name of Shapurji Pavanji. So when they are lending everything and they are not doing, so that is why they asked, they said that no, you also be shown as the promoter.
Then what will be the role of that real estate agent?
A real estate agent, okay. So if you see the way the act is structured, there are only two things that need to be registered. One is a real estate project, one is a real estate agent. You are talking in relation to this?
Yes.
In relation to this, a real estate agent is somebody who facilitates transaction between an allottee and a promoter in a real estate registered project, in a project which is registered under the Act and receives remuneration for that. So this is not a remuneration for the facilitation of the transaction between a promoter and an allottee. However, this is a facilitation of the promoter to develop and sell the project. So a real estate agent who also is required to be registered, of course, it's a very important thing because there are functions that are prescribed under the Act for the real estate agent also now what merely does not facilitate but also make sure that all the information is given to the allottee. So which means that a real estate agent now, if he is promoting a project which is registered under the Act, should know everything about the project. So there are penalties stipulated under Chapter 8 as against a real estate agent who doesn't perform. So, sorry?
The online, is there online?
Everything.
Online agents also.
Online agents also. In fact, the allottees, in some cases they give incentives to the allottees. and say we'll offer you a discount or we'll give you some, even in that case, they can be deemed to be real estate agents because they are being remunerated. And in fact, while issuing a certificate as chartered accountants, if you are identifying or if you are identifying costs as commission, you are bound to ask whether they are RERA registered agents. Without that, you cannot say that yes, you cannot take that as an expense. So it goes to that extent. Some cases, I think there are questions raised how commission is paid to unregistered agents. So that is what is there. So this is regarding the development manager. Yeah. Okay.
Development manager. Next is in terms of the promoter, the definition of a promoter. One thing I would like to envisage and wanted to everybody to look into is, this is the act related to the industry, real estate industry. You may not interested to practice RERA, but if you are interested to practice income tax or GST or any other laws which is in and around real estate, you should know RERA. Because have you seen the definition of the promoter, real estate project, or the real estate project, or the carpet area in RERA in the income tax under section 80 IBA, and for the purpose of GST it says refer definition of a promoter, definition of a real estate project or a carpet area as per RERA. By virtue of that, you should know RERA, at least the basic definitions about RERA. For you to render a service of Income Tax Act, you just cannot rely on what the client gives or what the mere reading of income tax. You have to come back and read what is this. Because 80 IPA talks about the carpet area, right? And even that, what is that, for you to get a exemption of 80B, right? 80 double year something, first time home buyers, not more than 45 lakhs or some eligibility, right? For you to advise your client what is the basis for you, you should know the definition first. So that's where you should know about the basics of RERA for you to advise other allied laws. So similarly, the promoter definition includes, generally we call it as a developer builder, and also the definition of a promoter includes the landowner. Landowner is as part of a promoter definition. It is not that landowner would be silent by entering into a JDA. I will take my share of my property after 5 years or 10 years, or after 1 year once he completes it. Till that I will not involve. No. Because he has given affidavit to the RERA stating that I am also a promoter. If the developer fails to deliver whatever be the product or a project which is entered in agreement by after JDA, then landowner also responsible. In many cases, when the complaints are filed by the allottees, customers before RERA, they have included the landowner as part of the project, because you are given a land based on your condition or the development agreement I have entered with a developer. So even I want you to be responsible to change the developer to deliver what he has promised to you as part of the development agreement. If we say the project to be completed within 2 years, I want you to be active from the day one. Ensure that by 2 years you will complete. If not 100%, say 80, 85, 90%. At the end of second year, you come and say you have not completed anything, I don't know. These are the agreement. Right? So this is what is important as a landowner. If you are advising to a landowner, please tell him that he is also responsible under RERA. He is also liable under RERA for all the provisions of the Act, including the money collected from his share of the unit should be deposited into the RERA designated bank account. As Selvakumar sir morning told, government agencies are not spared from the RERA. Like CMDA, they have to go to the RERA to register their real estate project. Slum development board, you wanted to project the real estate, they should. Housing board, Tamil Nadu housing board should come under RERA. Imagine government agencies are itself not spared. Where is the question of private bodies, private agencies or the private builders? Next. Even as I mentioned, long leases, Tamil Nadu is full, say that it's sale or lease, so they are saying that for the lease also RERA is applicable, come and register.
Yeah, this is Maharera.
Maharera, but however Tamil Nadu is also
where the lease is for 999 years. 999 years. So they said that the authority held that these are projects registered.
And also industrial units, Tamil Nadu upheld that. For industrial units also RERA is applicable because what you are doing is a development activity. Instead of residential, you are doing the industrial. There is a land, there is a development, there is a providing the electricity, water, sanitation, and the road infrastructure. Why you should be exempted from that? Tamil Nadu RERA says upheld, it should be required to be registered under RERA. But Maharashtra has a different opinion, need not to be registered.
And Maharashtra says the
Act it is not.
it is not there.
Commercial.
Also, the definition of apartment, Maharashtra authority relies on the definition of an apartment, which does not include industrial. So
But
that
it
is why
says
it has,
commercial.
Maharashtra has held that industrial plots are not.
But it says commercial, the moment commercial include the industrial also, that's how the definition has been brought in. However, in my personal view, this is also including the building, land, infrastructure, which should also be part of the RERA itself. Next.
So next is the judgment rendered by the Honorable Supreme Court of India. This is in November 2022. It laid to rest many questions. So this is muted promoters. One of the most earlier to this was the Neel Kamal judgment, which was rendered by Bombay High Court, and now this judgment. There are 4 questions which were answered by the Honorable Supreme Court in this. The first question is whether the RERA Act is a retroactive or retrospective in nature. It said that it is a retrospective in nature because it does not apply to anything which is before, and it is only the ongoing projects which come under the ambit of the Act. So it is retroactive in nature and not retrospective. Nothing retrospective can be taken. And of course, the next question that was before the jurisdiction to the way the authority is structured is we have the regulatory authority and then we have the adjudicating officer. Under section 72, the adjudicating officer can adjudge compensation is what it said. So the question was whether the adjudicating officer can also order for refunds and also order for interest on delay. So by virtue of this judgment, the division in terms of the judicial powers that can be exercised by the authority and the adjudicating officer came to be settled, and wherein it said that the orders directing refund and interest have to be dealt with by the authority, and only such cases which deal with compensation to be paid should go before the adjudicating officer. So where we would file a single complaint and go before the adjudicating officer and he would do both, now we can file 2 separate complaints, one asking for delay period interest and refund if we are asking, and compensation. Compensation would be for your mental agony, for the rent losses, for any other losses that you have incurred in addition to the getting. So this was the second question. By virtue of this, in fact, many authorities where Karnataka had about 5,000 complaints by then, of which majority of them are being held by adjudicating officer. But then all of them got shifted to the authority. So for some time, there was a huge delay, and that delay is still continuing now. So, of course, there were many cases, like in Maharashtra, the members individually hear cases. In Karnataka also similar order came to be passed, wherein the delegation between the authority, like you have 1 chairperson and 3 members, we have 1 chairperson and 2 members. There were separate benches which were set up. Karnataka has 6 benches. All 3 of them sitting, 2 of them sitting together, and each one sitting individually. So this question came before as I remember, before Punjab and Haryana High Court also. And this also was taken up because this was an order passed by a single member from the Maharashtra, Maharera. So since that came to be challenged, whether the authority can, by an order, delegate the powers to a single member, that was upheld, saying that yes, under section 81, it can be delegated. Then the appeal provision under section 43(5), the proviso to which requires that in case of an order where penalty is levied, 30% of the penalty is to be deposited to prefer an appeal. In any other case, 100% of the money that is awarded to an allottee should be deposited. So this came to be challenged. Allahabad High Court has already held that yes, you have to deposit 100%. Supreme Court also confirmed that if you have to file an appeal, if a promoter has to file an appeal, so it is this particular section can be violative of your fundamental rights also when it comes to if you differentiate between an allottee and a promoter, because in case of an allottee, even if there is an order of penalty or delay, the allottee pays only 5,000 rupees as court fees, whereas the promoter is expected to pay the entire money, sometimes in crores. So if it's a refund order, let's say 1 crore or 2 crore is the consideration, if you take from the date of payment till realization, the interest also accrues to a huge amount. Just to file the appeal, they have to deposit the entire money, otherwise the appeals are dismissed. So effectively, they are left with no recourse without having the money. So a promoter who is unable to complete the project is already in a financial distress, and then these orders get passed. When these orders get passed, neither can they satisfy the awards, neither can they go in appeal. Even if it's a question of law, which is involved, let's say that the order comes to be passed ex parte by virtue of the notice not being served, even that order cannot be challenged without payment of 100% of the money. So this is a difficulty. So for promoters, it becomes very important to defend the complaints effectively now.
So with this,
no, probably it is a deterrent.
It is the legislative intent. If you read the judgment, the intent is to make sure that when you take money from the allottees, you be diligent. If you suffer something, you pay the money, so that if you lose, that money goes to the allottee. So in an appeal, when the money gets deposited, and if the promoter loses, the money goes to the allottee because rightfully it is their money. It is public money. So the next question was,
I just wanted to extend that. Why important about advising the client? We can fine, let the pass an order. What will happen? Like what will happen in any other act? We'll see. We'll see in the appeal.
20%.
How much you deposit? 20%. In GST maybe 15%. Or file an application for stay of demand. Right? All those is not possible under RERA. And it is huge. It is huge also. That is the first thing which we should advise. Like we cannot take it lightly in terms of any orders or any complaint which are filed by the allottees in terms of any compensation or the refund. Number one, because going to appeal is almost a nil cases, because you do not have money. If you have money, you can settle that allottee and you can send him out. Number one. Second is, when you certifying your financials, the order passed by an authority or adjudicating officer is equivalent in degree of a court. Right? 1 crore he has paid it. They awarded a compensation of 30 lakh rupees for delay for giving the possession. Where do you account this 30 lakhs in your books? Is it a liability? No? Order of a court with the compensation. What will you say?
No. If you are going to contest it,
And if you are before an appeal, yes.
Yes.
1.3 crores, if I had money, I could have called him and let him and said, I don't have money, I am not prepared an appeal.
So instead of simply disclosing by way of note, you have to take to pay.
Now it is, you have to provide a provision for these expenses of this penalty. Whether it is a way of penalty income tax doesn't allow you. And the moment you say 1.3 crore or 3 lakh rupees, if you account it, it is nothing but you are creating a liability on the customer. That means you are accounting that as an expense. Then you have to deduct the TDS on it.
No, on compensation, I don't think there is any TDS.
Delay interest, not a compensation.
Delay period interest also, I don't think. Income Tax Act does not, in case of any compensation, there is no...
TDS would be land acquisition, compensation for land acquisition.
TDS income, that is sale of land.
This is also an income.
I know, okay.
Okay, there would be because there could be a chance. Okay, maybe we'll because it talks about the interest, 8% or 12%, 10% would be calculated as an interest. Money has a time value. That's why your interest you are calling as a compensation for delay. However, it is a interest only. Okay, department may look at that view. On the safer side, you take it. What I am saying is whether you provide it or not, you should ask an order. How many orders on the project if it is delayed is what is important.
So, of course, I don't know how many of you are aware, the way to recover money under RERA is under section 41, and even if it's an order that is passed in favor of an Allottee, it has to be recovered as arrears of land revenue, which means to the revenue department, which means in here is the collector, no? We have the collector, we have the deputy commissioner there, the tahsildar and the collector. Yeah. So those across the country, the recovery is quite difficult because it has to be recovered as land revenue, which means that you take the revenue recovery certificate, then you go before the district collector, and then the collector has to assign a tahsildar, then you have to. So there is no provision to arrest. So because that deterrent is not there, so like you said, it's become a paper tiger in terms of in terms of an order that is passed either for penalty or interest or whatever. Even for the authority to recover the penalty that it has levied itself is also difficult because it has to be recovered as land revenue. The Supreme Court, the question came whether it can be recovered as land revenue. Yes, it has been upheld that it can be recovered by land revenue. And as I know, the central government is not getting into amending the act because there's a lot of pressure from the promoters to dilute the act. So it's not going down that path at the moment, so allowing it to settle for some time and then maybe later. This is one of the provisions. The recovery is a provision which needs amendment to make it at least on par with the Consumer Protection Act, because there is a right to attach and for arrest also. By way of a circular, Gujarat RERA has said that they are arresting people. They are arresting promoters who are not complying with the orders. But that's not the right thing to do, as we discussed in some forums, because only by virtue of the state enacting a law can arrest be done, because there you are curtailing the freedom of a human being. So that is, but however, I believe it is effective in Gujarat. Many promoters, they just bring them and put them in the office. So some of them have been made to sit in the RERA office for 2-3 days, and then finally they have come around, they paid. So that's okay. So this is another order. We are in between taking up some decisions, important decisions. So this is an order passed by Tamil Nadu, the Appellate tribunal, where in one particular project, as we earlier heard, that the time can be prescribed as per the permit. That is the building plan sanction, the validity of the. So in this particular project, the promoter sought to increase the time for a longer duration. The authority disallowed it. They went in appeal before the Appellate tribunal. The Appellate tribunal also said that no, nothing doing, only as per the validity. Even though you may get a renewal later on, when you get the renewal, you come back and extend it or take fresh registration and then upheld the order of the regulatory authority. So the next is, it says, of course, the question here was that one, the project was, the sanctions were taken as two separate projects. In fact, the land came, the entire land fell under two villages, jurisdiction of two villages. And in one village they took the sanction for the layout, another portion they took sanction for villas. The villas, the structures were completed. So based on the fact that the structures, they of course misrepresented that the structures were completed. And then they came before the authority and took an exemption from registration of the entire project. So the allottees went before the authority and said that the entire project has to be registered. The authority held that, while the authority held that the project is registrable, the promoter rushed and came and registered.
but they registered in two separate phases, phase 1 and phase 2. So then that went in appeal, and the question was whether the promoter has an unfettered right to register the project in two separate phases while the project was advertised as a single project. So it was disallowed. It said that no, you cannot register as two separate projects. You have to register as a consolidated project because your advertisements, your initial offering of the project was the entire project as a single project. So that was disallowed. So this is also quite a when it comes to phases, how a project like this becomes section 12, the veracity of the advertisement and what you have promoted and what you are trying to do later on. This is a very good judgment. It's quite a long judgment. Very nice, very well written.
So, whatever Suhail explained, these are the cases like the complaints filed and the outcome of it. These are all like a, I can say that it's all curative, whatever the complaint which has come. If you know in-depth knowledge of RERA, how RERA and what RERA requires, as a professional, we can listen to the builder or a promoter. What is your intention? What is your scheme of the project? You wanted to do a villa, you wanted to do a layout, you wanted to do a mixed development.
Stop you for a minute. Let me stop you for a minute. So, we were initially discussing about the car. When do you buy it? So, what you buy is a product. For a promoter to be a promoter today, it means that certain financial strength is required for a promoter to sustain. Like when we said at point 9 you launch the project, which means that he should have incurred all that cost to come there. Sometimes RERA registrations we know takes about 6 months to a year, which means that you've already invested in the land, obtained the sanctions, you are just waiting for the RERA registration to launch the project. So when we advise, so as professionals, where you can step in is even at the initial stage itself, that when you conceptualize the project,
before entering,
we also say that when you sign the joint development agreement itself, you come and talk to us, we will work out the numbers to you. You may go and offer 35, 65. Whether that 65 is good enough for you to complete the project, whether have you taken the finance cost, whether have you taken the cost of anything getting stalled, anything getting delayed. So you step in right at the beginning as financial professionals. So that is the role that we can play as professionals in this real estate sector, because what you sell now, we have to impress upon the promoters that what you sell now is a product, it's not a scheme anymore.
And I just wanted to add, the biggest developers fail to understand this itself, because they have the best professionals with them or the in-house team to advise in terms of the legal aspect. But when it comes to a RERA, the way that it's required to do the business, they fail to understand and fail to communicate it to the management or to the respective stakeholder. That's a very important thing for us to play, because management intention is to make this entire 10 towers as a single project. But at reality, somebody should develop and select like one tower. So marketing people should understand that how they are marketing it. They say that this is a 2 lakh square feet of the clubhouse in the project. For how many? For the 10 towers together, right? And how the marketing fellow will talk, you tell me? Sales and marketing, sir. Right? Attractive. They wanted in the course or in the pressure of they selling it. They said tell everything. There may be those things could be a fact, but when that to be delivered is important to you. You are selling a first tower, stating that 2 lakh square feet of the clubhouse is provided. When you provide it at the end of the 10th tower, on the terrace of the 10th tower, that takes 5 years or 10 years. That's where is important for us to understand what is to be told, what is not to be told is also important. Under RERA, that comes with an experience, that comes with like understanding why this act is there and how it should be implemented at an organization level or at the figure, like how the authority also looking. Like if you see that what are the cases, complaints which are failed, which are orders are passed, don't you feel that those things could have been avoided if the same thing could have been discussed at the initial stages, right? Fail to understand, okay, you do whatever you want to do, we'll see it later. That attitude doesn't work under RERA. Okay, that attitude doesn't work under RERA. If you stall a project, entire project would be stalled. That would be the challenge. Second, if you are not completed a project, complaints are filed. This promoter is unable to launch a new project. Authority is not giving. You are failed in one project. Some of the authorities. One they say that you are failed in one project itself. Then why are you doing one more business to make some more customers stuck in the project? So that is how this industry is looking at. Okay, and also bigger challenge is if this goes and like admit in NCLT. If the one project is getting admitted in NCLT, what would be admitted? A project or entity? Entity is admitted, right? Entire project, entire entity comes into a halt. Like example, Godrej is doing one real estate project. In the land was in the Godrej which acquired about 100 years. If something happened to it, what is admitted and what is at risk? What is the impact of it? I was talking to one of our members. Godrej is incurring 155 crore rupees to correct the defect in the project. And that was not there earlier. Like 155 crores in correcting a defect in the construction in the project. Imagine to that extent there is an impact on it. Next
we have about 20 minutes to go. So we'll quickly run through the rest of the presentation.
And this is very important as a chartered accountant, financial management 70-30. You're all clear. There is one is there should be a bank account. That bank account should be opened and submit a copy of that bank account to the RERA for getting a RERA registration, number one. Second, every 100 rupees collected, how much should be deposited? Where? So, designated bank account. For what purpose? The 70 is for what purpose? Use the money for the purpose of construction and land and construction purpose. Very clear. That means this money is for a specific purpose. This should not be used for another than the purpose of the land and construction. When should I withdraw this money? It is like a reimbursement. First you spend, come to me as a chartered accountant, I issue a certificate, you go and withdraw this money. That was Mahajan Sara was also telling. Act is given power to a chartered accountant to issue a certificate to withdraw his own money. Don't underestimate our powers, our rights, or our professional opportunity, or the obligation or responsibilities given to a chartered accountant under RERA. Without my CA certificate, he cannot withdraw the money from the designated bank account. So can you issue a certificate closing your hands or eyes? Because to whom you are responsible? Of course, fees would be paid by my client. For whom you are responsible? The public money is the money which is belonging to the customer, which you are allowing to withdraw it. So that's the important aspect of it. Correct sufficient information, because we also started like when customers are filing a complaint, they are also including the professionals part of the complaint. Because of your certificate, they are withdrawn the money. If you wouldn't have issued the certificate, builder wouldn't have withdrawn the money from the designated bank account. So to that extent, it has an impact. Ensure that before you issue a certificate, proper documents are maintained, proper completion progress is shown, and which is on the ground also the completion would have been done, and the sufficient document or evidences are available. And the 1, 2, 3 is the one is the architect, 2 is the engineer, 3 is the CA certificate. 3 certificates required for it to withdraw the money from the project account. And CA certificate give the eligibility to withdraw. Architect gives the percentage of completion. Engineer value the what is the value of the construction. CA will give the entire eligibility to withdraw from the project designated bank account. Very important, and this should be obtained at every withdrawal. In every CA certificate, eligibility would be given. Till that eligibility, he can withdraw it. Beyond that, again he has to collect the fresh certificate for the purpose of withdrawal.
What is the frequency of withdrawal?
You can withdraw on daily basis. Eligibility I have given about 10 crore rupees.
till you withdraw 10 crore rupees in the 70% account, use this certificate. The moment you exhaust this 10 crore rupees, come back to me, I will issue one more certificate looking at the further progress of the development of the project. Having withdrawn it, it should be utilized for the project to clear your liabilities on the project, whether it's operational liabilities or a borrowings. It is not that you withdraw it, you borrowed everything, every material is supplied on a credit basis, you withdraw this money and go and invest somewhere else. No, you have to dissolve, you have to pay that liability, whether it's a expenses towards the development or expense or a borrowings which you have made for the project. So that's the important aspect of it. Yes, sir.
Before we issue the next certificate, do we have to see that the earlier funds that
Yes,
we
yes.
used for
Yes,
the
yes.
purpose?
Yes, certainly.
And start the company?
Yes.
Yeah.
So what about the UDS? 70/30 will apply to UDS also or only for the construction?
No,
Any money, total
100%. UDS and construction is not only here. You have two separate agreements. Otherwise, no other. So it is you put together. It is 100. Out of that 100, 70 has to go.
70 and 30 has to go. And one of the member was asking what will happen to GST. In most of the states, they say that GST is a pass-through. Don't appoint that GST as part of the 70%. Keep it aside, collect it separately, and you discharge separately. However, few of the authorities don't mind. If you collected that deposit, you deposited 70% of GST to it, only take 70% of GST from this, 30% from the other account. So there is a fair understanding, fair clarity on that. That is possible. Next. These are all the chartered professionals like architect, engineer, chartered accountants are part of it. Section 56 has given a power to the professionals to appear, represent before the authority adjudicating officer as well as the tribunal, where we can represent the complaints or the cases before them. Next.
So in Maharashtra and Gujarat, we see a lot of chartered accountants who are practicing full-time RERA, even before the authority as well as the appellate tribunal.
As we mentioned, quarterly updates. You may ask why quarterly updates. We are filing monthly GST, monthly income tax, that and this. Again, this. Yes, you need it because it's a public money. It's a public money involved. You have given promise for them to deliver something, and you should deliver it. What is there as part of the quarterly update? Progress of development work. At the time of application, section 11 mandates you to give the progress of development. When will I complete the foundation? When will I complete my flooring? When will I complete my roof? When will I complete my electricity, water? So against that, whether you have completed or not, you should start giving that. That means I have a clarity now. Progress of development work. Initially you have committed. Whether you are adhered to it or you are achieving it. If not, how much is the gap? So that will give some idea to the authority that this project will end up with another 3 months extra, or 6 months, or it may not complete at all. Looking at the progress. So this is what is important, and looking at that, like because many of the states are monitoring very closely in terms of the development of the work. When you digitize it, you will have a document with you in your hand whether you are achieving the required progress on quarter basis.
Photographs also, sir?
Huh?
Photographs also.
With photographs, sir. Yes. No. This is what is important. List of number of types of apartment plots as the case may be booked. That means generally we say, sir, if you don't purchase today, tomorrow there is no units are available. Last 3 units are available. Other way is booked only 3 units till now. So those gimmicks are not possible now. They say that 3 units are, how much units you have sold it, that is available. You go to Tamil Nadu RERA website, there is a progress report which is published in the website itself. You can click, you can see that out of 250 apartments available, 38 sold, 188 sold. You can make a note of it, you can make it. That itself is a primary document for us to understand whether project is sufficiently, or project is purchased sufficiently by the customers. Next is number of parking slots booked, money collected, money spent, what is the progress of each building, entire phase, and each floor photographs, what are the approvals received, any modification in the plan, entire aspect has been covered as part of the quarterly progress report. Next. This is a quarterly compliance is a mandatory. Failing with section 60 attracted. Section 60 talks about 5% of the estimated cost of the project. Like anything we don't levy lesser than 5%. Any non-compliance under RERA minimum 5%, sir.
So if they levy 2%, 2 times or 3 times, then RERA is more profitable than your bidder itself. Okay, to that extent there is an impact. Next, advertisement guidelines. It's advertisement, we can talk entire day for advertisement guidelines. You know how the advertisements are made? Who made these advertisements? Who prepares this advertisement catalog? Who prepares? Advertising agency prepares. Very good. What is the qualification of advertisement agency? Are people who prepares it? Creative graphic designer. The more creativeness you are, more would be paid, right? Did you know about the project details? What architect doing, what engineer doing, what the intention of the promoter? He copied from some other project, put it and give it to you, your name, your RERA number, and knowingly, unknowingly, your sales market people has advertised and published it.
Without number.
With number, without number, whatever may be, right? So that is what is important. We say that 10 minutes from the 10 minutes to airport. You have seen that, right? Right? World class amenities. Nearby Chennai. Nearby Chennai. How much near? For me 100 kilometers near, sir. For you 5 kilometers. So this is the importance of advertisement. There should be a clarity. The moment you say that 10 minutes to the airport, what time? At least at midnight you should be able to prove that I can reach 10 minutes.
By road or flight?
I don't know. That's what you should have a clarity. Somebody advertise should have a clarity at what time, what speed, which car, which vehicle you reach in 10 minutes. Okay, so that is what, like near to hospital, what is that, schools, Kalyan Mandap, how much near? Hospital. What is near to you, madam? For me, next to my house is near always. Okay, for you it may be 1 kilometer, for somebody 5 kilometers. So there should be a clarity when you give advertisement. Section 12 talks about veracity of advertisement, and if that is not delivered by the developer, and customer can file a complaint under this. That is what is section 12 talks about, sir. Section 11, every advertisement you publish, there should be a RERA registration number. If there is no RERA registration, go back to section 60. 5% penalty can be levied. Next. Next is the guidelines. Extend the validity if the plan, if the registration is lapsed, file an application, pay the fees and extend the validity. But the only thing is you have to pay the fees. You have to go to the process. If you are advising the customer, please tell them, put the additional time. Like don't be heroic in terms of putting. You see all your practices, 20 projects you have delivered, 2 years delay in all the projects. 21st project you cannot deliver in the normal time, right?
But here you cannot register without validity of
the existing of the plan. At least to the plan you register it, right? If you are able to complete in 24 months, put 36 months, put 48 months. Otherwise you have to come back and file the extension. When filing the extension, one you have to pay the government fees, second you have to pay my professional fees also. Okay, that is the importance. Next. Modification. Earlier this used to be this modification is any registration modification, you can modify it. Next. Completion under RERA. Earlier there was no guidelines in terms of what is meant by completion. Somewhere under, if you read the entire act, okay, and also understand the obligation of the promoter under section 11, which gives the reasonable idea for you what is meant by completion. What is meant by completion for you, sir? How can you say a project is completed?
All the houses have been occupied.
Okay, all the houses are occupied. For a builder, for him it is not a houses. For him, what is it? Ready for occupation, right? There should be occupation. Whatever you promise in what? Agreement for sale, marketing collateral. Please deliver it. That's all is required. But for a builder, what is meant by occupation? What is occupation? Sir, I have given your house, flooring done, painting done, plumbing given, you go and occupy. You leave the lift, I will give it later. Why do you need a lift when you are in a ground floor, sir? So, completion under RERA is like whatever you promise as part of your agreement for sale, what you have promised as part of your marketing collateral, that is called completion. Plus, end up with you having the formation of an association,
hand over the corpus, and then you move out from the project. That
What
is
is
what
the
is the
limit
completion.
for corpus?
Then there is no limit, sir. There is no limit. Next. Completion under RERA, promoter shall be entitled to withdraw the balance amount lying after completion from the RERA designated account. Next. Agreement of sale, which already morning Sir mentioned, Suhail mentioned. There is a construction agreement, UDS, annexure A to the section 13, and again rule 9 mentioned that there is a format. You have to follow the format the same thing. Next. Next. One side, earlier it used to be a one-sided agreement. We all know how it was a pre-RERA. If I delay the possession of my apartment to you, I will pay 5 rupees per square feet per month delay. If you delay it, payment of installment 24% interest. Now under RERA, maximum is MCLR plus 2%. Either you delay or me delay. So made the standardization. Agreement formats are made it. There are no negotiable clauses. This is a mandatory clauses as part of the agreement. So one-sided agreement is all put to rest. Next. Complaints already we discussed in detail. Who can file a complaint, how the filing of a complaint, and what could be the reliefs. Next.
There are two provisions under section 31 also you can file a complaint, and also under section 35. Section 35 in relation to anything which is not compensation or anything else, let's say non-formation of an association, non-registration of a project, or violation of the sanction plan, not adhering to the sanction plans, not taking two-third consent and then modifying, mortgaging after entering into a sale agreement. So any of these issues can be taken before the authority under section 35, or anything else for adjudication of, for refund of money, for delay period interest, all of that you can go under section 31.
Next. This is how the, in terms of discussed it earlier. Yeah, complaints you have seen that. What are the complaint, number of complaints filed is about 1000 complaints in Tamil Nadu. Next.
Not much. We have 10,000
10,000 in Karnataka.
And
Maharashtra about 30. UP is about 40,000 plus.
50,000 complaints. Yeah, 50,000 complaints.
They're all good. Your builders are all good. Your customers
They
are
have,
also good.
I think they also have 3 benches.
Yeah.
It's a country by itself.
So this is all about the refund and also timelines of.
Otherwise, bulldozer.
Otherwise, bulldozer.
Yeah.
So section 35 empowers the authority to investigate. It has the power of a civil court to investigate. It can call for records. It can do everything. We invoke this provision quite a lot in Bangalore, where the authority directs. In fact, we've got authority to also impede financial institutions where financial institutions are not coming forward, providing for a one-time settlement, or not coming forward to assist the promoter and the allottees to go on with the project. Some of these private financial institutions are very greedy. They don't come forward. Some of the NBFCs, they don't come forward and they hold on to the loan, and it just keeps multiplying to the extent that the project becomes not feasible. So wherein the allottees are put to difficulties. So in one case particularly where I am appearing, the authority in fact ordered the financial institution to come forward, directed to come forward and give a proposal for settlement, and then they are in appeal before the appellate tribunal there. So that is the power of the authority to even go beyond it. And one Rajasthan High Court also passed a similar order, and which was upheld by the Honorable Apex Court. So yeah. So offences and penalties, I think morning up to 10% and 5%, and even an allottee can be penalized. Now let's say an allottee is directed to pay money to the promoter because he is defaulted and not paid as per the schedule of payment. So then the allottee can also be penalized under the Act. And
compounding. Yeah. Uniform of agreement of sale that we have seen, we have understood.
No. This is while hearing a petition, the Supreme Court has directed that for the entire country, we should have a single model sale agreement. So it has directed. This has been quite a few months. We haven't heard anything thereafter, but of course it has solicited response from all the states. So we don't know. Maybe there may be a day when the entire country will follow a single format of the sale agreement. Yes.
So, yes, I think
are the bigger one.
This is WP HERA. The West Bengal, I don't know West Bengal, if you know West Bengal and Kerala tried to enact their own regulatory acts. So, of course, Kerala withdrew it and then adopted the central enactment. However, West Bengal did not do that. So, the Apex Court, in a judgment, then it set aside the act which was enacted by the state government and said that you have to go by the central enactment. Thereafter, the regulatory authority was formed, and then now they are functioning under the central enactment.
Section, the entire act?
The entire acts, they had WP HERA, West Bengal Housing something, Housing Industry Regulation Act 2016. So the two states, the two communist states, they said we don't belong to India, so we go our way.
2016 is the DD.
Huh?
DD.
But the states as such are communist states. So, yeah. So this is the order that we were talking about, where the surface, where the financial
bankers don't have rights to attach under surface when allottees are in the project.
Yeah.
Because under section 88 and 89 of the Act, RERA Act, this prevails for any other act. So that's what is the section of 88, 89. And if you see the reports and assessment, authority is holding on the huge reports, huge information on the very real estate project. They can assess at any point of time and call for the income. So this is a bigger picture of the RERA, like what we intend to achieve in the first slide about transparency, accountability, responsibility, standardization, right? Speedy dispute resolution. Because earlier civil court or NCDRC used to have the used to hear the complaint. Now there is a RERA. RERA is the jurisdiction for the real estate complaint. Then it will be more effective in terms of the authority to issue the orders also. They know that XYZ builder, they know their attitude, there is no problem in the project, they can pass the orders at a very faster pace. So that's what is possible. It's more of a preventive and making rather than becoming curative. As a chartered accountant,
we spoke about it.
Yeah, many things are we have spoken
Play a
about.
vital role.
Yeah.
It depends how you gain a foothold in the
subject.
subject.
How opportunities knock out jobs.
Yeah. So
huge opportunities. There is a huge opportunity in terms of this. If you intend to practice, okay. For you to intend to practice, you have to leave what you are doing something and step into
So it's
new.
in addition to that. In addition to that, like I continue with my practice. He continues with his practice, but we
spend more time
on
better
this
than
subject. On this subject, yeah.
And forever, forever. Housing is forever. So guaranteed. GST is there or income tax is there, I don't know, but real estate will be there forever. That would be an opportunity for us.
Any questions you'd like to?
We'll hear the questions after this, okay? Just let's look at that what we have covered since afternoon or since morning with the sir. First we have seen about, just take this book, I'll just pull you. I know that like you will not have a time when you go home. Okay, just pull out this. Section 1 talks about what? Objects. Section 2?
Definitions.
Perfect. Section 3?
Registration.
Pre-registration of the real estate process.
But pre is the word missing here.
We read it. Prior registration. Prior registration.
Not in the heading.
Yeah, prior registration of the real estate project. Section 4 talks about details required for you to file an application, quarterly certificates, and also annual audit. Annual audit is section 420 provision 1 and 2. Having filed an application, what will happen? Registration section 5. In registration you will get start time and the end time. If it is lapsed, then what will you do?
Extension.
That is section 6. Even after you get the extension, if you don't complete,
Revocation.
revocation, that is section 7. After section 7 revocation, what will happen? Hand it over to the either to the allottees or to the new builder developer. Section 8. Who will facilitate these things? Agent. Section 9 is the registration of an agent. Section 10 is the duties of the agent. What is section 11? Duties and obligation of the promoter. Section 12 we talks about veracity of the advertisement. Section 13 we have seen about agreement of sale. Section 14 is about the modification into the sanction plan and the specification. Section 15 is about transfer of rights in the rights and liabilities of the project. Section 16 talks about the insurance of the construction insurance and the title insurance. Section 17 we are talking about when will you convey it after receipt of the OC within 3 months, and also about transfer of common areas, transfer of title, association, common area association. Section 18.
Section 18 is about the delay period interest, and also Section 18.2 also gives, Section 18.2 gives title assurance in perpetuity to an allottee without the law of limitation applying. So which means that if you find that the title of the land stands vitiated by anything, let's say that tomorrow it is found to be a lake, or let's say that there is a litigation where there is a claim and the title to the land is lost, then it is in perpetuity. Even you can come back after 20 years and go against the promoter, of course, if the promoter exists at that point of time. But then the law of limitation does not apply under Section 18.2, and under Section 19 is the obligations of the allottees. So allottees are also put under obligations to pay money on time, to participate in formation of the association, and to many other things which, and a promoter can file a complaint against an allottee if they don't adhere to those, if they don't fulfill their obligations under Section 19, which we have already started doing, and we are getting orders also against allottees. So because an allottee pays 10%, enters into an agreement, registers it, and vanishes, doesn't come back, that inventory is stuck. It could be an inventory of 1 crore or 2 crores also, but the agreement is registered, which means there is an encumbrance in the registration office, and I cannot. So in those circumstances, I am forced to file a complaint where the allottee is not coming forward, and then ask for interest to be paid. So the moment we file the complaint, the allottees come running and say, okay, we'll pay.
What happens if the allottee dies between the start of the project and
the legal heirs can come forward, and whoever succeeds to them. So automatically the class 1 heirs under the Hindu Succession Act can come forward and take it forward, or withdraw from it if they are not willing to take it.
They have to apply to the authority, or
they don't have to apply to the authority. They can simply go to the promoter and say that this person is no more, and then we will take over, and then it gets assigned to them. Then they either move forward or take it back. So Section 2 to Section 19 is relevant as professionals for us to know. Definitions are very important. You may find like carpet area is adopted by Income Tax Act, for PMAY, so for so many other things. So it becomes very relevant for us professionals to understand. Yes.
in Tamil Nadu they have coined a new terminology, super built up area.
Super built up area has always been there. Super built up area does not find a mention even in the engineering books. It is
ingenious method.
It's an ingenious method.
Engineers.
No. It's an ingenious. What we say is an ingenious. It's not. The whole thing is that it's called as a loading factor. So in some cases the loading starts from somewhere 18-19%. It goes up to 40%, which means 1,000 square feet carpet area apartment will become 1,400. So that loading factor they don't even disclose to you. They don't tell you I'm loading 15%, I'm loading 20%, but however they are charging it, the whole thing is that you have to assess now what we say to be sold as per carpet area. The authority does not, the Act does not prescribe that it has to be sold by way of carpet area, but the allottee should know what is the carpet area. The entire thing is about disclosure of the carpet area, that is for you to know what is the carpet area. So then you can take a decision. If you are being sold at 1,000 square feet carpet area and then he is charging for 1,200, you will still say okay. But if it's 1,000 and they are charging for 1,500, you will say you'll be reluctant. No, I don't want to buy this. So that's the whole thing. The whole thing is about disclosure. The whole thing is about the consumer knowing what he is buying into. So that's about the carpet area. I think with this we can close. It's
5:10. We are done with our side of presentation. If you have any questions, we are more than happy to take it. And in a given time, we could try to cover maximum. Post lunch, is always a challenging, but somehow we could cover best possible from our end.
We would have enjoyed it if it was a full hall. So yeah.
And maybe days to come, maybe institute may call, okay, there is an opportunity, there will be something for the professionals to look into this industry itself, either as a advisor, otherwise also this industry has to grow itself and has to grow in the regulatory manner, and there's a lot of things every individual end up with doing it. Either a customer or a promoter or a banker, lender, investor, whomever we mentioned, right, in the morning. So everybody has a play their role, their part of their role in terms of. Finally, I would like to say that this law also protects the builder himself, okay, because generally it's a human tendency to divert the funds or look for the better opportunity. When my 70% amount is lying in my own bank account, I need not to look at something else to do. My construction is taken care automatically by way of this. That's a big relief to any builder that will have it. Like, so then I'm on track in terms of my progress. If not 100%, maybe 80-90% I could achieve confidently. That only is required. If that is achieved, I'm sure that taking to 100% is not a challenging. That's why it also protects not only an Allottee, it not only protects the customers, it protects the builder himself. When he builds, what will happen? There is a cash flow mechanism. Vendors get their money, lenders they get money, government get their share of revenue of taxes, and customers get their houses. So it's a complete a cycle where everybody is satisfied. Like 10 rupees, we have seen that, right? Everybody owes 10 rupees to others. 10 rupees will suffice, like here everybody is dead. The same thing, this cycle, if you properly maintain the 70%, I'm sure that this industry grows in a very disciplined manner and a better manner. And the next generation will love to come to this industry, to part of this industry to provide the services, rather than now it is part of like somebody's a group or somebody's like, the morning you said what could be a qualification of this, that may not be, that can be lifted and a better people can and part of this industry for the bigger growth. Thank you.
If you also see many promoters who are in distress now, the projects which are in distress are because of this 70%. Because no more they are able to divert those funds which they were earlier used to do. They could not divert it once RERA came into force, and they had to adhere to it. So that is why, of course, some of the projects which were doing well, okay, but the ones which were on the fringes, they became bad and they are not able to recover. They are not able to recover now because they are not able to divert funds, they are not getting additional funds, the financial institutions are not giving them any more money because they have already diverted that money or misused that money. So yes, to that effect, I would say it's not a paper tiger because it is making the promoters to be compliant, and also it has brought a lot of discipline in the industry.
For somebody to continue in this business, they should follow, sir. 1 or 2, I will go and get off from the business. Maybe they may not complain, but somebody who wanted to continue, whether it's a small or a grow. If not, the grow also for me, one project after, I wanted to consistently be with that. They need this discipline, they have to comply with it.
Is there any solvency benchmark to be a promoter? No.
There is no solvency, but however, when they upload the financial statements on the website, as a buyer you can go and see. They have a debt of 1 crore, 100 crore rupees, capital of 1 crore rupees. Still then you think, should I do it?
No, does the authority look at this?
Authority look at what is the source of funds. Karnataka and Gujarat are looking at, give me a source of funds. What is the source of funds? Some balance sheet says only 1 lakh capital, 1 lakh rupees advance towards the landowner, but you are applying for 100 crore project. And builders say that I sell it and collect the money. If you don't sell it, what will happen? You may sell 10 apartments. After that, you are unable to sell. What will happen to these 10 customers? Now started looking at that. What is your ability to complete? Number one. Second, this industry has a habit of like spending from sister concern, brother concern, somebody else spend on him. They want it like they don't want to legalize something which is not legal. Project is completed. Look at the books of accounts. There is no money, there is no transaction. You would have been paid everything in cash. Or your sister concern has been paid to book the expenses. So authority started looking, because Karnataka authority is a retired IRS officers. Last time we had IRS, this time also we have IRS. They understand the business, they understand the number, they understand the financial aspects. So that's how it works in terms of when authority is also like a finance background member or the legal background member, or in Karnataka we have a police background member. Okay. So imagine that what type of questions, what type of experience that can be bring forth for this industry itself.
Great.
Thank you very much, Vinay Tyagarajan and E. Shohei Ahmed sir, for the wonderful and interactive session. Almost 3 hours from 2:15 to 5:15, both were standing and handling the session. A big round of applause for both of them. I now request Ila Murugu to come forward and present a memento to both the speakers.
So in fact, this is the first session I am attending on RERA. It was quite informative.
Yeah.
And by making the session interactive, we should say all of us found it quite lively.
Yes.
I am saying this on behalf of each and everyone.
Thank you, sir. Thank you for
Thank you very much, sir. Sunil sir also. Thank you one and all for your valuable time and presence. And we have come to the conclusion of today's program. We will wind up today's one-day seminar with the national anthem. Let us all raise the national anthem.
जन गण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल गंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगल दायक जय हे